This pen going slow, isn't it? I have having internet issues. Check 1 2, mic check 1 check. Nice. I used the Doom. So terrible, so vicious. Not nice. Not nice, Captain. We call that gallows humor. People like gallows humor. Not nice humor. See, if you look at gallows humor, it can actually get really filthy. All right. Check 1 2, mic check, check, check. All right, we got some data coming out. 9:27, 3 minutes till the open. We got like a data-filled 3 days. My fucking back is killing me. I am not 20 years old anymore. All right, what do we got going on here? Turn that off. Turn off the shit posting. Turn on general chat in the Discord. I should probably, we'll spend some time on Tesla this morning because I'm guessing that we'll talk about that this morning. Are y'all out there right now? Good morning. How are y'all doing? We've got at 9:45. I think we've got PMI coming out. We're a little weak right now this morning on more than two bad reports. We had basically started with Netflix. It started before that though, right? We were already discussing this. Matter of fact, I looked last night at like briefs from early July. Like 7th, 8th, 9th, stuff like that. And even prior to that, we were putting out briefs. Winky, I think, and David AMS and I both had like a top in the market, I think. I think I picked the 17th. I think Winky picked, don't hold me to this, 15th or 19th, and David picked the 19th or 15th. It's like 15th, 17th, 19th. We know the top came in on the 17th. And matter of fact, I remember on the 16th, people saying, fuck your top on the 17th or 15th or 19th or whatever. And sure enough, it was a top, right? Uncle JBJ capitalized on that. Some of you did hedge the market appropriately.
And the market on open imbalance.
So we knew that was coming, right? But there was other data coming out at that time about deleveraging of Mag 7. Retailers deciding to stay in Mag 7. Now, you had a decision, right? We talked about this in briefs. Either put a hedge on the market, or if you're in Mag 7 low enough and feel like you can weather any storm, you might not have to hedge. Like some people's buy-ins here are like October of 2022 lows, December 2022 lows as well. So your buy-in might be way different than other people's buy-in. And I think Winky actually said he wasn't hedging. He was just going to weather it. As a matter of fact, I'm still in SPY right now. I deleveraged Tesla last night. Thankfully so this morning because we're down. But even though I lost a little bit last night, it's still a win. I thought I bought it. Here, we'll look at Tesla here in just a minute. Hold on, we're opening right now. Go to the main screen. We'll talk about Tesla here in a minute.
To the sell side, Mag 7 stocks, 5 million to the buy side as well.
So we've got PMI coming up. It's a couple things here. Number one, this Friday or Monday, I think it's Friday or Monday. Let me take a peek. Friday or Monday. Don't hold me to this. But I believe it's on Friday, the 26th or July or August 1st. It's one of those 2 dates. I'll look at it again closer today. There's a monthly long for a theta trade for the end of August, like a cleanup on, I believe, the 28th. It could be the 31st, but I think the 28th is the last trading day. So that's coming. That's drawing near. We're getting close to that trade. If I execute that trade, I'll let you know in advance. Of course, it's going to depend upon market conditions if you're going to put that trade on with size. Now, this morning, we've got some issues here, right? You've got retailers theoretically that say I can weather any storm, right? My buy-ins are solo. I'm good to go. I'm going to hedge, or I might not hedge. Now, you have because of the deleveraging, no matter what the reports are, you're noticing that we're selling, right? So you sell Netflix, you sell Google, you sell Tesla. You sell some other tickers out there since then. Visa was yesterday as well. Now, there's a bunch to look at in that. We've discussed this already. Some tickers out there are way past their pumpkin of coming back in the end of the year for the late cycle bull run. You'd see it collapsing down. We've already discussed this, right? Some tech looks like it has the ability to continue to run. Some tech does not look like it has the ability to continue to run based upon monthly and weekly, monthly, and quarterly, basically monthly and quarterly velocities that have already peaked out. But some tech has not peaked out. Tesla's one of them. Google's one of them. They have not peaked out yet on their upper bands of velocity. So we'll discuss Tesla at some point today. Like, is there going to be a dip by at $200, or is it going to trade $100? And both are a possibility. As a matter of fact, Tesla could trade $100 and still trade all-time highs by like Q1 of the end of this year, just because of price, or just because of the action of Tesla. Whereas Google, you wouldn't want to see it to go down that low. Google would need to have some sort of stability. Now, off the opening bell right now, we've got some news coming out here at 9:45. So just be patient here. This green box right here is the nope, not quite the prior low. A little bit sloppy here. There's the prior low right there. And this is the key here. Now, Q's was showing weakness and rejection of the daily trigger yesterday, which is a forewarning to possible correction in S&P 500 being triggered here. And right down in here is where we'll trigger more CTA selling. We had CTA selling above at the gamma flip, but we've got a major the easy way to look at this CTA selling thing is you're basically looking for the break of the daily trigger and then an unsuccessful retest, if we ever do retest that daily trigger, but a new low and rejection. Something just like that. Like Johnny on the spot to sell to the weekly trigger right about there. So you got the first test, and then you have the failure to hold, a new low, rejection, and we start blasting down to the downside. And it can get pretty ugly. Now, are we there yet right now where we're doing that? No. Is there any confirmation of that happening? No. There is definitely the signs, right? We're adding 1 + 1 = 2, and 2 + 2 = 4, and 4 + 4 = 8, and all of those kind of things. So we're a little weak right here, awaiting this news. You're also going to notice that your options chain is going to have a lot of horse trading going on at the moment. So you should have your options chain open and just taking a peek inside of it and seeing how dealers are reacting at this moment before this news gets dropped here at in the next 10 minutes. So I'm just going to check. I'm going to turn on the news squawker again, make sure we're ready to rock for this information. If you're a bull, you want a +50. You want like more than +50.
Eastern time. Do expect the Bank of Canada rate decision Forecast for a 25 basis point cut to 4.5% from
Your PMI numbers,
With this,
you
we
want
also get
like
the Bank of
plus
Canada rate
52,
statement as
53,
well.
something like that.
Alongside this, we get the release of the US S&P PMI data. This is the July prelim data here. Manufacturing PMI forecast 51.6.
Keep your eyes down here. Watch this very closely here. I'm always trying to take a peek at
the services
these
PMI
algorithms. What are they doing down here? You know, like, do they get the new low or not? They're like little gremlins, right? They work on a finite, even though they say they have AI and all that bullshit. They still work. They need to work within walls and rules. So keep your eyes very focused on what this low is right now. How does it actually get? They only need a tick, like literally 1 penny, which they haven't received yet. So. So you want to pay attention to that, see if they get the new low or not. If they don't, if they fail to get that new low, it's bullshit. Oh, they just got it. That's bad. I don't like seeing that. That is not bueno. That's like 4 plus 4 equals 8. 8 plus 8 equals 16. It's quite bearish. Not for the moment, but it's bearish in general. So not a good look. Not a good look at all for SPOOs right now. Let me see if I take a pic. I might still want to buy some calls here, even though we got the low tick. Hold on. Hold on. Wait for me there, Spoos. All right. So anyways, we got this news coming out right now. That's not a good look. That low tick right there does not spell goodness for the stock market. It's not what I want to see. I wanted to see that low hold. So I'm not happy with that at all. Don't like it. Don't like seeing it. It's implying more lows to come. Let's take a look at the daily. That's 1 week. Take a look at the pivot points for right now. The daily pivot points, S45 is right here, at least on a daily basis. Just to note that weekly expectations are down at the weekly trigger, so be conscious of that. Oh, wait a minute here. Something's going on. Hold on. Make sure I got this right. Just a quick second here. 1 minute time frame. I want it one day. What's going on here? What's this wonkiness? One quick second here. Oh, that's not right, is it? Got that wrong. It's a pretty big move right there. S4 546 86 544.72. So we're looking at some pretty big range expansion here. An expectation of range expansion.
So letting US stocks extend forward, the S&P down 0.5% now.
Intraday S4 S5. Oh,
And
no,
so
no,
next
no,
up
no,
in
no,
10
stop.
minutes' time, Look out for the US S&P Global
Stop.
Manufacturing Services and Composite PMI data for July. Manufacturing expected 51.7, up from the prior 51.6, and services expected at 55, down from prior 55.3. While the composite was previously at 54.8. Alongside the
So
data,
in
we'll
just
also
less than
get the
5
Bank
minutes
of
time now
Canada
at
rate decision.
9:45
Do you
a.m.
know the
Eastern
BOC
time,
rate decision,
we see the
monetary
release of
policy
the Bank of
report,
Canada
and
rate
Governor Macklem's
decision.
opening statement
Forecast.
will be released at the same time. And there will be press conference with Governor Macklem and Senior Deputy Governor Rogers at 3:30 London time or 10:30 Eastern. So in terms of the rate decision itself, rates are expected to be cut by 25 basis points, taking its policy rate to 4.5%.
Yeah, we're underneath S3 right now.
Cuts from the
And then
BOC.
we've got
However,
this
not
is
quite
S4 and
certainty.
5
Some
right here.
analysts, 8 out of 30 surveyed by Reuters are looking.
Watch out for that swing low down there on an intraday basis for two
for money markets
deviation downside move on an intraday basis for the fucking like 9:30 this morning. We're already on a
And during the statement, press conference will be used to gauge appetite.
single deviation down for the day.
Year-end, and money markets are fully pricing in at least 2 rate cuts this year, which includes July, with a circa 60% probability of a third, which will take rates to about 4%. Then the Reuters survey saw a slim majority, about 16 out of 30, and forecast 2 more rate cuts after July, taking the policy rate to 4%, although 10 survey do expect rates to end the year at 4.25%, while 4 expect rates to end the year at 3.75%. Do you know recent data has been on the soft side out of Canada, the unemployment rate rising and inflation falling within the BOC's target range, which has bolstered calls for cuts at this meeting. Do you know Macklem has not spoken since recent key data points, therefore his views on data developments will be of note. In terms of reaction, do you know dollar CAD currently trading around about 137.87. Also do have 138 to the upside, and above that, year-to-date high of 138.46 is in focus.
Three minutes left until we get that data. Note to you, if you are a bull out there, a buyer, this is for everybody. If you're in the Discord, wherever you are, I saw this morning, who was it? Who wrote this morning? Schrodinger made a point this morning. He said, not buying a dip until we're above the hourly trigger. I am with agreement with him. Don't be following me on trades down here with the danger that's below. You got no business more than likely. If I'm trading $2,000, it's like $2,000 of $1 million. So, your risk and my risk tolerances are a lot different. You don't take the same trades as me. I already know that for a fact. So your wins may be different than mine. Above the hourly trigger, always with a successful back test for safety, and then even more so above the daily trigger. Daily trigger should always be price, hourly, daily trigger, and then weekly trigger, that kind of stuff. Hurt my fucking back yesterday. I felt it just now, like the past hour, getting back spasms. I need to lie down on a concrete floor or something.
1 minute remaining now. I'll be leading with the Bank of Canada rate decision, followed by the S&P PMI data for the US.
I'll have the PMI data for you if he starts blabbing. That's what you need to worry about, by the way. PMI. You're in the USA. You think about PMI.
Ten seconds. Cut 25 basis point cut, 25 basis point cut to 4.5% as expected. S&P manufacturing PMI for the US 49.5. That's lower than forecast 51.6. For services at 56, higher than forecast.
Well, that's good.
54.9. The composite PMI at 55, 55.
That's good.
Final
5
forecast
minutes
at
now to get a
54
BOC rate
spot
decision.
two.
Manufacturing's okay. Services is
The
excellent.
order I will do it. We'll lead with the
Or
rate
excellent-ish.
decision,
So
then go
looking
through
at
We're
the
above
Canada
50, which
rate
is good.
Now
data
they
from
note
the
that
US,
ongoing
go
excess
through the rest
supplies,
of the
lowering
BOC release.
inflation.
Hold on a second. Here, mute some of this stuff here for you.
Pressures.
U.S. S&P Services PMI flash actual 56. Forecast was 54.9. The previous was 55.3. That's good. U.S. S&P manufacturing PMI flash actual was 49.5. The forecast was 51.6, and the previous was 51.6. That's bad. It's a kind of a mixed bag here. Be careful on this data. The manufacturing PMI was not good. Services was good. Sorry, I gotta say some stuff in the Discord. Mixed PMI, not good. If you don't know. I guess if I was to give it like a bond rating, it would be a C at best. C minus, maybe. Tesla's getting drilled. Let's see if we can go back to Tesla here for a minute. So I got good and bad. I got some good and bad news. Or not bad and good. I gotta go look and see what actually. Here's Tesla right here, to the bottom. Now we got to talk about Tesla. Here, we'll talk about it right now. Let's go to bottom right hand screen. I don't cover Tesla as much as I used to. I only cover Tesla now when I enter and exit positions. If you remember the Discord, you know that I exited last night. My Tesla longs. Now, Tesla. Originally I had a buy-in down here at like 143. And then I bought back in somewhere down in here. Like 174 or something like that. Now, I got good news and bad news. On the bad news side of things, I didn't take the or not there. Sorry, I didn't take the. I wanted 278. Let me draw this in.
Just 1 minute now.
So I had a high target of 280.
25 basis points to 4.5%. Was looking out for the US S&P Global Flash PMI data for July. Manufacturing expected 51.7.
And I figured they'd sell before we hit 280. We got pretty close. People were asking me, "Are you going to sell?"
PMI data.
And I was like, "Fuck you, no."
Providing all hits in a time.
A matter of fact, I got yelled at in the stream, telling me to sell this. I mean, the whole stream, like literally the entire chat said, "Sell this. Market's going to crash." I didn't sell. We came back up. Another opportunity to get out was given, right? You want to get out, right? You can exit now if you want to. You're always given an opportunity to exit. Not always, but like 80% of the time, 75% of the time. If we hit top, they give you the chance to get out. I was like, nah, fuck that. I'll stay back in. I wanted to see that print up here of 280. Now, we didn't get that print yesterday. I'm not going to go into it here.
25 basis points as expected to 4 points.
I'm not going to mute all this shit down here because it doesn't mean anything.
Miss on the
at least to us. So
that's above expected. Composite rises to 55. Some mixed PMI data there.
Mix that. I'm going to close that. So Yeah, it's mixed. PMI data is mixed. So, sorry, that's a delayed stream. So the idea here being yesterday, into the close yesterday, we make this a little bit smaller here. We had the bad report, right? Came down. As a matter of fact, I called Joe Donut, and I'm like, I don't know what to do here if I stay at it or get out. We had one more squeeze up. I was like, fuck you, stops. Boom. Stops triggered, and I was out at that point. That was it. Done. Now, the question becomes a lot of what Elon said yesterday. I'm not going to go into that here this morning. I'm sure most of you already know most of it. Dan Ives had a great conversation about battery capacity, stuff like that. Some other people made some points about cash being down yesterday. And I'm going to read some quick outlook for you. It's coming from GL. The Tesla is currently between two major growth waves. The first one began with the global expansion of the Model 3Y platform, and believe the next one will be initiated by advances in autonomy and introduction of new products, including those built on our next-gen vehicle platform. In 2024, vehicle volume growth rate may be notably lower than the growth rate achieved in 2023. That's key, as teams work on the launch of the next-gen vehicle and other products. That's a bad one right there. As we work on more bullshit we haven't delivered. Have sufficient liquidity to fund our product roadmap, long-term capacity expansion plans, and other expenses. Continue to execute on innovations to reduce cost of manufacturing and operations over time. Expect hardware-related profits to be accompanied by an acceleration of AI, software, fleet-based profits. Product plans for new vehicles, including more affordable models, remain on track for the start of production in the first half of 2025. I can't hear that. I don't fuck promises from Tesla right now. Can't get a new model. Can't get a new refresh. And they got to start delivering something hard. Something to make people excited. Product plans for new vehicles, blah, blah. These vehicles will utilize aspects of the next-gen platform as well as aspects of current platforms and will be able to be produced on the same manufacturing lines as current vehicle lineup. Robotaxi product will continue to pursue a revolutionary unbox manufacturing strategy. Still no Robotaxi. Sorry, I'm angry about this. The timing of Robotaxi deployment depends on technological advancement and regulatory approval. Working vigorously on the opportunity given the outsized potential value. So, you know my take on this stuff, right? Already. Now, we're going to go back to this Tesla here. Start talking about this Tesla bullshit. They're already running it down right now. They're already slamming it down into the weekly trigger. Now, we got to talk about something here. For Tesla. Tesla, its velocity looks great for continued upside into end of year. And there was hope yesterday in guidance that, hey, we're in the middle and you should be pricing in good news for Tesla down the road. We already know we're coming to the end of a short-term debt cycle. His timing and whoever the fuck is telling Elon what to say is way fucking wrong. Tesla will be lucky if they will make it out from not going bankrupt in the end of this short-term debt cycle. In my view, they have a lot of danger ahead of them in the next 3 to 5 years that they're not aware of or they're not talking about or whatever. Maybe they do know more than I know. But anyways, they need to get their fucking stock price up as high as they possibly can. Now, under the surface, they look great. Their monthly velocity and their quarterly velocity says that they will continue to go up in the end of the year. Now, making that statement, Tesla can still easily bounce at 200 down here in their weekly, right, and go higher into the end of the year. Tesla can also trade $100 and then go up into the end of the year, maybe Q1, Q2. So I'm open to both. Now, the one thing that I will say to you here would be this. I do not like seeing Tesla go below its monthly trigger. For a brief moment is fine. Like bouncing here, or bouncing here is fine. But you start like getting underneath your weekly trigger. I'll show this to you really quick. You know, if you start breaking down below this weekly trigger here, right? Catch a new low. And it's not going to be just like that. But let's pretend. Bam, bam, right there, okay? That's your good pretend for you. And then you get this roll down of the daily trigger. And you begin to reject here, right? With a new low, and we're going to go down and trade $100. I guarantee it. I guarantee it. If we do this here, we're going to trade not only 100, we'll trade 135, 140. We'll trade 174 unless there's any kind of recovery at some point. So the door is open to go there. Is it confirmed to go there yet? No, it is not. But if it does, if this price action continues, we will be targeting that. So stay tuned. As of right now, price target to the downside, 213, 214, 215, somewhere in there, and then $200. Now, there is something else here that I want to show you on Tesla. I also want you to be paying close attention to, if you're a Tesla bull, I want you to be paying, again, close attention, which I always tell you, which is the daily velocity is starting to make higher lows. And with that shit report yesterday, you're not going to get a second piece of love on another high for Tesla, upside velo and sustained velo. You're going to start closing lower lows on that velo, and we're going to make a trip underneath. So, if you're looking for a dip buy on Tesla in particular, if you're looking for a dip buy on Tesla, you at this point are fucking waiting for a series of higher lows on daily velocity. That's what you're looking for. I don't give a fuck about relief rallies for 10 points or 5 points. When I buy Tesla, I fucking want 100 points. And the past 2 weeks are a prime reason for that. When I didn't take the money and run at 270, yesterday I was given an opportunity to get out. I lost yesterday on Tesla, but I won still in profit. Like I still had you're talking about me bitching about 10% profit or something, losing 10% of the profit I was already in. So I'm still a happy guy-ish, but you don't want to be, I want to warn you of something out there. If you're a Tesla bull, I already fucking know that Tesla gang spews pure diarrhea. Listen to me closely here, okay? I am a Tesla bull. I've been one for a long fucking time. Do not listen to these fucking Tesla gang out there telling you when to buy a dip. I want you to wait until velocity gets to the downside to enter a long trade, your next long trade on Tesla. Don't drink the Kool-Aid. Don't listen to them out there telling you, spitting facts to you and knowing all the data and all the other stupid shit that they say. Wait until daily velo goes to the downside, hits a bottom, and starts making higher lows. That's your entry signal for significant Tesla gains. Even if you wait a month, even if you're sitting there on your dick, sitting there fucking slamming your dick up your ass and sitting on a fucking chair, that's what you do. And when you enter that trade down there, you might be waiting a month or two, but I assure you, you'll be better off and happier if you wait for that signal, if you wait for that velo to get underneath and start to turn back up. And that you make major moves when we do this on Tesla. You're talking about hitting these lows down here, wham, coming back up, and then getting huge prints like this. Whoop, right up, way up here. And we're probably in one of those cycles right now is my point. So if we're topping out on daily velocity here, it would not shock me at all to see some kind of a move way back down here for a move higher. Okay, so you're going to hear these Tesla gangers like, buy the dip, buy the dip, buy the dip, and you're going to be fucking getting torched the whole way down. Bottom of Velo, buy the dip. On daily velocity. So I don't know if that's sitting right here. I don't know if that's going to make the turn over here. I don't know if we're going to hit the bottom of daily velocity down here and start turning up. But I'm looking for that bottom, like minus 25, minus 50, and potentially even minus 100 on the daily velocity. So if you see daily velocity hit minus 50, and then you start to see minus 40, minus 30, minus 25, yeah, we'll test the waters there. If it gets minus 50, and then you see more lows like minus 60, minus 70, minus 100, and then only then do you begin to see pullbacks to minus 90, minus 80, minus 70. Do we begin to discuss taking a trip? Do we begin to discuss taking a trip for another long on Tesla? I warn you of this. I try to tell you this stuff before it happens, and you guys always come back to me weeks, months later, and you're like, what about this cap, and what about that cap? And I'm like, we already fucking talked about it. So this is one of these discussions. If there is a serious, not shit posting, not dicking around, not any of that kind of nonsense, this is your one and only time I'm going to tell you. If you're a Tesla bull, no, I don't care if you have a relief rally. No, I don't care if you think we're going to break out. I don't give a fuck. I want to see that daily velocity get down into negative and begin to turn back to the upside to take that major trip. If you want to trade all this bullshit in here, have at it. But I'm here for the fucking 100-point rips, 200-point rips, 300-point rips. I want a max profit. I'm a mid-maxer here when it comes to this kind of shit, especially Tesla, like Tesla, SPY, stuff like that. I'm trying to min-max that stuff. So be very careful here listening to what people are saying out there in social media. You can be Tesla gang. I got no hate towards Tesla gang. I don't dislike Tesla gang, but whatever they're saying when it comes to the price of the stonk, they have no idea what they're talking about. Zero. Okay? That's truth. They have zero idea. You can ask them about anything else. They have zero idea about the price of Tesla. So be patient with Tesla. Let the velocity go to the downside. Let it cool off. We'll monitor. And by the way, if you're a supporter, you have access to Tesla twice a day so that you can check that daily velocity. So if you're Tesla bull, Tesla gang, you have access to those Velos numbers. If you begin to see us bottom out on daily velocity, you start to see the improvement, higher lows in daily velocity, we will revisit another long trade on Tesla. Binky, please mark this show at this time right now, and so we can make a clip of this with me swearing and all, and post this to YouTube and Twitch, please, and to TikTok or whatever's out there, so that I'm on record for this stuff, because people always come back and say you didn't say this and you didn't say that and all that other crap. And I'll be honest with you, this ticker in particular, I do not trade it on, hey, we broke above the hourly trigger, maybe we're going to break out here and start running and gunning, stuff like that. I want to see that daily velo. It's a fucking rule. Go back and look at the history of Tesla. When it's on negative velocity, you're going to win 28 out of 30 times, 29 out of 30 times if you wait for that to happen. Slightly better than 9 out of 10 times, you're going to be a winning trader. Even if you have to wait, you get down there and you buy yourself a spread, whatever the fuck it is, buy the underlying, sell a bunch of puts, and you're going to be a winner. Like, you're going to be a winner. You're going to be a millionaire over it. So just be patient. It sucks because I wanted to get that. I wanted that fucking 278, man. I wanted that big fat fucking print. Greed. Anyways, Tesla bleeding out right now, trading down a trading down to the monthly trigger right now. Don't ever like rejection below the monthly trigger. That signifies a bear market for any ticker. So we are tapping right now the monthly trigger. I do not want to see price go under and begin rejecting. That is a bear market for Tesla. So Tesla just blasted down to test whether it's going to enter a bear market or not. One fucking day. Didn't even take a day. I'm so glad I'm out. 212. God damn. I feel so bad. I know that people got fucked this morning. Well, I bet you there were still people holding last night. I got a friend that held last night, too. I got a very close friend that held last night. I probably got to call him. All right. Yeah. Thank you, Pinky. I appreciate that. I see your post inside the Discord, man. I need that out there because we have different intraday trades, weekly trades, monthly trades. But Tesla, fairly fucking simple. Fairly simple. Wait until that velo cools off a little bit on the daily. If you don't believe me, just go. If you're a supporter and you don't believe me, if you're a bear, if you're Tesla Q, and you don't believe me, go to the manipulatable charts on the website. Go to Tesla, put it on, set it to a daily time frame, and I want you to look down on daily velocity. Go all the way back to when Tesla was worthless, and it'll be the same pattern all the way since the beginning. Generally speaking, like 90 out of 30 times, 28 times it's the right thing to do. Now, you can win intraday and stuff like that, but I'm not about that with Tesla. Tesla and me are like you enter when you should enter, you wait for major lows, you buy it, and you're a happy investor. Generally speaking, a happy investor. A lot of Tesla investors, Tesla gang and Tesla investors are not happy. They'll tell you publicly they are, but they're not. They fucking buy tops all day long. They get trapped. They drink the Kool-Aid. They mortgage their house. I shit you not. I've seen it. I've literally had people send me their remortgaged house paperwork to buy tops. You want to be the happy Tesla bull. Buy bottoms, sell tops, sell options, tell everyone else, yeah, keep buying. You want to be that guy. You don't want to be the guy buying tops. Oh, boy. Tesla gang fucking hates me. Hated by Tesla gang and Tesla Q. Can't have friends when you tell the fucking truth, can you? Agua. So I was so pissed last night because I lost a bunch of money in, I lost some profit in Tesla and I lost a bunch of money on SPY zero dates. And so I'm like, fuck, god damn it, I'm going to cut a goddamn tree down. I'm all mad. I called Joe Donut. Like, Joe Donut and I are like pretty close with Tesla and shit. And I'm like, fuck, goddamn fucking Elon Musk bought this. Beep, 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 beep. Yeah, I'm slowly getting on board. You know, I like Elon having a hand in Tesla because he still has cool shit that he does. You need that. You don't want like a square, still like fully a square CEO. But they need a fucking square CEO with Elon Musk like having some kind of input. Like I'm the idea guy over here, finger fucking painting while I'm dicking around on social media. God, I'm so fucking frustrated with Tesla. That report yesterday pissed me off. That guidance pissed me off. I shouldn't say this, but they should have pumped that fucking guidance because bad news is coming for the whole market, in my view. Like, there ain't much time left. You don't go out there cutting your fucking stock price down here This shit's gonna trade goddamn $10 in like 2 years if this happens. I guess we are gonna get a generational buy opportunity on Tesla. I just don't know that he's gonna be the owner at that point if that happens. But whatever. That's what we're gonna do. Fuck it, let's do it. So here is your this is your intraday pivot points. This is S4 and S5, your STX, RTX for sell the news and buy the news. A note on these pivot points: when we do break down into these two standard deviation downside moves on an intraday basis, we have a tendency to be able to do them again on the downside. Upside, nope. Usually take the money and run. Downside, though, we can do this shit all over again tomorrow. Here's your S4, S5. This is a zone, not a target. Anytime you get into S4, S5s on an intraday pivot basis, it's just a zone. We can easily just start turning around here. Though I've got some targets down below here, 542.90 and 542.41 for more downside action to the downside. So there's Tesla. Now, Tesla's velocity looks great. Where I'm not a fan of like Avgo, I'm like, oh, you just short every high on that fucking ticker. Tesla's got it some like validity to buy a dip on it. Google has some validity to buy the dip on it as well. Google's velocity versus some other tickers out there looks great. Looks absolutely stunning. So keep Google in the back of your mind. Continue to believe in Tesla, but look for the velocity turn on Tesla. Anyone out there that's telling you it's going to bounce off $200, if they're saying that right now, they're out of their fucking mind. You want velocity, a bottom on velocity before you ever even start considering, generally speaking, before you start considering taking a new long in Tesla. I don't care what price is. I don't give a fuck if it's $200, $150, $215, $170, $50. I don't care what the price is. Just looking for that. Just looking for that daily velocity turning up. You start seeing that shit turning up, time to start entering or considering entering Tesla. Thank fucking God I closed those goddamn calls. Made 2 pennies. I got that going for me this morning. Price target down below, 544.72 to the downside on SPOOs. All right, so there's Tesla. Let's look at SPX. SPX getting raked over the coals. First target down below on SPOOs. SPX, make a market home. 54.50. 54.50 on SPX. If you want me to give you guys next, you guys want snazzy nazzy? You guys want some snazzy nazzy targets? I can give you guys that too. I'm gonna try to incorporate that. I'm gonna ask you guys a question out there, specifically the Discord. I want to ask you guys a question. Would it help? Would it help pro traders? On my nightly brief, I could do a pro trader nightly brief supplement, I think, where I could give you guys like NASDAQ gamma, and I could also give you like ES and NQ expectations, 1 hour expectations on futures. Would that help pro traders out? I don't know if that would or wouldn't. I know David does a ton of work for futures traders. I don't know if you guys need it or not. If you don't, I won't do it. But if you want it, I could do like I could do an additional like NDX gamma and some projections for, I don't know. We could start with ES and NQ, and I could possibly do YT and YM as well if you want. Okay, you guys want it? Okay. I'm bear with me on that. I have to work that into the schedule. I'll have to slowly add it, but what I'll do is I'll put out a market brief for supporters every night, and then I'll do a supplement for pro traders, like a page for pro traders for that stuff for futures trading. Okay, it's just gonna take me a minute to work it in. Maybe you might just get ES and NQ every night, and then I'll start building into. I got to put it in the routine. Let me do some NDX shit here for you. Give me just a second. So just a note, this is SPX Gamma. You have a target down below for SPX. 5450. NDX, baby. Woo! Haven't looked at. I used to love trading Qs. Used to fucking love trading Qs with this stuff. 19311 is the S5 for intraday on NDX. Oh, Jesus Christ. Hold on a second here. Give me one quick second. Jesus Christ. Let me draw a little box in here. My boy NDX getting murdered out there. Another note to you as well here is we've been like 260 days or something without a 2% down move in SPY. 2% down move, have not had one. Which I think is fucking hilarious, by the way. We're down 1.5% officially on SPY today. So if we can nail, I don't know what the, let me see what that is. 542.46. Check and see what 542.40. I'm not going to, should I measure it? I'll measure it. Hold on. SPY down 1.44%. You want a quick second here? Right about there. So just note that a 2% down move on SPY today is 542.38. 542, roughly a penny or two. 542.38. So just keep an eye on this just for the numbers. Any of you number guys out there, 2% move down is right where this green box is right here. So if you had like CaptainJimJames used call lot, right down there for today. Did I do something wonky in here? There we go. That's intraday S4, S5. This is also a 2% down move right here. We have not had one in 300, literally, not almost, no, is it like 260 days or something like that? Let's also look at the weekly. Let's look at the weekly. And this is S1 right on that green bar for weekly expectations. S1 right down here. That's where I want right here. I'm going to buy that one right there. If I can. Slide that over there. Bring that right there for you. Right down in there. Okay, now back to NASDAQ really quick. Now, sorry for the tangent. Back to NASDAQ. Let's put in some what do we got here? Let's get some nodes going here. 19,300 on NASDAQ. Chef's kiss right there. That's the that looks to me like, yep, that's the next real support. And then in truth, right? Let's get down here and look at this. Bottom right screen. This is NDX. So for NDX, your next support is 19,050. Yeah, roughly right there. And 1900. I don't trade NDX like I used to. I should get back into it again. I know you guys love it. I used to love trading. I used to love trading NASDAQ and using NDX as the because it goes so fucking slow. NASDAQ takes away a lot of the fear, or NDX does. So we'll make this one yellow. That's your S4 and S5 and intraday basis. And then we're going to make this one the real buy zone down there. 19,050 and 19. That's your next node down there. This looks like the, let me just make sure I got this right. 19,010. Is that what that is? 1900. That's your next put wall. And then 1850 is your next one. So 1850 would be your next node, which is right here. Right where your weekly trigger is, right down there, weekly trigger. So large node right here, large node right here. Do you guys want these nodes? Let me just post these inside the Discord really quick. Hold on here. I mean, this is like crayon drawing, right? This isn't too hard to look at. No, no, no. So I just posted that significant significant put gamma on NDX. Posted that in the Discord for you. Keep it with crayons. Keep it simplified for you out there. Let's check velocity really quick. Pretty close to a bottom. Not quite there, but close. I think we get that 2% day if I had to guess. Almost at the bottom of hourly velo on a 30-minute basis. Targeting this CJJ use call out down here. You might get something like this, then like that, then like this, something like this. Yeah, and you're catching a bounce here. Like NDX, you're coming in. You're almost there. You're pretty fucking close. You're pretty close to a turnaround in NDX. And 19550, look for that for a turnaround to the downside if we're gonna break through and things get ugly. NDX could turn around before SPX too. I don't know if you know that out there. So like NDX can turn around, SPX continue down and to the side before it turns up. So be aware of that as well out there. Look at that yellow bar on Q's getting tagged. Almost perfect. 470 with a tag on Q's. IWM holding up just fine down here. IWM holding itself up. If you're looking for a pickup on small caps, it's starting to get bought right now. DIA coming into its daily trigger. Down below, looking for a dip buy. So IWM looks great. Q's looking like it wants to turn around here. SPY, unsure yet if it's going to consolidate before it turns around. HYG coming into its hourly trigger now for a turnaround to the upside. VIX 9-day breaking above its monthly trigger, trading 1682 with a target to the upside of $21 for VIX 9-day. TNX looks like it wants to begin to bleed to the downside. That means the market's looking a little bit more bullish. Tesla trying to hold its pants up on the monthly trigger and not go negative. NVDA bouncing all the way down to its known support down below here. Tagging a low of 117.38, looking for a relief rally of some kind. Netflix being bought this morning. Note that Netflix was pretty much green this morning. There's a rotation going on into tickers that are getting Mag 7 that's getting murdered. They had a quick low down below on their weekly trigger, and now they're being bought. So Netflix looks sexy. The only thing I would say to you on this Netflix trade is be very careful of a trap for more downside to come. I'd be taking the money and running up here at right where we are, actually, 650. The hell is that? The hell is that woo thing? I don't know what the fuck that woo thing was. The daily trigger on Netflix has a little bit of a trap within it, but just be aware of it. It needs to break out above 656.83. Amazon holding itself up just fine this morning. KRE trying to take one more swing at that high above at $59. Disney still bleeding here. We have two targets to the downside. One of $78.33 and also $73. Also note that Disney had one of its major investors say that he sold out of his complete position. A longtime Disney supporter and investor got all stinky, and there was an article about it, I believe, yesterday. TLT keeps trying to break out, has been unsuccessful. Breaking out from this downtrend here. Unsuccessful yesterday as well. Still getting taken to the woodshed on TLT. Google holding up this morning. We talked about how Tesla has the ability to stretch to the downside, where we do want to see Google hold itself up. And it is this morning holding itself up. Came into a low at 173.39. It looks like it's trying to fight its way back to the upside. XLF getting a little murder bot action going in here. We're hoping for KRE to get a little bump still today. XLF looking for a dip to buy down below at $42. NDX still parked on 19,300 right now. No trade for me at the moment. I want my used car lot down here if I can get it. I want that one last move to the downside if I can get it. I will also draw your attention to June 5th. June 17th. Did I get that right? July 17th, 1990. Go find out that on SPX for yourself. Go find it on NDX. Take a look at July 17th, 1990. For about a week. Don't get caught in that if that happens. Yo, what was that police siren thing? I don't know what the fuck that came from. Anybody have any idea what that police siren thing was? Did you guys hear that, or was it just me? That's it. Yeah, I'm not buying this. I want nothing to do with it. Yeah, where did you guys all heard, you guys did hear it. I have no idea where that came from. No idea. I got nothing on here in the background.
Just under a minute now on that weekly EIA data, the headline crew that's expected to post a draw at 1.5.
I have no idea where that fucking. I know Discord has voice or sound stuff. Oh, that might be right, Winky. That's possible, brother. Get arrested.
10 seconds.
You were driving by the police station when it went off? Did you have your drop top down? Fucking pull up next to some people and you got me blaring in the background screaming and yelling and cursing? Fuck, cock, motherfucker, cock this, blah, blah, blah.
Distillate draw 2.753.
Old school Howard Stern.
572. Refining negative 2.1%. Cushing draw 1.70.
So I was driving through Manhattan and I turned cap on, going to my cocaine lunch with my buddies. pulled up next to a cop, and he had an alarm siren going off.
And maintained at 13.3 million. So the headline draw that comes in at 3.741 million. It's a larger draw than the expected 1.583. They're slightly shy of the private 3.9. Did also see draws across all the components as well. So that does chime what we did see from the private release last night.
Too fucking funny.
And wake up the data have seen upside of around 30 cents or so across WTI and Brent.
Stop pushing buttons. Yeah, it's probably a Tesla gang pulling me over. Pull over, buddy. You're one of them fake bulls, aren't you? I'm like, no. I am a real fucking bull. I make Tesla gang. Get fucked. Then they start drinking the Kool-Aid and they're like, yeah, fuck that CaptainJimJames character. Just buy everything. Oh. What's going on with NDX right now? Shit's going to turn around or what? We're triggering CTA selling right now, by the way. I don't know if you know that. We're actually breaking through on vol control, too. It's going to get nasty around here. Oh, yeah, more blood. Oh, I missed that. Thanks for saying something, Winky. Okay, so we're going to circle back around to another conversation we've been having, right? We try to talk about shit before it happens. So we've been discussing a trade for late July. We've been talking about a trade for late July, where this is like a theta trade. It likely may not look productive, so there's some warnings in this trade. We're looking for a trade into a minimum, a target, a minimum of July 28th, July 31st. Now, I don't know if I was going to take that trade, you can either take it like a theta trade, where it swoops up and prints last day. You could put some extra time on that theta trade, like a week or two or a month, so it swoops up at the last minute. I'm not going to expect it to look pretty while waiting for that print either. So if you can build theta burn into the money making side of that trade, it's good. The other aspect to this trade is that Winky Face has said that he thinks that DJIA is the best expressor of this trade. One of their best months of the year as an index is the month of July. If I'm getting any of this wrong, Winky, let me know. Now, there's some, as usual, everybody has their date and their price that they want to get in on that trade. Market conditions matter on that trade. So let's take a quick peek right now at Dow Jones and now I've got that date as buying this Friday, I believe, or the 1st. I could be wrong in that, but I think I'll check here in a minute. But I believe it's this Friday or the 1st. Pick your poison. But market conditions, market price can matter. So we're going to take a look at the Dow Jones Industrial Average. Let's take a quick peek there. God, I swear to fucking God, on these days, I just want to turn the goddamn stream off. I don't want I know we get monitored. I know that we're monitored. I know for a fact we are. And I just want to turn it off and I want to fucking get beepers and talk to all of you. so they don't know what the fuck retail's doing. I fucking hate AI. Fucking, oh, God. I kid you not. I don't even want to do this on public. I just want to take the stream private. I want 2 streams. I want like a public stream, and then I want like a separate set of cameras and like mute the microphone. Be like, hold on a second here. Okay, we're back with you guys here for a minute, and then back with you guys over here for a minute. Just make that fucking stream private. Shit, you not. Like, what's retail doing right now? We got to monitor all the live streams out there. We're monitoring all of that. We're consuming everything from stock twits, and we're consuming everything. We're like the pig. We're sucking up all of FinTwit. We're sucking up all of Wall Street Bets. And we're sucking up what they're saying over on YouTube land and Twitch land. And we're like, then we're like consuming it all or calculating it all together and finding out let's give them all max pain. They track supposedly. Now I've been told otherwise, but I have very smart people that are telling me they track Discord these days too. They do watch Discords. Now I've had other people tell me that's not the case. That they can't, but all they got to do is pay a membership. Like what's membership in like 100 Discords? Start scraping all of them. For market research, it's a pittance. What up, Vol Signals? How you doing, brother? Good to see you, my man. We got to have you on the show, brother. Hey, you want to hop on right now? I just saw that Vol Signals is here. Hey, you want to say hello? You want me to? We should have probably met before, but I wouldn't throw you. It'd be all softballs, just like, hey, how's it going? Let's talk baseball or something. You want to chat, man? I don't know if you can hear me or not. Hey, Vol Signals, if you can hear me out there, shoot me a DM really quick. Let me see if I can possibly have you on the show this morning if you want. If you want to do some chatting. Easy, dude. We can do a Google Meet. I'll send you an invitation right through your Gmail account. And you can do voice and video. It's your choice. Easy. Yeah, you want to do it? It'll be fun, dude. All right, I'll give me like 10 minutes. And what I'll do is say on the stream, I'll say check your email. No, I'll send you a Google Meet invitation to your Twitter DM. It'll open up on your Google. It's really easy, dude. Super simple. No, dude. They've already announced it. I've got the white paper on it. I can show it to you. I've got the white paper from the Fed doing it. I got the white paper from JPM doing it. Like, they've come out public that they're doing it. They're honest about it. They're full on or honest about it. They've both released white papers on this. You know what's even more fucked up? They literally look for verbiage used by a professional and verbiage used by retail, including emotes. They're actually tracking emotes, verbiage. So if you use like stonk, they know to identify you as a retailer, and they know all the archaic terms. If you're like, say you're just a bond trader or something like that, like they know exactly how to even parse who you are. I'll show it to you. I'll send it to you. Even the Fed does it. Fed does the same thing. Fed, JPM, they're all doing it right now. I kid you not, dude. I shit you not, brother. It's bizarre. They used to have this thing called Twitter Fall. I used to run it on the show, and then people were like, I don't like that thing. It was crazy. Like, before Elon cut off data scraping from Twitter, and I don't know if you guys know about Twitter Fall, you could literally type in just the key term, SPY, or your favorite ticker, and in real time you could watch sentiment changes flow like almost like a wave, like up and down, up and down. So we're going to bring on Vol Signals right now. He's a good friend of Trader Podcast. I have high respect for this guy. He is a gangster when it comes to gamma. I believe he's a market professional too. I'm not positive on that, but from my understanding from conversations with friends, we've meant to hook up already in the past, and I haven't had the time, like literally don't have the time to hook up with most of these guys out there. And he just popped into the stream, so if we can get him on the show, I would trust anything this guy says. So think about some questions that you have about gamma. If you're in the Discord, if you have any gamma, somebody go find Career Low too. He might have some questions for him. Somebody wants to ping him on Twitter. But if you're in the Discord and you have questions about the market, NASDAQ, SPX, VIX gamma, any of that kind of stuff, the regime that we're in, if we're in a short gamma daily regime, all that kind of stuff, he would be way more knowledgeable than I am on this stuff. So I would go with anything this guy says over what I say. He's a gangster. He's hella smart. So give me one quick second. I'm going to set this up for us. We'll have a quick interview here with Vol Signals. I got to do a post on FinTwitch so we can get people to come in and watch the show. If you are a moderator,
to begin picking up though,
on Twitch or YouTube, if you don't mind, if anyone has questions for Vol Signals, don't put this guy on the spot. Don't be like, we're going to throw him a curveball or we're going to try to do, like answer this fucking thing that you might not have an answer to. But if you're a moderator, if you see anybody have questions for Vol Signals, if you could possibly please write them down on a notepad at home or type them into a notepad at home and correlate them so that when it comes time to ask any questions, if you see anything that seems like it should be asked or could be asked that might help, if you could just keep track of that stuff once we get to the Q&A. Give me just a few moments here. I got to set this up. All right. Oh, what's going on, Career Low? You getting a chub? Career Low is here, baby. Maybe we can get Trader Podcast to pop in, too, for a minute. All right, give me one quick second here. Hold on, one quick second. I'm so stoked to finally meet this guy. We chatted briefly. And we did chat briefly. Well, let me see if we have... shoot. What do we got here? A trigger screen. Stock market show. Evolve. Okay, we got that one. Map. That's not showing shit, is it? Oh, that's hilarious. That's not showing anything. Trigger screen showing, right? Display capture. What is this one here? Hold on, give me a quick second here. All right, this is going to be kind of wonky here. Main screen. Sorry for going black on you guys. Black screen here. I gotta figure this out for a minute. Give me one quick second here. How do I do this? Oh, how do I do this? How do I do this? I might have to do it at the bottom right screen. I may only be able to do audio. I'm not sure here. Let's see what we got going on. We'll try to figure this out right now. All right. Give me one quick second. I meant to do this earlier this week when I did the new format, and I didn't. New meeting. Start an instant meeting. Okay, we got that. We turn some of this stuff off here. Turn that off. Turn that off. Turn that off. Turn that off. What do we got going on there? Messages. Vol Signals, what up, brother? Oh, yeah, baby. Oh, no, that's wrong. Hold up. What am I doing here? Google me. Oh, he's here. He's here. Do you want people to see and hear you in the meeting? You can turn off your microphone and camera anytime. Dude, what is this going? I'm a member here. Turn off microphone, camera. Allow microphone and camera. Continue without microphone. No, allow microphone and camera. Yeah, always allow. Why am I being asked these questions right now? Oh, hell yeah. Here we go. Add others. Okay, copy. Here we go, brother. Vol Signals, I'm going to send you a link whenever you're ready. I just sent Vol Signals a DM with an invitation. We'll see if he's able to get in here. I wonder. I hope this is all working here. Turn on microphone.
And just further from, Macklem does state there was a clear consensus to cut by 25 basis points.
What's up, brother?
Hey, what's up? Can you hear me?
I can. Let's do a quick sound check on the show. Can you just say test 1, 2, 3?
Test 1, 2, 3.
We got you loud and clear. I'm going to turn off the news squawk and the financial juice squawk here. Give me one more moment here, Vol.
Yeah, no rush.
We can hear you, by the way, just as a heads up.
Okay, cool.
I just need one more moment here.
The show audio was kind of trippy in the background.
Are you getting the feedback on your end or no?
No, it sounds good now that I've addressed it.
Let me just put a post out here. On here. Let me just check this really quick. They did. So 2 or 3 days ago, X is no longer allowing you to copy paste.
To copy paste?
Yep, I cannot. And I read about it on Twitter.
That's so bizarre.
Mm-hmm. So I'll make sure I got this correct. Okay, so Vol Signals. SPY, SPX, DX. And then second computer. Good morning, by the way, man. How you been?
Pretty good.
It's nice to actually finally meet
for a
you.
while. I've been trying to DM you forever. You never look.
Yeah, dude.
It's kind of funny.
Like on the outside, I think if I wasn't live streaming every day, Monday through Friday, I would have so much more time. And I'm getting hammered with time. I'm working like 12, 14-hour days. And I haven't found anybody that can help me in the back end. I've been interviewing people. And
So familiar.
yeah, man, like just help like setting up interviews, setting up a time where I can like meet people. Like, hey man, what's going on? Let's have a beer or something, chat, that kind of stuff.
All the tech we have is supposed to make it so easy, and it just feels way overwhelming and like nonsense half the time.
Dude, it's all like, here, come in my garden, and now once you're in my garden, it's just like this shit with CrowdStrike, right? Like once you're in the garden, if you're gonna make any changes, it's gonna implode, and you're gonna spend hours fixing.
Yeah, exactly.
Right.
At least if I implode it, I know how to fix it.
Mm-hmm. All right, so we're gonna post this right now.
Cool.
I'm gonna pin it. Pin the profile. Maybe I can hit TPC. Maybe he wants to jump in or something. Hold on here. All right, so if you're out there watching the show right now, if you are just joining us, I do want you to know that the chat is open. The chat is open on both YouTube and Twitch. You have to become a subscriber. It's free. But if you want to chat, you can. Think about some questions that you may have. This is we're going to be interviewing Vol Signals, okay? His handle on Twitter is the @VOL, capital V, then OL, capital SIGNALS. I'm going to post. Can somebody post inside the chats on Twitch, YouTube, and the Discord his handle? Check out his profile. He makes very insightful posts all over Twitter. He's very interactive. Remember when I used to have time? I used to be able to talk to people on Twitter. He is always there to answer questions. Very insightful. Knows what he's talking about Gamma. If you ever feel like you're out of, he wouldn't say this, but I will say this to you. If you ever feel like you're out of touch with your local neighborhood Gamma company or Gamma provider or whatever, this guy is very reachable, very personable, and nice guy all around. So, and he's very good friends with Podcast Trader. If you guys know him at all, he's inside of the fold with all the other guys inside the Discord with John L. and David AMS and Winky and everybody else. So, we're gonna give him the floor here, and I'll bring up any chart. And I'm just gonna here he goes right now. Vol Signals, welcome to the show.
Yeah, what's up, man? It's good to finally chat with you.
Same, brother. I can't believe we're doing our first conversation live.
I think my DM to you when you mentioned it last time was like 6 months ago. And then Pod's been in the Discord I have for the longest time. He's a great guy.
He's awesome, dude.
Kind of funny to me. But yeah, no matter what you're doing, when you're trying to build something yourself, it's like time just disappears. And
doesn't it?
Family too, right?
It's like fire after fire after fire after fire. And then it's a lot of promises broken, not intentionally either, just like I can do this for you, and then they can't do it.
Late. I have so many like free lifetime members because I just can't catch up to what I want to deliver. It's insane. It's not that I'm not trying to. I like that Kermit on the typewriter meme that never stops.
Yeah.
It's possible sometimes.
So what's your background? What do you like? Say whatever you want. Like whatever you want to say. You know, one thing I would caution you of is be careful of any too much personal information. We get rebroadcast in Europe and stuff. We broadcast roughly to 5,000 to 15,000 people. So just be careful with the personal details and all that kind of stuff. But if you want to give a brief overview of any kind of market history or what your interests are, what you do on FinTwit, that kind of stuff, give us a brief overview if you could.
Yeah, so I've had 2 jobs in my life. I spent about 4.5 hours working at Brown's Chicken. And after that, I was an index market maker for about almost 20 years. And all I've done in my entire career is SPX index gamma for the most part. So when I say SPX, it's not just SPX, the cash contract. It's SPX, SPY, ES, SPY, all that stuff. So I don't know, like I kind of said in the chat there before, like I'll take any question, but I might not know the answer, and I'm always honest when I don't know the answer. I do know equity options behave, quite a bit differently sometimes than index options, and you guys are pretty drilled in sometimes on these single names. I used to laugh all the time when I started my career. I would get asked all the time by like aunts and uncles, like, "Oh, what do you think of this stock?" I'd be like, "Dude, I have no fucking clue. Like, I have no clue about any stock out there, nothing."
My world is
Right now, there's
spoos.
so much energy. It's true, yeah. And and I spent a lot of time making a ton of mistakes, like trying to form and I guess this will kind of lead to what I'm doing now. I spent so much time losing money, even when I was a market maker, losing money trading my personal view because I still had this like insane belief that things had to be logical.
Yeah.
And then probably sometime around 2013, I had this epic, like I took 10,000 of my PA, I ran it to like 1.2 million, and I lost it all in one day. After that, I was like, fuck, what am I doing? And I had to work through it too. I started the trading floor, worked through it.
I've lost 6 figures in one trade, but not that high. Those are bad days, bro.
It was also like, it was one of those moments where like the universe scripted a movie for you. Like the ending was such a weird thing where like I had queued up the exact type of call option that I thought would hedge my entire book. And I had a thesis that like, okay, if I spend 100 grand on this call, this weekly call, because it's going to happen now, is going to be like an inflection point. It's either going to pay me or my original trade will work out. But my connection wasn't good. The trade didn't go through, and I was a cocky asshole. And I was like, you know what, fuck it, I'm probably right. Anyways, forget it. And sure enough, there was some QE announcement. The market gapped up, and my account was just eviscerated. And I checked, and the order never filled. The $1 call that I tried to buy that did 10x would have paid me out $1 million on the hedge. It was a hung order, never went through. And to make matters worse, sometimes those days are interesting because everybody kind of puts the phones down and stops trading, just kind of waits for the price action to resolve.
Say that again, will you?
Yes, sometimes when you get like these big moves, it's not actually that volatile when you're a market maker. Like at least with like voice flow, there's maybe a lot of screen noise, but voice flow, people making decisions just kind of like they have like a deer in headlights moment, or they're trying to figure out what to do. It just goes silent, and like for a long time, the market's whipping around, but nobody's really doing anything about it. And so it's like crickets on the floor when you'd expect, if you're like an outsider, that it's crazy. And I'll never forget like this absolute like perfect moment at the end of this whole sequence where it was dead quiet, and the broker I stood next to, who was incredibly like, had this bellowing voice and always made a scene to announce his quotes. And I was very active and engaged, and he kind of looks right at me and he goes, hey, how are the weekly 13 half calls? And at the time, these were the exact calls that I just missed paying $1 on 1,000 lot in my personal account. And he looks at me and like my stomach just sinks, like a knife goes through it, because I have to stand up and do my job, and I have to make the market like 10 at 11. I almost want to throw up, but you can't. You just got to stand there and take it. And like announcing that $10 bid was like basically confirming that, yeah, you lost $1 million.
Oh, Jesus.
And after that, I was like, wow, I am never going to make this mistake again. And so for a long time after that, I just kind of watched. And I became more and more interested in how the things we were doing were interacting with the market. And really since like, 2018, I won't go into too much detail. I had an account then too, kind of talking about certain things. And it became obvious that there were some massive concentrations in the market that were really, really driving the index at a price level and moving vol around too. And it's kind of funny to me, like you look at some of these GEX or gamma metrics, and I kind of laugh sometimes. In 2018, for example, you had guys that were just kind of figuring out what gamma exposure was, and they would be kind of relying on this, like, dealers are long calls and they're short puts, and eventually what you get is like you get this permanent S curve type gamma shape, which makes sense because that's the open interest. But it really doesn't mean a whole lot if you don't actually know what puts they're long or short, what calls are long or short. Even if like in the backbone of all this, there is a lot of overwriting and a lot of hedging, it still doesn't make a lot of sense to use it as a real indicator unless you know a little bit more about it. In 2018, there were some massive, massive players, and we didn't really have 0-day prevalence then. And all these guys had the same idea, which was that
that's right.
Short vol fund. If you're a short vol fund, you would be wise to defend your positions. And so, for example, the markets are rolling downhill. Instead of allowing, kind of what I talk about on the feed now.
Is that you talk about vol suppression here or no?
Yeah, for sure, kind of. I mean, there's a ton of that. You had one big player that was long like 100,000 puts, maybe 3 to 6 months out, and between that, you had 200,000 short iron condors between two major funds. Now, that's like, we talk about this whale and the iron condors and 0-day yesterday with 40.
Yeah, I saw that.
5 pointers. imagine like having 200,000 iron condors that are staggered and they're all open at the same time. It's 2 weeks, 3 weeks, all the way to like 8 weeks out. And they're not 5-pointers. They're like, 50 pointers, 50 points on the put side, 30 points on the call side, maybe a bit wider. And that was just an overhang all the time. And same thing, there was also a fund that was short 200,000, like 10 delta puts between 1 month and, 3 months out. Now, these guys, God bless them, they thought that they was smart and defensive and responsible as fund managers to defend their inventory. So the idea would be that like once you hit a threshold, you want to show that you're a responsible options portfolio manager, whatever, you're going to automatically trigger a covering trade, a cover and rolling trade according to what you've back tested. And then, this was kind of the moment where like flows entered the picture, the dialogue. I know Ben Eifert at QVR started talking about them at the time. It became obvious that you can't really look at a back test that you're not in when you are that big. And so when you're that large, you change the sample size because we have to hedge those flows. And so ironically, there was this like 2020 when the idea of GEX started coming out, you had people starting to publish these metrics and validating them with correlation, like showing that realized variance explodes to the downside. And it was kind of hilarious to see this because the opposite was actually true. We had massive vol suppression. We were swimming in gamma.
Yeah.
And the PMs that were running the short vol funds, they cut their own legs out from under them. Because if you think about it, as a market maker, if it's me versus the world, and I'm owning all this gamma, as the market goes down continuously, I'm buying like 1, 2, 3, 5, 7 contracts, whatever, there's support there. Vol will still tick up a little bit because there's skew, but then eventually what happened, all these guys that come in to cover their trades, what I'm doing is a continuous like delta hedging that absorbs and slows things down. And then all of a sudden these guys come in with a discrete knockout and they just puke their delta. So that's like I buy 1, 2, 3, 5, and they come in and sell 20. And all of a sudden you have this like cascade effect where you get this reverberation, market starts to cascade lower and lower, variance opens up. But vol, it was never not well supplied. So we started whipping around like crazy, but everybody was so confused. Why is, why is there such a big divergence between like cash fix and VX1 or whatever? Why is gamma performing so well, but vol doesn't have any life? It's like, because they just kept puking their delta effectively,
right,
rolling downhill, selling us more vol, and at the time too, like vol was getting higher and higher, so you're more sensitive to the levels. And everybody thought that we were just short gamma. It's like, no, it's like the exact opposite. All those guys learned a big lesson. They don't do it that way anymore. It was kind of funny because one of these shops like kind of went dark. It was very strange timing, but they were incredibly systematic, and then they went dark, and then they changed their program. And one of the big takeaways, why it's different this time, every time it's different this time, right? Because people learn and they adapt. You have to think like a poker player all the time if you want to spot weird inflections or perversions of the market, because people do adapt. And just the fact that a lot of the vol management side has kind of adapted to the idea that you really don't want to defend your trades, right? If you defend your trades, you're eliminating the one advantage you have in concentration, which is that your trades need to be hedged. And so the other side will always benefit you. And so those guys don't do that anymore. They leave their trades open. And that's why the idea of gamma is more powerful now, because the gamma is not rolled traditionally. Does that make sense?
Yeah, it does. Totally. 100%.
Cool.
So what would you say? So are you implying at any point though either, or are you implying at all now that you have to actively be, or if you're saying we're all chasing gamma right now with the advent of the internet? Are you saying that we know that we're going to the short gamma regime right now, and so everyone's going to pile into this trade and to form of zero dates and stuff like that, or no? I'm trying to see if you're saying. Good.
So I guess what I would say now is the regime is different. Like people always talk about, Volmageddon 2.0 or whatever. Yeah. It's like, well, it's different. Like Volmageddon 1.0 was like a very niche thing that Mike Green famously called out on one at some risk conference, where he pointed out like there's an architectural problem with the product, right? So like XIV will blow up. It's just a matter of knowing what their thresholds are, and then being ready to trade when their triggers hit. And that did eventually happen. And there's like some notable kind of
everybody was in the same trade too, right? At the same time, or no?
For sure. And then but the problem, kind of what I bring up all the time too, is like everything is so systematic. And so what I drill all the time is it got to a point where in my career I hated it.
Do you think it's systematic still today or no?
Say that again?
Or is everything still systematic, or are there still like influences influences by like HFTs or from just the dissemination of information?
There's certainly both, but like,
Like-
for a long time there was this kind of nascent frustration with like the idea that passive indexing means that there's no stock picking anymore, and there's some validity to that. It's kind of out of my domain, so I won't even speak on it. But the same idea.
Sorry to interject. That's a fair question, right? There's no stock pick. One of our stock pickers, he's like, you can't really outperform the S&P 500 anymore with stock picking unless you have some outside variance. Like this ticker shouldn't have sold down to like 20% for no reason, and today outside of what S&P 500 is trading, there's no fraud, there's no this, there's no that. You can't outperform stock picking anymore, generally speaking. What's that?
I said that's kind of a good point. I think that kind of speaks to the same thing, is that like there's something gluing it all together that's increasingly systematic. And now it's obviously not perfect. Like no collection of systems is. That's why I laugh sometimes. I kind of point this out as much as I can when people pull this like thing out of their hat where it's like, oh, the market makers are manipulating. It's like, dude, there are like 700 market making firms that are cleared to act as market makers. There's DPMs, there's all these sorts of different entities that act as market makers, and there's prop shops that act effectively as market makers, and then bank desks and they all have different strategies, and they all clear different firms. So how in the world is like one firm thinking that it's logical when their business model is to be hedged and eliminate positional path P&L to think that they want to take on billions of dollars of risk for like settling your put option at zero? It's like nobody gives a shit.
Nobody cares,
dude.
Just
mechanical stuff. Yeah, nobody cares. These guys just like fleecing. All they care about is that they can scrape pennies off of every one of your trades, which is fine, because if you can actually figure out what their approach is and stop this, idea that like they're always going to get you on everything, you can learn like what kind of quirks there are to spot when there's something going on that's hard to reverse. Like right now, I feel like we're getting this kind of hard to reverse moment.
We are.
And there are a lot of things I don't even understand about it, right? So I pointed out seasonality, but like I couldn't articulate exactly why July 17th is the day that things should inflect. I do know that VIX expiration has a lot to do with it. So if I had to pick, for example, even if like the historical seasonal,
it's like all coinciding, right? So you get like all the players already in the background setting it all up, and if you get everybody on board, like 1 + 1 + 2 + 3, you start adding it all up, and you're going, it's just going to take the easy trade.
Exactly, right. You wait for the fat pitch and then swing. And it's really grinding sometimes to watch things go in a way that you don't think is very logical. But then, the point is you just have to keep opening your mind to like, okay, what mechanical influences in place are, if there are discretionary influences in place, like what are they?
And if it fails and goes the other way, what happens, right? So even if you're setting the whole entire thing up to take place, we are in a fucking bull run. We are, we are hitting all the traditional things this year, basically.
For sure. Exactly. Yeah, exactly. And that's the other thing too. It's like, of course, like the base default strategy is like, you just want to be long equities and hold them. But I'm a trader. Like that's the most boring thing in the world to me. There's not an ounce of me that would like feel alive if I would get on Twitter and be like, another day to like just hold equities. I'm always looking for things that are interesting, like problems in positioning, different things that are
contra
like poker. I feel like the benefit of the markets right now, you can look at it one of two ways. You can take the kind of no agency approach and say like these guys have the biggest systems and the best models and all the whatever, and it's intimidating and you feel like you've already lost the game. But the fact is, like, you're at a table where all these big guys are playing poker with their cards face up and they don't care about your pennies. So you might as well take their pennies. Like you might as well just keep doing what you can, stepping out of the way when there's real risk, and then riding the waves when they come.
That's right. Following the trend when it happens, right? Run with them when they're directionally how they're going. Scrape the pennies when you can, if you can see it, and arbitrage inside of the chains.
Exactly.
What would you have for? There's a few things here for you. So, our show tries to simplify concepts for people. What I found was that when like I started out, of course, really dumb, and then I learned too much. I thought I went down too many rabbit holes. And I'm like, I'm the smartest guy out there. I know everything about this concept and that concept, and I started losing frequently. I like looked at things like an engineer. Like, I've got all the answers for this trade to take place, and then I could never adapt to it not working. I couldn't see the other side of the trade if it goes against me. And I couldn't adapt as market conditions changed, of course, right? So I try to dumb things down for myself, or even for people, even other traders out there. They'll get lost down a fucking gamma hole, and this isn't disparaging anyone out there or anything like that.
Yeah.
In truth, that I'm just like you need to have some basic ideas here, like.
For
You
sure, yeah.
Well, what are your thoughts on that? Like,
Yeah, so that's why I use memes a lot, and I try to, like, people laugh sometimes. I do this like Britney Spears meme on gamma regimes, because the whole point is that like gamma stabilizes things. It stabilizes things in either direction. It's not true that gamma only lives on the upside. There's oftentimes, like last Friday, for example, there's a lot of dealer long gamma around 5,500, and so you can see the influence clearly in the chart when we kind of bounce off of it, and then we kind of escape it. And it's always easier to escape a sell-off than it is to escape a rally. So if you go back to like maybe July 5th or July 8th, I can't remember, but there was some day where there was a massive gamma overhang too, and we just chewed through it. And you can see it in the chart. I use options depth a lot, and I like what they do for the sole purpose that, from my perspective, it makes a lot of sense, because you're looking at the actual hedged option inventory. And so if I want to know if there's a hedging influence, well, one of the first things is like, okay, well, how does hedging influence works? And then how do I find the right inventory to make my assumptions? And so that day there was like a massive gamma overhang above the market, and you can see what happened. So
I remember we blasted through it. It was like this 175 M or something like that.
Exactly.
120 or 130. We sliced through it like it was butter. I was like, fuck.
Exactly. And that's why today, the first thing I got up this morning, I was like, all right, I've been retweeting these memes, like Rambo memes, because I'm like, it's fucking go time. Like, you got to take this seriously now. Like go through highlights and like evergreen explainers, things like that, because there are other flows too. So like, yeah. When people say there's like $10 billion of long gamma, I don't think most people even understand what that means. It's just a big like spike in the chart, and they're like, oh, that's a lot, we can't move. Like, no, that's not true. What that means, the way conventionally look at it, is there's 10 billion of notional gamma means that there's 10 billion of notional delta to sell across a 1% move. So first of all, it's not all happening at one location, and there's also a bunch of entities doing it. So again, the map is not the territory; it's just a representation of what's kind of generally happening.
No, but it's in your brain, or in my brain. Even in my brain, I'm like, oh, there's no way we're cutting through that. There's no way.
Oh, mine too. And so what I've learned to do is, because I even said in one of my, because I'm going to do like a little free thing on our Discord on Friday to explain it, because everybody wants to know like how to use this, and it's hard. It actually is hard, because you can't, I take it.
You can't nail it down, dude. Well, you have to, with the awareness of it is critical, but you can't be like, this is going to happen every time.
I take it for granted that I made like a million, probably some stupid number of like discretionary trades in my life, like big options trades where it's a yes/no decision and a size and a hedge, and then I had to watch it and like worry about it the rest of the day and find something to do against it. Like, I made a ton of those, and so I forget how automatic and intuitive it is for me. And I hope that eventually this intuition spills out all over Twitter, despite spot gamma blocking me, all this kind of weird shit. But
did you get blocked by them?
Yeah, I thought that was a nice kind of signal that, like, okay, yeah. It's like my first notch on the belt.
Congratulations. We have a whole, if you mention them in our stream, in our chat, we have a whole list of things we tell them. We tell we respond in our chat to people in the chat, because it's not so much Brent's fault or anything, but a lot of the consumers of spot gamma, they used to come around and they just be like, it's the window of weakness, bro. This is happening. And I'm like, oh, fuck. They're taking choice key points from spot gamma, and then it's Bible.
Yeah, and that's the thing too. Like, you run away with it, and it's very easy. These are very complex domains. So if you run away with it with the wrong idea, and then your trade goes well, it is locked. You're always going to believe the wrong idea, and it's going to take like you're going to
lose a bunch before you figure it out.
Oh yeah. Oh my god. Yeah. But so for example, like that time we hit the top of the call wall, like what I've learned to do is, okay, when we bump up against it, what's happening is called speed. It's funny, I looked at a Tasty Trade video to figure out how other people frame this stuff, and it's like they actually got the Greek wrong, and then at least like to their credit, they said they don't even use it, so whatever. But the whole point is that like there's this acceleration in how much gamma is on the chain at that point. So like you go from having really kind of no gamma to hedge, and all of a sudden there's like a ton of it. And that happens when there's like a very concentrated 0-day position, for example. That would be like maximum speed. When those options go from like 10 delta to 30 delta, they cross this inflection where it's very severe.
Right.
All of a sudden they're real, and there's a lot of hedging that has to happen against them. And so when you look at the chart,
is that only if it slows that the hedging happens against them?
No, I mean, it happens in theory no matter what, right? So, because
Mhm.
it's just mechanical. And so what's going on then is if you're running up against the top of this band, and what you should expect to see then is like the price bars, if you're looking at a 5-minute window, whatever window really, they start to collapse and they get narrower and narrower because they're meeting greater resistance. And then what will happen often, and it's sometimes good for a cheap trade because oftentimes when you're in those dense gamma zones too, like implied vol in near-term options gets pretty cheap because we're suffering under the weight of them. And so you just price everything down, you sell whatever you can, and everything gets lower and lower and lower. But it gives you some good, quick, like reversal trades too that are well priced. So in those moments, I'll usually like sell a call spread, buy it. But I'm terrified of selling outright options. I just don't do it. You just like a day like this, I always tell people like they're so cheap, just at least like sell a 1 by 1.5 or something to like own a unit against it. But so a trend day doesn't kill you. But in any case, like just I guess staying in lane here, you bump up against that gamma and then you reverse off it. And oftentimes when you reverse off it, it's like a wider bar. It's a quicker move down. Again, for the same reason, because there's less supportive buying flows because there's an asymmetry. And then you do it again. Okay, maybe it happens again. I will almost, I've,
Yeah, and banks aren't influencing today either, right? So we've got or I would assume that dealers are getting like ragdolled right now, right? Is that right or wrong?
And there's not a lot of gamma on the chain right now, from what I could tell. And also like IVs going up down here kind of strips some gamma out of the options naturally. But the one overarching point I want to make is to the upside, always be careful. Trend can move fast and sharp in the upside and just chew through a lot of dealer gamma.
Yes.
And so if you bump up against the call wall 1 or 2 times intraday, especially early in the day, and then it still commits and starts chewing through, like just get out of the way and actually maybe buy a call and let it do its thing, because there's some kind of like just trend influence going on right now. It might be a CTA, might be something else, might be a rotation.
I discussed that on I try to simplify that concept to people in the stream when I'll draw out like a I don't know if you're watching on the screen or whatever, but if I have a target, I'll like up or down doesn't really matter. I'm like, yeah, I'm trying to see if we actually go here. Oh, hold on.
Yeah.
Like if we're going into what we think is support or resistance, what's the behavior here? Are we missing it, reversing? Are we missing it, immediate red bar or green bar, or
exactly?
Are we grinding on it? Are we poking our head and consolidating on it? And they're all inferring different potential future outcomes from that point, right? And we just saw that take place on NDX, right? We just saw NDX park itself on a gamma node and just parked and just started grinding, right? Now it's broken through, I think, at this point. So just simplifying behavior of encounters with gamma, right? Or I don't know if I'm saying that right, but the behavior of price at those levels.
I'm going to tweet my Britney. I'm going to retweet my Britney Spears.
Yeah, do it.
Here. I have one that has explainers on it, so I got to find it. It'll take me a second here. But yeah, that's really the overarching point. And then there's certain things too where like, I try to elevate this concept a lot. Like I look at CTAs as the same thing as negative dealer gamma.
Yeah.
Functionally, it's just flows at price. I have a meme. I've tried to make everything into a meme because I feel like that's the easiest way to do it. Like I'll always remember a funny picture with an idea if it makes it make sense. But gamma is nothing unique. It's just like the idea is that at this level you have selling flows or buying flows. It's not rocket science. Those flows move the market just like any other. Do
you think that though that they have more influence or less influence if you've got like real money buying, selling by larger institutions? You feel like if I'm like GS and JPM and I'm not making any big moves right now, that retail sentiment could push the market around with dealers chasing or not? Or you think like smaller players in the market can have an influence in this? Or if I was a bunch of hedge funds and I'm like, yeah, we're gonna get together and fuck around a price this morning or something like that. Is that real or fake or don't know? Or I have a bunch of questions on this because it leads into like zero dates too.
Yeah, for sure.
Are dealers using it? Are hedge funds using it? And the size and stuff like that?
Yeah, all good questions. And I have to be completely frank, like I don't know all the answers, right? Like from what I've seen, it seems virtually impossible. There are some moments in time, right? Like I could probably speak off the cuff about some of these where I've seen things that are so fishy where it's like, come on, you gotta be fucking kidding me. I'll just state a few of these. When I was on the floor before the flash crash, there was no indication that anything was like terribly weak. We did have some geopolitical weakness, but like there was no giant like concern about a level, at least from my perspective at the time. I was still kind of young. I'll never forget this. And so when you trade weekly options, at that time it was, you know, ancient, so they just had like Friday options. You didn't have everything. You had Friday. That was like the cool thing. And so somebody, you know, some broker who doesn't really get a lot of flow, barks out this order, and like a lot of guys around him, like were kind of junior, didn't really have a lot of seniority, or kind of, you know, they weren't quick on their feet. He barks out this order, and it's like, it was the flash crash low, I think it was like 1066 or something ridiculous, but it was like the 1020, 1040 put spread. And the book, when I say the book, it means the SPX, like the SPX, like standing order book on legs was maybe at, I think, 20 cents. So you could just leg the spread back and forth all day. You could pay 20 cents and buy this put spread. It was a worthless put spread. Your favorite thing to sell as a market maker, because it's limited risk, and usually those just rot. And he just barked out. He didn't even quote it. He just barked out this order to pay 40 cents on like 2,000 of it. Made no sense whatsoever. But of course, we all piled in to sell, and he got a big trade. And I was like, this is the best trade of my, this is, I've never seen anything like this. It's free money. And then the next week, like, you know, and maybe at the time too, like maybe that little bit of gamma influence there, that 2,000 lot, kind of trivial, small, but maybe at the time, because there wasn't a weekly complex, that helped, you know, kind of unstick the book when we got to that level too. I don't know. But I always thought that was very suspect. And it was ironic too, because like, not only was it suspect, but they made no attempt to, like, you know, hide the fact. They almost like wanted you to look at this trade because
Kramer's talked about that, right? He said that in previous interviews years and years, decades ago, where he'd put out a trade that's unusual that would pique people's interest just to get a shift in sentiment across brokers.
Sure. Definitely could be, especially when you think you're right. Like if you're pretty confident in your view, you at that point you want reflexivity to work for you. You want people to pile in behind you and push things your way, and that's a good strategy. I was gonna say, and so I've seen other ones too. And what really, you know, one thing that really got me interested in this idea was when I can't remember what era this was, maybe around that time too. But again, we only had really Fridays, and somebody would come in on a random day of the week, and maybe we're trading like 1220 or 1230 in the S&P, and they buy like the 1240, 1280 call fly like 5,000 times, some ridiculous number. And it's again one of those trades where you're like, that is such a stupid trade. You would do that. You're wasting your money. And they pay like edge for it. You know, so if it's worth 50 cents, they're paying 70. You're like, just sold. All those pictures you see like on Google Images or whatever, where the market makers are going nuts. Like those are the types of trades where you're like, oh yeah, that's so stupid, sold. And then sure enough, like I would come in the next day and we'd be like right in the middle of the fly. Like, what the hell just happened? And then it took me a while to like put it together. I was like, wait a minute. So these trades always happen in the daytime at these times on these weekly contracts and these sizes, and the moves always happen overnight. And you go back and look at the ladder overnight, it's pretty thin. You look at the order flow overnight, and there's nothing there. And I'm like, wow, this is incredible. But once we're in between these strikes, it is game over. You know, we're all sitting there. We've sold this thing at 60 cents, and it's now they quote it again the next day, and it's like you have to make it 520. I'm like, what the holy shit?
Let me ask that question then too. Leading into that, David Amos speaks about this all the time in our Discord about
sure.
The Asian market open and closes, London market open and closes, dealers looking at price. Do we have any buyers in Asia? Do we have any buyers in London? Yeah. We're going to offer it up to the U.S. market. We're already, we're chasing price down. Let's say we're chasing price down into a U.S. market close, and you're offering it up now to London or Asia, and then London, and then if they're not buying it, or if they do buy it, then unloading it on the U.S. market, that kind of stuff. Is that real, or
it definitely goes on? It might not be so intentional. I think what happens is like a lot of, any U.S. index firm, or I guess a lot of U.S. prop shops, they don't have as much presence in the overnight session as they would in the day session. And so that just means that there's like an overnight guy or an overnight skeleton staff that's, running the books, but the trading and the activity and like the decision making is all much lighter. And so the systems wind down in the aggregate, right? So there may be like, I don't know, however many dealers there are. There's some percentage of them that kind of turn off, and some percentage that wind down their aggression, and some percentage that aren't even active at all in these other markets that are related. And so what often happens is you wake up, you come into the office, and you look at your sheets or where things are pricing. You're like, what? Like, this doesn't make sense. All yesterday, all the order flow was, this is a popular one. This is one of my favorites. If every day they're selling us 10 delta puts in US hours, then all of a sudden something happens in Europe where some program is buying hedges, do I care? Like, do I really care that like the puts in ES are up 50 or 60 cents? Like, no, I'm just going to sell the fuck out of them because they're going to be offered to us by the time we open.
Yeah.
So you just sell it right back down to your sheets, to your values, because by the time the regular trading hours come back, the flow that that dominate your product, it's all back in line. So it's really just hammering back in line.
Let me see here. Give me one quick second here. If you had, okay, so real quick, this is just one more introduction here. This is at Vol Signals. If you want to, or please do find him on FinTwit. His handle is the at symbol and then capital V, lowercase OL, capital S, and then lowercase IGNALS. Very approachable gamma player in the market, professional. I trust that anything he says on FinTwit, I'm on. This guy knows what he's talking about. Respect his insights. Easy to approach. If you're looking for someone that's more hands-on with what he's doing, where you can say hi to this guy, ask him questions, please seek him out on FinTwit. I did post a link to his handle on my profile. So if you want to find his handle, click on it. Please follow, set alerts on him. So you're being asked right now who we're speaking with. I just want to do a quick interjection here.
Okay, cool.
Update people.
I talk fast too. I'm sorry about that.
No, I think you're doing fine, man. If you had some, well, number one, what's your favorite food right now? What cuisine do you like right now?
Steak.
You're into steak right now? What's your favorite cut of steak right now?
I go through phases. Ribeye.
All right, I do the phase thing with steak too.
I feel like I just go through modes, and I've like done keto for a long time, and it really works well. But then it gets kind of boring, and you really can't like be social as much. And but then every now and then, when it looks like there's some volatility coming up, I'm like, all right, time to get serious. Like put on the Rambo the face, and it's steak and oysters and eggs.
I fucking love oysters, man.
Oh, so do I.
Except I like oysters and steak too, dude.
Pea crabs. You ever get those pea crabs in the oyster?
Oh yeah, dude. I like pea crabs.
Oh, you do? Oh man, that's crazy.
You think they're gross? They have them in Europe. You get them right on the mussels and shit.
It's just because when I was first introduced, I wasn't expected to have this little thing crawling out at me.
Yeah.
It ruined it for me.
Just real quick, we're S&P 500, or at least SPY right now, is making its first attempt in some time to back check 5-minute trigger. We've got a little bit of a low here in hourly velocity. I'll check the half an hour for you really quick, see if we get a little bit of a retrace.
Yeah, so what this day reminds me of is April 15th.
The 15th, right?
Of April. Yeah, there's a similar kind of day. And I don't know about the and I can't speak on the like the moving averages exactly, or like the technicals you guys might use, but just as far as flows go, I remember there's a similar day where in that range, it was like you kind of knew that there were CTAs, kind of looming in market. We kind of had maybe previously failed a little bit, and then everybody was kind of bulled up to buy the dip before really there was any evidence that the CTAs had transacted. And so I think I was, whenever I get mocked on Twitter, because usually I'm pretty reasonable. I try to be. I feel like if I do anything, I guess I would say this in my career. One of the things I was best, like what I appreciate the most, was that right from the beginning, the training I got and what it was drilled into my head by the guy who trained me, not a company thing, but even a personal thing, like a good mentor, was for every single thing you hear, like whether it's a quote or a trade or whatever, just run through, like drill yourself the entire day. Like, okay, maybe you're not trading that, but okay, if you were, what's your decision? Do you interested in buying, interested in selling? Why? If they sell it to you, what do you want to do against it? If they buy it from you, what do you want to do against it? What will you lay it off against? If this happens, what if this happens? Is it good for our position? Is it bad for our position?
That's right.
So I just drilled that all day, every day, and I just really got in this competitive mode. Before you know it, it's all intuitive, and everything is just like, I don't even know how I know this anymore. It's just, it spills out of me as soon as I'm presented with like a.
It turns into that, right? It's intuition. You stop thinking about the complexity of how you came to that decision, right?
Yeah, and it's funny because now we're in this weird space where like everybody's all like, kind of got a hard on for models and machine learning and AI, and it's like machine learning functionally. How many times have I heard a quant tell me that like they can't explain the machine learning model, but trust it, it's a model? Like, well, isn't that the exact same thing that my brain does? Like, I can't tell you why I know it, but I've done it a million times. Just trust me.
Yeah, it's
Same
that
thing.
time in market, the wisdom, time in market, that kind of stuff. And you don't
Yeah,
always
it's
know
like there's
exactly
no beating
why.
screen time.
You've seen those patterns before, or this looks like
Exactly.
this might be happening, even though it goes against counter to everything that's telling me otherwise. What I don't like about FinTwit, or what I don't like specifically, is information changes so quickly, especially especially in like smaller time frames. Like if you're like day trading, intraday trading, even weekly trading these days. I noticed, like you've talked about earlier, where there was a time where you could, if we're going up, you could enter a trade and stay in it for a week or a month, and you're like entering the bot lows, taking the money in the highs, in and out, no big deal. Now over the course of a month, we're not doing this up and down. We're doing this, volatility within, big outsized moves to the downside, big outsized moves to the upside, and we're just destroying the chain the whole way up. At least that's my experience. That has changed, where it's hard for me to take on like a 3-month or a month and a half option and be like, I'm going to sit in this on a low and I'm going to be fine between here and there.
Oh yeah, for sure.
So like, for me at least, the thing that I run into is dissemination of information. Like, oh, I'm over here on Twitter talking. I'm over here on Discord talking. I'm over here on fucking Wall Street Bets talking. I'm over here on a website talking. And
Yeah.
as information changes, I'm like, well, I bought this for
You change your
10
mind.
cents and I just sold it for 40 cents. I'm out. And I don't give a fuck where we go from here.
Yeah.
I don't know.
But somebody sees what you wrote and they're like, they might make the trade after you exited.
Yeah. There's
Now
that
you're
too,
getting
right?
hard.
And then, absolutely.
Yeah. That's what I find hard. That's why I never give trades. I think I said this today too. And I kind of like, Jem is, God bless Jem, because I feel like he got on TV and started talking about charm and Vanna. And I really was like, he's not explaining this at all. People are just kind of like having these ridiculous assumptions about it. But it gave me a way to just like kind of figure out what to do. Because I like teaching, I like talking about it, I like trading it. But it's true, like markets change on a dime, and it's very hard to give trade advice, which is why I'll try to steer very clear away from it all the time.
Exact entries, exits, management. If it goes the wrong way, what do you do at that point? How are you hedging the trade? Are you adding to your position? Are you cutting it loose?
Yeah, you have to find a style that works for you. And I would sometimes, if you look at trade history, as product, yeah, everything. I think I made a tweet one time and I pointed out how, like, honestly, if you looked at my trade history, you'd be like, this guy's a schizophrenic. Like, he's made 100 trades, like 65 of them are like scratches.
Guilty.
20, and like there's 1 or 2 big home runs. I'm like, yeah, that's what I was chasing. Like, I was zeroed in on just that one home run. I was cutting my, I made Thinkorswim a little richer in the process, but hell, at the end of the day, like, the home run counts. But I wouldn't want to be like, yeah, you can do this too. It's easy. No, you can like learn. I can teach you what to look for, and maybe it's a missing link in like what you have been figuring out yourself, and I can explain it in a better way. But I'm never gonna, I was very clear. I'm like, I'm never gonna like give trades. It's just impossible.
Yeah, people are like, oh, you said this. I'm like, yeah, I did, and then fucking we traded it, and then 20 minutes later we made money. We walked away, and now we're getting up with the next one. Like, what do you want me to do? Like, hold your fucking hand? Like, I can't hold your hand and say, do this. And then the other thing too that people do is that they don't take every trade with you. That's my biggest problem with people copy trading is a lot of times people, and I'm a big dip buyer, so I'll often see like that they'll follow 7 out of 10 of your trades, or 4, or they weren't here, or they're in a meeting, or and then their risk that they're risking, and then are they doing other things? Are they removing money from the market? Are they taking these other simple trades? Are they buying stock along with this, selling options against this stuff? Are they doing swing trades? Are they doing flies? Are they selling options? Like, what's the blend of what they're doing? If they hit it big, are they taking the money out of the market to make money safely, to reload when they do blow an account up? Like, there's so many ramifications from person to person that it's hard to re-simulate what anybody's doing. I think it's hard to do that.
For sure, I agree.
If you had any basic tools for people, if you had like basic things to say to people, like I try to teach basic things to people here. Do you have any insight on
what to look at or what to do?
Just like I've tried to dumb down my trading personally. I trade better dumbing down trading, and
So I like swing trading on like a 2 to 6 week kind of frame. When I retweet these whale trades, this IB guy, it's actually this is actually
hold on a second. Can you just hold on a second? Sorry to interrupt your vol signals. If you're out there listening to this show right now, do me a solid. You're in wherever you are out there. If you are at the end of the year not a winning investor or trader, please just write this stuff down, okay? You don't have to trade this, but someone's offering you some insight from time and market. So, sorry, vol signals. If you could start this over again.
No, you're good. So this might be kind of winding, but I guess it's probably recorded, so you can go back to it. But so I like to swing trade. I like to trade frequently. I was never a 0-day trader, but I'm getting into it a lot because I really appreciate the granularity of some of these gamma charts, and I can wrap my head around what's going on very clearly. It's probably maybe out of like depth a little bit for right now to talk about all those mechanics, but they do work. Like these call walls or put floors with like strong long gamma, they are supportive. But then you have to understand too, like at the end of the day, charm, and I want to drill this home too because I don't think a lot of people understand this. Charm and gamma interact in a way where they wind up kind of pinning dealer longs. So if you have a good read on the position, as you get towards expiration, you can almost guarantee that if there's a big long strike and a big short strike, when I say big, I mean size of inventory, the market's going to pin the long, not the short, which is interesting because that's kind of flies in the face of everything that people assume, which is that dealers are out to get you. They're going to find a way to screw you out of your puts. But the worst case scenario is you land on your long strike, and that's almost always the outcome of mechanical hedging for market makers. It happened to me all the time. And I know it happened to every other market maker out there. It's, it's just the way the flows work. So
I always notice people give back once they hit that strike too. They think we're going to continue higher when the pin is actually there and the charm is gone.
Yeah, and that's something too. Like these Greeks are dynamic, and so they're kind of simple once you really see the picture as it's moving kind of in your head and you've really cemented it. But in reality, they're kind of dynamic and hard to wrap your head around at first if they're something that are new to you. And they change throughout the day, and they change with respect to spot. And so like gamma is not static. If you read somewhere that we're in a long gamma regime, like that might change by the time you open futures.
Yes, right.
Because of 0-day, because it's such a big product now. And I don't see that going away. If you look at what the CBO is doing with their marketing push and their PR push, and Mandy Zhu with their newsletters and the webinars, they're building a beast of casino trading. It's not going to change, and it won't cause the same problems that the VIX ETPs or ETNs did, but eventually there'll be some kind of problem. I look at yesterday as an interesting problem because yesterday, agnostically, if I look at the structure of things, like, okay, there appears to be some kind of a blow-off top in a rotation trade. Yep. Maybe that's a blowout, like a spread blowout last week and into this week. That to me looks like a risk off. I know that the VIX has been kind of sticky. I know there's some big like short vol and short gamma trades looming just below spot for dealers. And those guys, the few discretionary players that are worth following, I tweet about all the time. I can't name who they are, but I do know who they are. They're not, this one big whale that I tweet about sometimes who makes trades up to $250 million, to my knowledge, is basically one guy's money. But he's oftentimes pretty good, but he's pretty early. But these structural weaknesses kind of emerge. Yesterday, we didn't really move. We kind of grinded a little bit higher. But
structural weakness emerged overnight or at the close yesterday into this morning, right?
Well, even so much, I would say.
Or just say just because it couldn't hold.
I think in my newsletter, I started like flagging this idea that like it's time to really think about hedging. Like we're approaching really like a seasonal low in VIX and a seasonal inflection on the top side of annualized market returns. Like July, the middle of July, for whatever reason, is pretty ugly. And I feel like over the last couple of years, as things have become more systematic, it's almost like you get these cartoon caricature versions of seasonality.
Yeah,
like,
dude.
Yeah, last year we inflected and we overshot, and then like we just crashed into August, and it was like wild, and we had all these reasons for it. But in the end, the reasons, if you look at the news flow, this drives me nuts. If you look at the news flow on any given day of any year, you can find reasons for a crash that day. But then like a crash happens, you're like, oh, it's because of this. It's like, no, it's much more mechanical. Like, yeah, there might be some kind of random weird times that are influences. I will tell you I've seen a few times in my career where there's a real surprise. It wasn't COVID. COVID was well known, well telegraphed, months in advance. I had people.
It was way in advance, dude. We knew that shit was happening.
I had stir traders in November of 2019 telling me that buckle up, March is going to be a fuck job. There's going to be a massive problem in short-term rates.
Yeah, dude, we were heading there fucking regardless of fucking COVID. I try telling people they don't believe me. I'm like telling you.
There was a massive bank trade unwind. That was like hundreds of thousands of futures and massive convexity in the downside. And that all actually came into play. And it was not easy to time, but even visibly, even if you didn't know why market makers kept getting short puts and short vol, you could see in the vol surface there's a kink in March. And it persisted, and there was nothing really there to explain it. But lo and behold, we crashed like something you've never seen before, and a real tell too that the positioning that I was alluded to, like these back end very small out of the money puts, OTC long horizon. You look at what happened to the back of the curve, like absolutely got destroyed all over the place. Like 1 year or 2 year skew went absolutely bananas, and that stuff never happens like it did then. And so these positions cause big problems. When Vega, like long dated positioning, cause big problems, that's a nightmare. Gamma is easier and usually quicker to bounce from, but like long dated positioning, big convex Vega positions are very, very dangerous. But so structurally, these like signs kind of emerge, and there's a seasonal weakness coming up, and then that CTAs are starting to kind of bump up against these trigger levels, and you see that the gap between realized and implied gets like so stretched, the vol gets very low, it really can't go too much lower. And because we still have all this macro uncertainty in the background, geopolitical uncertainty in the background, there's no reason to sell VIX at 12 in this environment. Maybe there was in 2017 for a tactical trade. Maybe there was in 2018 for a tactical trade. No reason to sell VIX at 12 in 2024 unless you're an idiot, because your asymmetry is just mind-bendingly bad for you.
I was wondering about that. As of into like the 15th to the 17th, right around there, I was like, we're gonna staircase this thing down into like October. And I'm like, we'll expand everything, and we'll get a few highs here and there all the way out there, and then we'll lose the fucking shelf and go down. But this looks like, or at least for yesterday, it started like earlier this week, and then yesterday into the close. I'm like, I got some preliminary looks for if we get two great beats in the Google and Tesla, and
of course.
We get some good news tomorrow morning. There's some upside for you here, and then like right into the close, I'm like, those preliminary things are gone. We're gonna start triggering the selling to the downside. So
yeah, and so what's always helpful whenever you can find these banknotes, it's always helpful to see like where positioning is kind of stretched, for lack of a better term, where it's a little bit heavy, because it's just potential energy. Like if everybody's already long Google, then what can it do? You don't have a lot of thrust. Same with vol, it's the same way. If everybody's already short vol or long vol, it can really only go kind of one way. And so when you kind of have these moments where like things seem very, very much overdone, and yeah, they're painful to wait for, because if your idea of waiting for them is like, I'm going to take a stab at 0-day puts today, like, no, that's not going to make you very happy.
Fuck no.
You're going to bleed out and hate trading. Usually you kind of have to have a little bit bigger of an account and bite the bullet and buy something with a little bit more juice to it, like 3 months out or something, just for the sake of being able to manage your trade and trade around a position that you build. And so when it seemed like we kind of overshot on the high side, we had what looked like maybe a spot up vol up moment, where VIX maybe went to like 13 or something, or maybe 13. I can't remember the exact number, but it coincided with the highs. That's a pretty strong move, both away from inventory and a sign that there's real hedging. And then the next day we kind of did start to crack, and into VIX expiration we kind of cracked, and lo and behold, like there's VIX dealer call inventory around, I think it was 14 strike and maybe 16 strike, can't remember exactly, but like VIX call hedging kind of works the same way. It's just kind of a more complicated idea of the underlying instrument, but when you're a short VIX call, you got to buy VIX future, and when you're expiring position, you still have to trade that gamma or cover your existing delta into expiration, and so that produces some kind of thrust. And oftentimes, my original assumption was that the July VIX OPEX would be a low pin, but actually kind of instead we started trickling up in VIX the day before and kind of shot into what looked like short gamma and had kind of a high VIX print, and then just kind of started selling off. And you have to be aware of these things. Even if you're not like so granularly aware, it's important to know where they are on the calendar and know that it's pretty simple too. Like when, for example, Jem talks about these windows of weakness, it's kind of, there's two things in my mind to take away from it. I look at the whole index option space as a continuum. On the calendar, you have a lot of traditional vol selling, that really obviously does hit serial expirations. It does hit every single Monday, Wednesday, Friday, of course, too, but there's an extra concentration in these serials. What you don't have ever, almost ever, on Monday, Wednesday, Friday expirations, and this is good stuff. Maybe it's advanced, but it's like, this is gold. What you don't have is hedging. You almost never have any structural hedging flows on a Monday, Wednesday, Friday, or a Tuesday, Thursday. These random dates, there's nothing like it. So the flows there are almost always just vol selling with an occasional calendar play around an event. And when I say an occasional calendar play, there's a Fed meeting. So somebody buys the Fed Wednesday and sells the Fed Tuesday. Also, if you're going to do that, buy Thursday and sell Wednesday. That's a better trade usually. But
yeah, they've been selling vol recently before, right? Before we even get to the events now, right? Or no, maybe not the past few events, but in general, that's what I've noticed.
There's like
they're buying the vol before the event and selling it right as they come into the event.
That does often happen too sometimes.
I haven't noticed it recently, but I noticed it all most of last year. Seemed like.
Yeah, it seems like it's pronounced sometimes, and it may flip flop. Like it's almost like a regime flipping thing. I don't really understand. I don't have a good explanation for why there's. I wouldn't be able to predict that except for saying, okay, well, did volatility go up significantly preceding the event? Then I would expect it to be unloaded, maybe right before the event, or maybe into the event. And the opposite.
That's true too.
Like there's general selling in front of it. I'd expect like a correction or a cover the other way. But so if you think about all these influences, just very generally, what I try to explain is that like this gamma, it's not like it like disappears and people stop trading the index the same way. It's just that there's a bunch of overriders that still sell that AM Friday expiration for whatever reason. And so there's these chunks of gamma that live there. Obviously, you can see in these charts that go around, gamma just expires. There's a lot of gamma that gets sold on every single day of the week, and that's also a big thing. But what doesn't really happen so much in all these other days is hedging and big hedging programs. So like the JP Morgan collar, for example, somebody asked about that. I think Got Elliott 21 or something asked about this trade. This is a pretty popular one, and this guy who runs it's kind of a real character. But I think the cat's out of the bag now, and everything about this fund is public, and it's not sophisticated. It's a vanilla hedge.
Yep.
They take whatever their underlying is, whatever their asset pool is, and they say, okay, I need to be 100% hedged, and our rule is we're going to be hedged with like an 80-95 put spread collar. And when I say 80-95, these are common trades in OTC markets too. So like oftentimes you get quoted every day on these things, and there's some ETF that does this on a rolling basis. But the point is, this is the most visible public one. 80-95 is just percent of cash index. You need to have an 80% put versus a 95% put so that they're covered in this barrier. And then they just basically look around the chain and say, okay, well, what call can I sell to make this free for me to do? And it's called a collar because they collar their performance. They have a band where they can't lose money. And so these trades happen against big marking periods. So like end of quarter, obvious one, end of month, another obvious one. You have two things that happen when the gamma rolls off at serial expiration. The window of weakness is like, yeah, it's mostly about gamma unclenching first. But then in the last few days, you have a combination of things that again can be one way or they can offset. And so if it's one way, you have a lot of selling flows where like maybe pensions are rebalancing and they have assets to sell, equities to sell. And so there's maybe 20, 30 billion of flows to be sold in under quarter. The other way is when these funds come in, if they don't have, if they're not in the money, I should say, if the price is between their expiring long put and short call, then the bulk of their flows at expiration is all negative. They're 10 billion delta for sale. And so what you can visualize this is like charm is just the eventual decay of that delta. And so what JP Morgan effectively does, if you want to think about it in terms of impact to market, they have this, let's say it's $18 billion. I don't know the number right now, but it's $18 billion portfolio. At the end of every quarter, they come in and they say, okay, sell 9 billion of it. And that's just what happens. That's functionally the exact same thing as the pass through of the synthetic delta that we hedge it with. And so when they come in and they fully hedge that entire portfolio with a 50 delta put spread collar, it's the exact same thing as if they sold half their portfolio. But then what happens over time is that as it gets closer to expiration, if we don't move, we're just continuously covering that hedge. And so it's like we're buying that stock back. And so JP Morgan sells this exposure and then it kind of disappears over time. There's that continual buyback. And that's what Jem means when he says the supportive charm and Vanna flows. I mean, supportive Vanna flows, that has to imply a lot about the surface. That's traditional. It's mostly true. But supportive charm flows is the idea that if you're short put and long call as a dealer, you're short futures, but those options disappear and the futures don't disappear. There's no expiration on those. And so you have to close that gap as your put delta melts and your call delta melts. All of a sudden, your portfolio is just longer and longer delta, or sorry, in this case, shorter and shorter delta. You just have to buy it back, and that produces that kind of like gravitational thrust into expiration. So these seasonal in the monthly calendar, like the most sticky periods are like the first 2 weeks up until the third Friday. That's the stickiest. And then after it gets a little bit unglued. And then at the end of it, there is actual potential for bearishness. People usually interpret the window of weakness as a bearish impulse, but it's not. It's just loose.
It's just loose. That's all it is. Just loose, right?
Exactly.
Market's free to move a little bit more. It can be both directions, right? Depending if they have to sell or not.
Yep.
No, am I wrong on that? I don't know.
Sorry, say that again. My wife.
I said it's just a looser market bit that's more free to move up or down depending on if they're buying or if they have to sell or not.
Exactly. And so a part of like one way you can kind of very easily understand why that is, think about what happens on the Friday of expiration. For one of the override funds that's popular is Global X ETFs. They operate in Russell, NASDAQ, and SPX. Now in NASDAQ, they're kind of famous because they tend to buy back their delta on Thursday. I don't even know why they do that. But in SPX and the rest, they just sell their new portfolio on Friday. So Friday, what they do is you've just expired what was a 0-day option, so maximum gamma, right? And now they just roll to the next month. It's not a technical roll, but they just reopen.
People aren't short call, or they're not short calls either on the DevX capture too, right? Or no?
Say that again.
On DivX day, aren't they not? They're not lining up like sold. They're not selling calls into DivX day, so they can capture the DivX on the underlying, right? Or no?
There is stuff that goes on there, but often that stuff is so mechanical. There's this inflection date, and pretty much everybody does it by the book. I don't know if there's a lot of gaming of that.
I've noticed, or VolWiz noticed that they were gaming it last 3 quarters. This quarter it didn't happen, but the last 3 before that it did. There was like a highway robbery going on, and then they would they would convert the like 0-day calls at the end of the day, capture the DivX, and then dump them on the market right at the open the next following day. It's like a hit and run, some hedge fund or something. I don't know who's doing it, but somebody's doing it or was doing it.
Yeah, what's interesting is one sec here. What I remember as being like do we have a chat in the Google Meet or no?
We do have a chat. If you want to chat in there,
okay.
You can.
Okay, yeah. No, it's fine.
No one can see it though.
I remember. Yeah, that's what I meant. So what I thought was interesting was
you want people to see the chat? I can.
No. I was just checking. So with respect to the dividends, one play I'd have to look at volatility was I like Scott's stuff.
Ask him sometime about the DivX capture trade.
Yeah, I will. Only thing that I remember as being gamed was kind of really just playing the odds. So you would basically sell a bunch of exercisable calls into the dividend with the assumption that there's some percentage of retail traders, or really, people just make mistakes and forget, that don't exercise them. Yeah. Is that what he talks about too?
Yeah, they forget.
Yeah. And there's some big wins.
Don't close them for some big wins that day.
Exactly. So you miss out, and that is a thing. And I've heard some stories about some really big P&Ls.
So they run away, take the calls away, take your shares, exercise them before or at like 4 p.m. or whatever, and then scrape off the dividend and then dump them back into the market. And you of course your underlying is called away from you. You get fucked. You miss your div.
Yep. Yeah, there's stuff like that, but I was always SPX. I never really managed the SPY position, so that was a little bit I understood the nuts and bolts, but I'd always have to double check it because that's actually pretty complicated. All the stuff that goes on there.
Are you what are your thoughts on I know, so I've been trading 0 dates I think for I don't know what year we're or at least 6 years maybe. Right around 2018-19 is when I switched to really doing zero dates. Not fully, but that's when I started. So I was doing like the shit on Wall Street bets and stuff. But when I really noticed over the years, I've noticed the zero date or weekly options that expire one date later. Doesn't really matter, but because there's also like tech zero dates on Fridays for single tickers and stuff like that. But what I noticed was, I want to say it was in, fucking year was this? I want to say 2022 in February or April. This is when it was the first time I ever saw like zero dates. It's weird too. The common speak on FinTwit is it's all these zero date bulls, retailers buying zero dates that are fucking up the market. And I'm like, first time I saw it at size in cash market was puts in 2022. Just the volume. I've never seen that volume until February, April of 2022. And it was bearish, not bullish bets. So I'm always scratching my head when they're like, it's the rise of the zero date. Just buy a fucking call, zero date at the open every morning at 10 o'clock, 10:30. Buy a call and it prints 7% of the time or something stupid like that. But whatever. What's the deal with zero dates? Who's using it? Who's using the complex right now?
So I think everyone. Okay, so one of the misconceptions people have, I think they hear this idea that 0 days are not hedged with futures. I don't think that's true. It doesn't make sense, right? Like if you look at the eventual outcomes sometimes into 0 day positioning concentrations, there's clearly some futures trading that's going on to drive that price. Because if you just put your hands in your pocket, you'd have a ton of P&L variance, you'd win a lot and lose a lot, but you wouldn't cause any transmission to the actual market. You just have an option that expires for a lot of money or a little and no hedge against it.
Do you see him entering and exiting 0 dates throughout the day or even straddling?
Yeah. So I guess I'll explain some of the
sometimes just minutes, like 5 minutes, 20 minutes, an hour.
Yeah, I mean, it's super short term, and there are a lot of strategies. It's in a lot of ways for many participants, it's preferable to futures. And so, if you think about what it might cost to trade futures in terms of like compliance and back end, and also accounting and reporting, and then versus maybe cash index product, maybe on balance, like it's better for you to just choose a slightly in the money option to replicate your delta and execute that, into the market instead of futures. Especially if your system is set up so that like you're not going to be at risk for like losing on the option going out of the money when it was supposed to be a D1 instrument. You can
you're limiting your risk too, right? To hedge that position if it goes the other way. So
it's not a perfect replication for a future. It's not a perfect replication for the underlying because it's not strictly delta one or like linear, but it can be if you have guardrails in place. So I think a lot of people used it in place of futures for whatever their particular reason was. And then I think, so as a market maker, before all this 0 day stuff was the norm, you'd have screens and you'd have the floor and you'd have voice trades negotiated over the phone or chats or with banks over Bloomberg, whatever. But they were not small trades usually. You'd have like, minimum trade size on the SPX floor is like 100 lot, right? If you're trading a 50 lot, you're kind of a pussy or whatever. Like nobody wants to trade 50 up. Those trades are like kind of discrete. You need to hedge those. When you're throwing that much risk into your system at each time, it depends on how big your overall global portfolio is, of course. But like in general, if you're a market making firm, you're going to hedge like 5,000 delta at a clip. You're not going to let that run and just aggregate it. Now, what has happened systematically is volume has moved to the screens. I mean, for a long time, there's still big volume on the screens too. And so you'd see the transmission. You'd see futures move when trades hit. But eventually what's happened is the norm has become retail trading or retail size trading or replication in a way that the average lot is small. So instead of having like a lot of big splashes of 100 lots, 500 lots, 300 lots that require discrete hedges of each trade, because there's too much variance in the path of trade to trade. Like maybe I buy delta, maybe there's autocorrelation. The next trade I buy delta again, I buy delta again. That's not good. You don't want that risk. But now, because everybody's so dispersed and doing their own thing and they're trading 1 lots, 2 lots, 3 lots, 4 lots, there's a tolerance to allow all those trades to just kind of compile and then net the residual and hedge it. And so instead of pairing a trade with a hedge, you're now just allowing trades to randomly, kind of accumulate. And then you have a system that then hedges a residual when it's relevant or when it's like a red flag. Now, if you were on the trading floor and somebody sold you a 200 lot of 0-day 50 delta calls, like you can be sure that that's being hedged at the time of trade.
Yeah, that's what I know. I used to trade size like that, and I noticed that immediately I was getting hedged. I was taking hits immediately with size.
For sure.
Like 6-figure sizes, it's getting fucking destroyed. Now
you can't miss it.
Yeah, and I break it up now and I don't talk about it on stream, and then I break up all my trades now so that it's not all concentrated at once. I got stupid.
Yeah, and one very logical common sense point to make here too is like the SPX is a massive big product with a lot of people playing it, and so it's very hard to have like a discernible impact with any one thing. But when you guys are getting into like smaller stocks or small caps and those options, it's kind of, the smaller the market, the more it's like the Wild West, and you have to be aware that there's somebody on the other side has more latitude to do discretionary things that might hurt you. It's less mechanical probably.
I thought it was mechanical. If I'm trading like 100 grand on 0 dates, I'm blabbing about it on a fucking stream, and then I'm like, how many millions of dollars are we doing right now on 0 dates? You're like,
no, that stuff's mechanical. That stuff's pretty mechanical.
Mechanical.
Like SPX complex is mechanical.
All at the same time though. It's like wham, hedged. Fuck.
Yeah.
Delta hedged.
Yeah. No, it's crazy how efficient it is.
Yeah, it's brutal. And it's like with size, it's noticeable. So
what I also make the point of too, because sometimes people are like, oh, but wouldn't market makers just wait for this? I'm like, oh, again, it's like there's in this product, no, because this product has a ton of competitive market makers. And if you think about how many 0-day options you see fly by your time in sales, like imagine trying to build a system that can handle all of that complexity and then map that to both like the ES futures market and the SPY market, the XSP options.
That's why I trade SPY here too, man. I don't want to be fucking around with like fucking these low float fucking like $100 million fucking market cap companies, and I'm like,
no, you're exposed. You're exposed if you are.
Yeah. There's no fucking way. This is I'm like, we're gonna trade SPY here. It's like easy. I'm like, I can't impact the market. There's too much shit going in and out at one time. You're kind of mechanically being fucked already. So.
Yeah, exactly.
A little bit of blood right now in S&P 500, trying to head down and tag this 2%. Seems like a magnet right now, right? Kind of close to that 2. We have not had. I don't know the exact days, but I think we're at 260, maybe 260 days, right around there, which we've now, I believe, surpassed the number of days from the run up into Volmageddon 1. Where we have not had a 2% down day in SPY. This would be the closest we've come to it in a very long time. So congratulations to you out there, sellers, bears, for an intraday 2% down move. We're pretty fucking close. So I want to say right now that where are we at here? S&P down 1.77%. At the moment, we'll see if we can knock out that last 0.33. I don't know where exactly it is, but I think it's right there. So if you guys want a target for 2%, you'll probably be at home listening to. What you're going to notice here is when we hit that if we hit that 2%, you're going to notice across the world, you'll have like Trade the News and Financial Juice and your favorite CNBC, Bloomberg, and all those guys. They'll all come out at the same time, and they're going to say, what? That's, like, what are they going to do? Red banners or red stuff out there everywhere and say the S&P 500 is down 2% and tell you that it's been this long since some kind of data or fact telling it's been. So we've got a 2% down day. You're going to expect a break to the upside and a reaction in the market once we hit that, okay? Any questions out there? Discord. Let's go to Discord. Are you in the Discord? Or you don't have Vol Signals? I got to get you inside the Discord, man. Just so you can talk to people and say hello if you ever want to. I'll get you an invitation today. Let me ask the Discord really quick. In the Discord, do you have any questions for Vol? Did I say Volwiz? Vol Signals. Sorry, man. Scott's a badass, dude. Try to get him on the phone sometime. Him and like Jedi Marcus are like.
What's funny? I think I actually have talked to Scott on the phone before, but he doesn't even know it.
Nice.
Yeah.
And he's a pro too. He's
Yeah.
I'm not going to say anything on the show here. I'm not going to say anything personal about him, but you'll have a lot in common with
like
him.
I think we have like a 5-year, like maybe an open invitation to play golf. That's probably 5 or 6 years old at this point.
Oh, do you really?
Yeah, but
I missed I was supposed to go play golf with him this summer, and I didn't have a chance. I had to cancel plans to go play golf with him. We should go together and go play. We should go hang out in the Cape with him and play some golf together.
For sure, yeah. I suck at golf, by the way.
Me too, dude. Beer golf, dude. Beer golf. Foot wedge, hand wedge.
Exactly, yeah.
He takes it seriously, but I'm sure he'll give us a good. We'll just do best ball between you and I or something.
Exactly, yeah.
Do you have any questions? The Discord, do you have any questions? What's the best temperature to cook chicken? Oh, this isn't Scott, by the way. Just heads up. This is Vol Signals. I'm not going to give his name here on the show, his real name on the show, but Vol Signals is here. Please, please, do me a solid out there. Don't like the videos or anything like that. Number one, see if you can post your own posts on FinTwit that at Vol Signals is here. If you could, be like, hey, at Vol Signals is on the show live. And please follow him on Twitter. And also, if you're in the Discord, if you have any questions about Gamma, like career low, do you have any questions? Anybody have any questions about even just the market in general? Please ask them, and I'll ask the questions on air. Here you go. Hey, Vol Signals. With this record-long Gamma, what are some potentially problematic scenarios that could develop?
So I think record long Gamma is, I think in terms of, depends problematic for who. So when there's record long Gamma, I think the danger is a day like yesterday, because a day like yesterday convinces a lot of people that things are a lot safer than they are. And so yesterday you had this strange kind of oscillation in a range, and we had this kind of charm up influence at the end, and somebody had 47,000 iron condors short. Now it's ridiculous. It's absolutely ridiculous. I tweet about this guy who makes these big bearish bets, and he's got a family office, and he swings around $250 million. $250 million sometimes, and that will move the market. But because he's 30 days out, or 60 days out sometimes, or 40 days out, it's not as impactful necessarily at the time in terms of the Gamma and the Delta transmission. But think about how ridiculous it is that like you can spend or risk, maybe
he can drag the market down he's making bearish bets, right? So he can drag the market down as we come to expiration, or even just after.
Yeah, definitely more important as we near expiration. Like I wrote in my newsletter last night, I didn't really flesh it out too well because I just got blocked by spot Gamma. So I was trying to find a way to be like clever about how to play that. And then I mentioned how if we keep going lower, you're gonna have a weird thing where his positions are kind of averaging 30 days out. So that's like right out the VIX. And so market makers will be short Vanna, meaning they're going to be getting longer Vega because they're through their put spread. It's kind of a shitty thing to happen. You sold a put spread, you hedged it, but now you're sinking through it. So the farther you go down, the worse it is for you for a number of ways, because you're losing money on the actual spread itself, but you're sinking into this long volatility position. And it's just kind of this, you have a skew curve, right? So the vols that you're sinking into, that you're longer and longer, is higher and higher. So these things get interesting at expiration because it just kind of melts atop you, and things get sticky at your long strike again. And so they're interesting to watch, but they're not like splashy like 0 day. They're not like thing happens, one time. And 0 day gives a lot of leverage. So whoever, I don't want to speculate, but you could speculate. There's a strange inflection where okay, I think the market should crash, for lack of a better term. We're due for a serious kind of correction. And especially as you start to introduce trend following and momentum strategies into the mix.
Yep.
But yesterday, somebody sold 47,000 iron condors, and though you have this guy who's swinging around $250 million, you have this guy who actually spent $10 million at risk, like a drop in the bucket in the scheme of things in the markets, right? $10 million is nothing for the banks and the hedge funds and family offices. And he stuck the market like glue. Put in a strong floor with a $10 million trade where he can't even lose that much money. And he actually has a good outcome where he's going to make money most instances. A little bit of asymmetry because of his flows. And so everybody sees it's like, oh, it's safe. It's time to buy. We didn't go anywhere. It's time to buy. It's like, no, there's something happening where if what people understand is if even though that 5-point iron condor is kind of ridiculous and it's trivial, by the time you get near that last like 30 minutes or an hour, if you have an automated system or a mechanical system that's hedging this, and I think these are the hardest problems as a market maker to solve accurately, because if you don't do anything with this, you're going to lose money because you're just going to bleed premium. And you can't really sell premium back out because you have to give up your bid ask. So you're just going to sell premium to another market maker. You're going to not do that well. But if you have to manage it, if you hedge it somehow, it gets to a point where, like, let's say you have 47,000 iron condors. If it's the last 15 minutes and you're right above the strike,
You start dumping it.
That's real delta. That means that if you're like right atop the put strike, you might have a system that's telling you, well, you need to be long 80,000 futures. It's like, well, what? Like, what? This thing costs $1.50. Like, I paid $1.50 for this shitty 5-point spread, and now my system says I need to own 80,000 futures right here. The act of transacting, like, I'm not going to get any bid ask on this. I'm going to chop myself to pieces and influence the market and lose money on the bid ask of the futures trading. There's no good solution, but there's support. You need to have some support, like it's real futures. And so that's why you get these weird random things that happen sometimes, especially even though these 5-pointers are kind of trivial. When you get near the strikes at the expiration, it gets kind of messy because there's some big participants out there that have systems that are going to have to contend with this problem. Do you treat this delta as not option delta just because it's unique and concentrated? Well, if you do, you're going to get really screwed sometimes. But that can floor us, right? So all of a sudden you have this thing where, like, okay, we go lower, it quickly accelerates from like a trivial spread that's delta neutral to suddenly you need to own 10,000 minis, 20,000 minis. Like, that's real support.
So even though that risk is there, you can have people pop out of the market and just pin that market so it doesn't happen, right? That 10% down move or that bloodbath that everyone's expecting, right?
Yeah, I mean, in theory, if somebody had a vested interest in buying 1 day of time for some reason, it's not an expensive proposition. $10 million is like nothing. You know, this CTA has how much notional to trade. If you want to keep a bid in place, like, it's actually a strange, very legal, very cool, very legal way to do it. It's just like, you have to know these things.
What else do we have in here? We got can we expect this is from Cookies Milk in here. Can we expect the market to bottom like between now and October? With the the pair trade, the US dollar and Japanese yen carry trade?
That's a good question. That one's out of my lane. The US dollar, Japanese yen. I have no good levels there. I have no great insight.
I will address that later for you.
Yeah, awesome.
Off the show, I will talk about the US dollar JPY carry trade.
If you had to guess, where's the level to start fading that one the other way?
Where should we start fade? You want to know where to fade it or no?
If you think that it produces a tradable bottom, what's the range to look at? This is like a mystery to me. I don't really follow the currency stuff. I have this.
I'll take a look right now.
I'm gonna have to try.
Man, we still probably are going to go down to I still think we're going to trade like 165 and then up to 180, then back down. It's like and then we're going to start rocketing up on the on the pair trade in 2025. I'll post something for you. I'll post something on I'll post something on FinTwit today.
So the levels I'm looking at in the index, just generally speaking, from positioning and
which is April too. Matter of fact, coincides with the April lows on JPY USD.
Oh, interesting.
Like basing out. Hold on. Next question was Career Low is asking. Now, I don't know if you know Career Low on FinTwit. I'm assuming
awesome.
that you do.
Yeah.
He's awesome. Always positive. Great guy to interact with. He's saying, how to find the cheapest right tail in the market?
Cheapest right tail in the market. When VVIX is low, I would buy VIX calls. That's a pretty clean one. And that also kind of covers your bases in the event we have like a spot up, ball up kind of crash, which we have had a couple of those. And it's also easy just as like a standalone. Some of the cheapest expression, like some of the I should say this. If you're looking for a hedge against a big crash, I'll pull up.
What's a basic hedging strategy that you don't lose money on, or if there's market crash risk, you can put on and not lose your ass.
So one thing that I like to do when I think that there's going to be a vol spike if we crash is pick maybe, I don't know, 6 to 9 months out. It depends on your time horizon, but pick a strike that for whatever reason, maybe it's a moving average or it's
weekly moving average, 0 and a 5 in the end of it.
Maybe like a 200-day moving average, something that where you're probably
200
going to breach it. It's going to be strong support, right?
Mm-hmm.
And sell that strike, and then pick 5 delta put options below it, and buy as many as you can for even money on the premium side. This is called Vega convexity, and Bank of America pitches this a lot as they call it a W trade. I think the idea is that you have kind of a cushion because you'll probably just keep bouncing off of this thing, right? You probably will just bounce off the moving average, but if you breach it, there's a real non-trivial chance that it'll be a waterfall and a volatility event.
It's almost like a ratio, right? Or no?
It's exactly a ratio, exactly like that. It's a 1/3 where you have you're short the 1, long the 3, and you're kind of Vega neutral. But
if you blast down, you're making bank. If you go up, you're going to be slightly above or break even.
Exactly.
For the window, you can't carry that fucking trade forever, but in that window of fear.
You got to roll this one. You got to roll this one because what you're playing for is a vol spike, and so you don't want a trade that's exposed to a lot of gamma, which is why you need to go a little bit farther out in the term structure, because it gets a little bit scary if it's actually gamma that you're short. You don't want to be short gamma there. You want to be short delta, but not. Or sorry, you want to have a short put which has real delta to it, but it's far enough to expiry.
Far enough.
A lot of gamma. But it does have these 10 delta options. They're 10 delta put options or 5 delta put options. You're going to have things that work for you just like gamma, but it's gamma of volatility. So if we do waterfall, your 50 delta put has no convexity in its Vega. It's just going to go up or down, kind of like 1-to-1. But those small puts that you own, because as you raise implied volatility overall, they creep onto the distribution and they go from 10 delta to 20 delta to 30 delta, even if spot doesn't move, even if it just statically sat there, but vol went from 20 to 25 or 30, suddenly you don't own 10 delta puts, you own 30 delta puts. And now your whole position is not flat Vega, you're long Vega. And so you're making more and more money as volatility goes up. And so it doesn't take a lot. And then at that point, you actually pick up some delta that you can hedge because obviously that 50 delta put, again, because of Vanna, the at the money has no Vanna. It's not going to change. Or even if you're just slightly through it, you don't really have a serious Vanna influence until you're at 20 deltas on either side. And so if you fall through that strike, you don't panic and puke it or whatever. You allow the dynamics of volatility to work for you. Because if you go lower, what's going to happen if vol goes up? You won't really see you get shorter any volatility from your short put, but you'll get longer volatility quickly and an accelerating rate with your long.
You can even cut the other leg off and just ride that.
Exactly. Yeah, you could do it. You could, and that when you have those
ride that put delta all the way into the money.
Exactly, and you can find, like, this is the holy grail, kind of like playing around and trying to find positions that you don't really have to pay a lot to put up. Like, yeah, maybe there's some capital or margin at risk, but in the end, you want to find something that we didn't really pay a lot for, but you have something to work around if the outcome happens. Like, you have a tradable position to have flexibility to maybe sell out one of the puts and then plow that money back into reinvestment in the equities or whatever you're going to do, or just cut it all together if it's worked for you. And similar thing, same idea, but even farther out on the tails, same tenor, around 9 months. This is a popular tail hedge. You guys would all know the author of the book, who is the impetus for the strategy. What they do is they pick, I'll put a meme on my Twitter because it's complicated, but basically it's like a really, really, really far out of the money put and actually sell additional units farther out of the money, and it's cheap. It's like they pay 60 cents for this thing. You do have to put a margin, obviously, because you're net selling a unit, but you could probably fly it off and make it still a pretty cheap play. And then when we go down, their whole thesis is that the put that you own does wind up benefiting from these volatility dynamics that I talked about. But the put that you're short is so far down, and by that time the distribution changes so much that just tactically, fundamentally, it just gets buried under the weight of its own.
Do you mind posting a link to that so I can read it?
Yeah, I will for sure.
Thanks.
But I'll post
or
send you a
post it
trade
in a
too, if you
DM or
can.
something like that if you don't want it in public.
Yeah,
something
yeah.
like that.
For sure, I will. I think I memed it recently. Actually, it's a, but the idea is pretty basic. It's just like buy a very long dated put 1 by 1.5, and they've optimized over time for the strikes that pay off. They buy those, and the strikes that just don't do anything for you, that lose money on these moves.
You just
they
roll or
sell
shed them
those
or no?
things. They just keep it. And then what happens is when this is actually a very good bottom signal too. Because I've been on both sides of this trade. I've sold it for 60 cents and I bought it for $40. And when you buy it back for $40, it's usually because things have gotten to a point where those dynamics aren't working anymore, and it's a very, very probable, like solid bottom. You're gonna like shoot up, and that's when you call. That's when I joked the other day. I said that's when you call your broker, you get a quote, you say, if I'm gonna sell, the 40 delta put 12 months out or whatever, how many calls can I buy up 15% for even money? And you just say done and buy as many calls.
That's right.
Rocket ship. Yeah.
I love negotiating.
Yeah. Those are my favorite when you're negotiating contract size.
Okay, so here we see. Let's check in really quick. Here we got.
Oh, can I say one thing?
Yes, dude. Say whatever you want, dude.
On the tail side, I can't say these are necessarily cheap right now because these kind of track things like VVIX, like the way they work. But it looks like right now, today, some of the interesting flow, which is new and discretionary, is buying a bunch of October 5 delta puts. So
buy a bunch of October 5 delta puts.
That's like the pick to click right now. It seems like October is kind of heating up for whatever reason. October and end of October. I don't want to like
end of October, huh? Oh yeah, maybe that's for the October 1 that they were asking about.
Like the nice thing, I said this in my newsletter too. I said if you want to hedge now, like pick, there was a steepening where obviously everybody's hedging the election. What happens when everybody funds their trades? They buy calendars, and so that puts pressure on the October and the stuff in front of the calendar, and it bids up the stuff behind it. So if you just follow that, you're going to do the same thing, but you're going to be late to it, and you're going to wind up being in the same crowded trade and paying for expensive hedging. What you can do instead is just, especially because if you look at what's going on without even getting political, it's like plainly stupid. Like this seems like a retarded movie that we're all suffering for the last 10 years. It's just broken. It's like whatever you decide, it's like it's so messed up, it's broken. And so how can you think that like this is going to be a smooth process? I keep saying electile dysfunction season. It's completely true. Like this is all messed up.
Dude, they're all going to be like I was telling people just 2 weeks ago, dude. I was like, I think it was like last month or something. Like, look, we're going to start heading for this election vol until like October and shit. I'm like, and you're going to be drinking the fucking Kool-Aid that we're going to crash the market down to zero, and every asshole and their sister's going to be in these fucking puts hedging strategies, and you're going to be drinking the fucking Kool-Aid. And they're going to reverse this fucker straight up on you in like October 1 or so. I don't know if I said October 1 or I think it was October 1 or something like that. So.
Yeah, I mean, we very well could.
You've got that interest coming in right now for that late October print, right? Down to the downside. They'll likely take that or harvest those in early October. Need some bag holders in the month of October.
Yeah, so this stuff was cheaper, 2 weeks ago. I like to call myself out sometimes because if I don't, who will? But I flagged you should be buying end of October puts because it's long enough where if we do get a surprise rate cut, that'll pay you off a little bit. And also the delta will work for you on just the index selling off. But also because it's...
Wait, say that again? You're saying if you get a rate cut, you're saying that if they know they're getting a rate cut, they're going to purchase the market for the cut, then sell it?
No, a little bit more mechanical. So like if you trade puts that have any duration to them, the SPX is a cash index. So nobody knows, for example, exactly what to price it on, except you just use an arbitrage constraint and you solve for like what's the equivalent future price, right? Your forward price. And so when you solve for that, there's like this forward curve. And at the end of the day, what makes it go steeper or lower, like for example, most of my career I spent trading in an inverted forward curve because rates were so close to zero, dividends were not zero. So you had a benefit to hold the stock instead of the future. Now you actually have a benefit to hold the cash because rates are non-trivially high. And when you do that, it means that the forward curve is upward sloping. So for example, the fair value of, I don't have the numbers right now, but I did a tweet about this and explained it. The fair value of like the 1 year out contract might be like up to 3% to 4% higher, right? Because it's a spread between the dividend and the rate you get on cash. Now what happens, all the puts are priced on that. And there's a very, very tiny premium in the end for like row, whatever interest rate risk that gets embedded in there, but it's very small, like negligible for our purposes. If they cut rates because of some emergency, like clearly there's a bad thing going on, we're probably going to crash. Now, if you crash...
Do you think there'll be a squeeze immediately, then a crash? some liquidity to go down or no?
I mean, there could be. There could be even just like a squeeze because you're unwinding pair trades, and it might be like a blow off top in one thing and then it's selling another, and then it stretches things, and there could very well be. But if you're thinking longer term and you have maybe 3 months to work with the trade, and they do cut rates, like when they cut rates, that immediately starts to move the forward curve down. So for example, if you own December of 2025 puts and they cut rates like emergency, like 2% or something, even if the index doesn't react because somebody sold a bajillion iron condors today, even if the index doesn't move and your puts like seem like they've done nothing for you, what actually happens is the year out forward reprices significantly. In this case, it could be $100 reprice. So your puts might be up $50, but you're staring at SPX flatlining. What's happened is the forward, the fair value of the future price has repriced down $100 because of what happened with rates. And so I try to explain this where like you can actually get kind of a double benefit if your hypothesis is that what may happen is a deterioration in the macro backdrop, the economy, with an emergency, like the Fed's always late type of rate cut, there you can't do anything but have the sell-off kind of emerge. And if you do that, index, very basic, very plain vanilla index puts work for you in both ways because they pay off if rates go down and they pay off if the index goes down.
What about what Andy Constant was saying? They priced in the rate cut in February, March already earlier this year. I think he made that statement.
All that stuff gets baked in instantaneously. And so what I'm talking about right now too is not even like it's a binary thing, whether the Fed does or doesn't. When you price your forward curve, you have to be thinking about what is arbitrageable at time zero. If I were to be sold this contract and I needed to arbitrage it or spread it off, what are the sequences of things I need to do and to lock in to be sure that I'm not losing money on either side so I can go long, short, and balance it out. So all that stuff has to be priced in now, not like an expectation. It can't be like an airy fairy, like we may have this thing, we may not. It's got to be like, I have to go to the SOFR curve right now and price it all out. And so it's the same thing when you see, for example, like.
Do you think SOFR and STIR matter this week or no? Sorry, I keep taking off tangents here.
Oh yeah, I think they always matter. I mean, what gets interesting now is like I think the hard thing to read, and I think we've already seen evidence that this is hard to read, and that's why I like how like McElligott talks about this a lot in his notes.
I fucking love McElligott, man.
Yeah, he's a great guy. He's awesome. He
Sorry.
likes vol signals too, which is a great thing to hear. But what happens is like he brought this point up in some of his notes too, that like CTAs are a massive player too in trend and momentum, and they have the same type of approach that they do in equities. They have it in bonds. And so, for example, everybody, I think for the most part, is framed to think about rates, rather the rate curve, as an economic indicator. As something that's responding to a collection of sophisticated participants and Fed reading, wizards and Nick Timmeros in the Wall Street Journal, whatever your like magic wizard is, like they're all responding to these guys and they know something that you don't. The fact is, when these CTAs buy a ton of futures because they're trend flips, they push rates down significantly. And then everybody thinks that something's changed in the Fed calculus. Well, did it? And like, no, like somebody's computer flipped. And
yeah, so, that's not agreed.
Trend signal flipped. Yeah, and so you get these
two different trades.
You get a very difficult regime now where like, no, rates there's billions of dollars in CTAs, trend following strategies, in rates too. And when they were record short, at the end of the day, if these CTAs are at record short levels or like max short levels, they can't do much at that point besides just grind it out and carry or inflect and reverse and then cover that position. And I'm not going to pretend I know the mechanics down to a T, but the point is pretty basic. You don't need to overcomplicate everything. If they're crowded short, the only thing they can do is buy. And all it takes, they're not going to buy because Powell said something. They're going to buy because they're trend flips.
That's fucking trend flips, dude. Like, and then they'll make up a goddamn story like,
trigger, right? Everybody's trading a trigger. It's the same thing. It's everywhere. And then everybody makes a story around it, like, oh,
dude, tell people this in the show every day. They don't believe me. Like,
that's true. But we have to have reasons all the time. Everybody needs to have a reason.
Need a fucking reason for a story for the trade they're in.
Exactly. Yeah. No, it's just systems. And that's the crazy thing too, is like the systems have an impact. It's like I get asked this all the time. I'm like, well, won't this just dry up and not work? I'm like, well, no, because how could it? Like the only way for it to dry up and not work is one or two things has to happen. They have to find an outsized pool of liquidity that's completely dim and not visible to us anyways. And so there's no chain of transmission. And somehow it doesn't link to the products. or they have to change their strategy on a dime, which is fundamentally not what they do. And so when we blew up in 2018, the index just cascaded down this waterfall of broken options. Like functionally, these guys at any point could have been like, hey, this is messed up. I remember I was talking to the guy who ran Harvest UBS, like over an anonymous Twitter DM, as a cartoon character. He didn't know who I was, obviously, but I was like, dude, this is bad. He's like, well, we can't change it. Like, you can't change anything. You can't all of a sudden, you have a prospectus, you have clients that you sold the product to, you have all these people that registered reps like pitching it and selling it, and banks that are running it. You can't just be like, oh, you know what, this time we're not going to do what we said is in our rules. Like, no, you have to do it, even if it's painful.
Yeah. That's people don't understand that about Kathy Woods too. Why she gets triggers to buy and sell. Like, it's inside of her. Like when she says like only 10% of my portfolio can be this. Like, why are you selling this stock when it's up cranking? It's been cranking all year. Why? Because she can only hold 10% of this one ticker. I'm like, it's like a mandate in I forget what it's called, but like a charter for her fund where she has to do specific things. It's not like this one fucking time we're going to change it all up. There are rules and legal reasons why she has to do certain things. Like required.
It's like the same thing. It's like the same with pension rebalancing, all the stuff that happens. Yeah. That's governed by rules. And so the only thing I started like my account just to correct people who were saying stupid stuff. And I was like, well, maybe this is kind of fun. I'll see where it goes. And I was like, I want to put together a framework for figuring all the rest out, because I knew options very well. I knew CTAs pretty well. But it's funny, as you look around and you kind of learn more, it like turns on a light. You keep turning on a bigger light. You're like, wow, there's structural effects, there's pension rebalance, all these things. If you can just solve for like one more rule and be sure that the rules behind you are still pretty correct and in place, like you'll get better and better and better and better at spotting the right inflections, the right times to ride trades, to cut them, to enter, to exit.
So I try to keep that simple with people here. I'm always afraid that they go down the rabbit hole too much, and they're this has to happen because this is happening. I'm like,
it's a big picture. It's a big picture, and it's kind of cool for like people who are into like, I'm not a quant by nature. I'm a poker player. I like systems, interactions, like big scale things. So it's fun to me to like try to put together this puzzle of like, okay, how are all these components working, and where do you find the next set of rules that is going to cause an interaction? And of course, a lot of the interactions,
like they said, that the next set of rules. I like that.
Yeah. Exactly. And there's always a next set, which is cool. And by the time you find it, there's like two more, some nerd has figured out to like create a new product. And, there's no shortage of all these structured products that keep coming out, and they all have their own sets of rules. And so it's a cool game where like you can keep getting better, and it keeps getting more fun.
Let's see what these, let me see what else these guys are saying. These are conversations. Algos look like power about, Career Low is saying, thank you for being so thorough. Rate cuts make puts more expensive, but does it still impact put premiums when rate cuts are only being priced, but cuts don't happen?
As long as the futures curve, like the SOFR curve, is what it is, that will define the forward curve. And so if rate cuts, for example, like eventually what you won't have happen is a situation where you buy it with this thesis and then you wait for 9 months and that doesn't happen, and you lose like some binary amount of premium because it's an evolving thing. So as market participants, whatever the read changes, or as CTAs transact, what's always happening every single day is this continuous calibration to the SOFR curve and the spread between the SOFR curve and the dividend, the expected dividend in SPY. So if you wanted a kind of a proxy to see how this is working out, the CME, I'll put a link on my Twitter too. The CME has you can look at the ES settlements and see basically what you can plot this forward curve. There's probably a tool to do it in TOS too, I'm not sure. Then you can look at SOFR futures. And when you see, like, for example, Fed implied cuts be pulled forward, or when you see, for example, more cuts priced in, all that stuff is still just expectations. They haven't actually done anything yet. But at that time, when that change happens to the SOFR curve, and that's the same time the change happens to the forward curve, and the put premiums will behave just like they would if the SPX dropped, just on a delta function. It's not like there's some complex, like the row function is a very small piece of it at that point. When the forward curve drops, it's just like SPX dropped. They'll behave pretty much the same way. Hopefully that answers the question.
Let's see. He's typing right now. See what he Right here.
So you could have a thesis where you don't have the benefit because the rate cut never happened, but you wouldn't be penalized necessarily unless, for example, rates spiked, which would have the opposite effect of like the back rallying.
We're getting so close here for a turn to the upside. We're getting fairly close here. Not quite, but it's like we're waiting. Boring. Hold on one second. Career low. Do you mind if I bring this is a longtime friend and mentor and moderator of ours. Career low has been asking you some questions. Do you mind if I bring him on the show for just a moment so he could just talk to you briefly, or no? Is that okay with you?
No, go for it. I like him. Yeah.
Yeah, cool. Give me one quick second here. I'm gonna send let's see if I can nope. Dude, I'm like looking at my DMs, dude, my like the 3 or 4 emails that we do, and then the emails for the website, the emails for me and the business emails, and then the DMs in Discord, and then I'm like, I would probably spend 2-3 hours a day just answering questions.
No, I know.
Let's see if where's Career Low on there we go. See if I can pop this in here. Nope, wrong one. Nope. Dude, what is going on with Well, they're making some changes on X right now that they're not all interacting well with each other. Let's see here.
So it's weird. I think your chat went stale for like the scrolling chat went stale, but I think it's a browser issue, right?
Well, what I have is YouTube and Twitch have hard limits on how many.
Oh, okay.
Let's see here, how do I do
So are
this?
these chats that are coming up in yellow on the screen, are those Twitch?
So what a copy that. So the idea here is on the back end I use Streamlabs, right? And I stream to multi-platforms like Twitch, YouTube, TikTok Live, stuff like that. And there's keys that I can get around the world to live stream on these different platforms. They don't like each other. They want you to be exclusive
Yeah.
with their own platform. Then they'll like send me things like, "Hey, do you want to be with us? Do you want to be an affiliate? Do you want to be a partner?" And if you restream, they limit what you can do. So when the chat is coming through on YouTube and Twitch, for me to then take that chat and repost it in the stream live on the screen here, like the scrolling stream, they'll have some hard limits for every hour or two that you're streaming. Like you can only have so many comments from YouTube restreamed on the screen, stuff like that. And it has more to do with like everyone right now has their own. What should I say? Let me rephrase this. There's a civil war going on right now in social media that's under the surface that a lot of people are not aware of. A lot of users, consumers are not fully aware of. So you can see it with X too, like Twitter, the everything app, all that kind of stuff. There's a fight. Then this is reason why too. You see, some people say, Elon used to like the Democrats, but he doesn't like them anymore because they turned on him. He built this, EV car company, and he expected all the adoration from Dems, and they turned their back on him. So he's going to go with the Republicans now, or stuff like that. Truth is that we're going to become more granular in your consumption habits as a person. and they're going to play into your fears. What makes you angry, what makes you happy, and you pick your own little fiefdom, like a kingdom, and you consume and spend money and your time. You get your insurance or your trade stocks with, believe it or not, with Google or with YouTube or with Twitch or with Reddit or with whatever fiefdom you want to be in, wherever that is. And so in the background, if you're a content maker, and any kind of content maker, it doesn't matter if you're, I don't know, posting charts on Twitter or videos on YouTube or wherever, what you find in this happening is they turn the screws on what you can and can't do over time. It becomes more constrained to where you're, number one, you're forced into charging money and more money, and they want a cut of it, and they want you to use their processors, and then where you can present your content, even if you still own your own content, where you can post it and where it can be and where it can't be at the same time or simultaneously, or even later rebroadcast, stuff like that. And so that constraint will become more and more and more the next decade or two, to where you'll be hemmed in to a service. So that's the garden thing we were talking about earlier, right? When you're in a garden, like when you're in Apple, it's hard to leave Apple. Career Low, I just sent you a link to join the stream. If you can join us either by video or video and audio. If you show video, Career Low, it's not showing on our live stream. So if you're out there, just click on the link to join, and I'll let you inside here, and the three of us will have a conversation. So just back to that conversation. So what's really sucks for me, right, is like I'm doing this stuff like free and all this for years and stuff. No big deal, but then it started costing money, time. And then what I can and can't do, then I'm like, oh, I'll take some donations. And they're like, well, you can't just do that. You have to do this. And then you have to do this. You have to do that. You have to do this. Now we want you only here. And also, hey, what's going on, Career Low?
What's up?
Are you here?
Hear me?
Up in. I could hear you there.
You want to do a sound check really quick, Career Low? Just say test 1, 2, 3.
Test 1, 2, 3. Test 1, 2, 3.
Yep.
So most of this community knows Career Low. So Career Low guides us. He's our like resident gamma guru, and we'll all be sitting around going this, that, and the other thing, and all of a sudden Career Low will be like, well, this, and this, and sure enough, saves our asses more times than not. And he's very low key. He's like a really cool, super low key guy out in public and stuff. And I know that he loves you guys. I know he loves you too, Vol Signals.
He's
so
like one of my favorite followers.
Yeah, dude, he's badass. So you guys start talking. We'll just listen.
Well, I'll let you lead then, because I've been talking all this time.
Well, I don't know how to follow all the things that you've been laying down on us.
Hopefully, it wasn't too confusing. But if you want to walk through or clarify anything, feel free.
Well, I'm definitely going to have to go back and read and listen to the recording, assuming that it's going to make it available. But no, I appreciate all the work that you've done over. I think I've followed you for like a year now or something like that when you first came on the scene, and I think you turned me on to Options Depth too, which was also like a really useful platform that I turned into.
Yeah, so. It's funny too because all this stuff kind of just unfolded. That's the coolest thing about social media, and like. Cap's point is interesting about the gardens and stuff. There's also still so much opportunity because I didn't really know, where this would go or whether it was interesting to people. I was like, do people even care about gamma? There's like 4 people on Reddit that are saying the wrong thing. I just want to correct them and see where it goes. Then I built a subreddit and started talking about banknotes and option flows. And then before I knew it, like people were just like, this is so cool. Where do you find this stuff? I'm like, oh yeah, there are no books about this stuff. There's no books that like cover all this weird niche domain stuff that is starting to really transact or transmit an influence to the market. And there are a lot of smart people out there. There's like, I've joked before with people, it would drive me nuts. I'd be sitting at my office on a trading desk and I'd be just keyed in and I'd be just like completely swallowed by what's going on in front of me. And I love the job. I love the energy, the risk. And the guy next to me, I'd be like, what do you think about this puts? What do you think about this? And he's like, oh, what are you talking about? Did you see the football game last night? I'm like, dude, come on. But you go on Twitter and there's like a niche that forms around you. And it's like, it's amazing because so much growth happens in these communities too, because everybody cares about the same thing. And I live in the middle of like, a deserted island, basically, effectively, where like there's I'm by fishermen, so I'm gonna walk to the guy next to me and he's gonna be like, hey, it's lobster season. But I can't talk to anybody within like 2 square miles about options mechanics. But thank God for the internet.
So true.
Yeah, I know exactly what you mean. That's what I thought. Like, I started on Reddit, and like I was actually in Wall Street Bets for like the GameStop thing, like actually originated.
Oh, nice.
And then I held off Twitter for so long because like I didn't really know what it was, and I was like, who cares about what like people are thinking? I don't want to see someone tweeting all day. I don't really care what they're thinking about. Or like
Exactly.
on the bed, whatever. And then I found out about FinTwit, and as long as you can curate yourself like an effective timeline, there's no limits to what you can learn just by being on the site.
Yeah, it's cool.
But
So what was career low? You were asking about the tail risk earlier. Do you want to go over that one more time? You were forming some questions in the Discord. Do you want to rephrase them again and make sure that Vol Signals was able to answer them clearly for you?
yeah, I guess one of the things I've been focused on is obviously volatility been compressed for so long, right? And I think my initial interest, I was intrigued initially by Jem Carson talks a lot about blow off top scenarios where you have a volatility expansion and you have your right. You only hear about left tails, right? But
yeah,
no one ever wants to talk about the right tail, and that's like every time you look at a chart where there's a crash or correction or a left tail, it's right after the right tail happened first, right? So I found it difficult to identify materials that will specifically teach someone, how to manage or identify a right tail opportunity, I guess.
Yeah. So, sorry, my dog is barking like crazy in the background. Hopefully that's not coming through. So yeah, I try to talk about this stuff as much as I can, but I'm kind of scatterbrained sometimes. What I tend to look for, like November, for example, I thought that was a crystal clear opportunity. I suffer from the curse of market making. I think there's this weird continuum where you're an equities guy and you're always bullish. You're a market maker and you're kind of bearish most of the time, or you're a bond guy and you're the world's ending apparently. But I'm in the middle where I've been conditioned for volatility, and so I'm always kind of leaning a little bearish and kind of correcting out of that. So I actually kind of loved how last year the best trades I had were actually some of the big rally trades. And so in November, that was a great opportunity. And one of the reasons, again, why it's so valuable to look for these things that kind of coincide, a really good spot up, vol up moment, in my opinion, lasts longer than just a day, right? Because if your thesis is spot up, vol up, it's really hard to nail the timing. I would never tell you that I would be able to get that exactly right. For example, when we rallied to the highs last time and VIX overshot a little bit. And also there's not a huge payoff there, in my opinion. You have to be very, very tactical and use kind of instruments that are probably you're not used to using to make anything of that kind of hypothesis there. It's easier from my perspective to catch these inflections or moments where you're running away from a concentration of gamma. And so what's happened a lot over the last 2 years is there's a ton of overwriting. It's actually kind of a mystery to me where some of the overwriting goes, because JEPI's huge and they seem to disappear into the vault somewhere. Maybe, who knows, maybe somebody needed that delta and didn't hedge it. But as we move through concentrations of, yeah, exactly, who knows, right? And so, but as we move through concentrations of overwrites, for example, what I try to make this point, if you're a market maker, you kind of just want no exposure. And so your game that you play all day is okay, hedge the first thing, that's delta. So make a trade, hedge it, goes into a big black box of systems that just keep your delta flat. All these other things are kind of harder to hedge. And in the end, yeah, you can buy options and hedge them with VIX futures, but that's not perfect. There's slippage there. There's basis and correlation, all things you have to do. You can also, at the end of the day, the only way to be perfectly hedged is to just sell the same inventory. That said, so let's say market makers are long a concentration of options that were sold to them from overwrites, market runs through them. Usually you're going to have spot vol correlation be normal. You're going to go up and VIX is going to go down. You're going to go up and VIX is going to go down. Once you get through that chunk of inventory, that mass of Vega that's kind of on the dealer books, is what is causing that relationship to exist, right? So when there's volatility to the upside, and sorry, I should be more clear when I say this. When dealers own a bunch of options with strike prices above the at the money, as we go to them, it's natural that they're getting longer and longer vega, and so they drop their bid ask. They're more sensitive to being sold options because that's working against them, and it's dynamic. Once you move through it, if you keep going, Vanna works the other way, where now if you continue to rally, all of those strikes that they're long are left behind them underneath spot, and now for every dollar you go higher, there's less vega that they're long. And if you think about it from the lens of like they're trying to dynamically hedge, and they're resetting to zero on some iteration, they're getting short. They might not be short like because that position is in the inventory, but they're all spreading this all around and laying it off as best they can. They're trying to stay neutral, and so if they're moving higher, they are more short or less long than they were $5 lower, and that process keeps going. And if we rally, you get to a point where like they might not even own vega at all, and suddenly you're in a position where your systems as a market maker, the way you usually strategize around these moments, if someone comes in and sells you options, there's a bit of a relief, but there's a bit more firmness in your bid because you need to cover a little bit more than maybe it's just this one, part of the sequence. If someone, however, comes and buys, if the next thing is like someone comes in and buys calls from you, but you're not even long any vega to give anymore, and you're actually concerned because of the volatility slope, you're selling calls that are pretty cheap now. We've just realized a pretty high volatility. Suddenly, you're very sensitive. You sell these and they go up fast. That's when you see kind of vol spikes happen quickly. Usually it's when you're through a lot of calls already. It's on days when like you're probably realizing fairly well, right? So like on a 16% IV, that's about 1% a day. If you're somewhere in that range when VIX is like 12, there's a natural problem there because the gap is wrong. You're realizing more than is implied. And if market makers aren't long vol already, they're going to quickly be raising it, and that'll show up in this kind of spot up vol up dynamic. And there's two things that can happen. Usually it's skew that moves first. So like skew will move the relative price of calls versus puts will just kind of seesaw, and so calls get more expensive, puts get cheaper. That's not as clearly visible all the time in VIX, but it is more clear in fixed strike vol. You'll benefit by owning calls there. And so I think that's partially why VIX calls have been popular. And there may even be a reflexivity too, where some of the VIX call dynamics feed into this. I'm not quite clear on whether that's really driving it or not, but certainly like VIX calls benefit bidirectionally. Like you don't need to sell off. You can actually have spot rally and have spot up, vol up, and then VIX go bid. But again, that's all like very tactical and short term. The best trade I saw was in our Discord. I'm not saying like we pitch trades in the Discord, whatever. We just talk about trades that happen. It was before we came off. So in November, when we were running into this, again, this is seasonal. So at the end of last October, I hope everybody understands what kind of happened structurally because it's all very powerful. It's not just like one thing. It was all these forces came together. And so we had severe negative gamma in the options complex above spot, above where the SPX was at like Halloween. We had additionally, like we had basically exhausted all of the CTA selling flows. So all these trend followers flipped to max short because they've exhausted themselves selling every level along the way. And now instead of, we've had recently, they're just max long and they dip a little bit and then restore it. They were max short. So they can only really start buying. Same thing with vol control. We had so much volatility. We had implied vols tick up. They were delevered. Their next most likely thing is to have buying flows mechanically kind of come into the fray. So you have all these big participants, and you have short convexity to the upside, where if we start buying, market makers have to start buying more. And then on top of that, you had like the end of this seasonal window that had to do with like the fiscal or tax season for mutual funds. And so you had the seasonality that was anticipated. It did hit right on schedule. And then all this stuff kind of unfolded at the perfect time. And there's even more to it. I've done so many write-ups and tweet threads and newsletters about this, that then when you started to see big discretionary hedging programs, I'll never forget, like in the summer before this moment, there were a lot of big, very large discretionary put spread blocks that were much like the JP Morgan collar. But there's not a lot of those. So like when those happen and they're not timed, meaning they're not like on schedule, programmatic, routine, it always raises my attention level. When I see like a 15,000 or 30,000 lot of a put spread, that's kind of like a big program hedge hit, but that's unexpected. I take that seriously. So when all my signals for the systematics and all these things were kind of flashing, you know, to say red, but like it was kind of like signaling that all these are exhausted. We have no more room to keep pushing, and there's real short convexity right above us. And then you have things like just these guys come in and they dump 10,000 put spreads at a time, 20,000 like November puts, these short dated options that start hitting, and you see vol dropping. That to me was such a clear moment to get long for a really, really big swing up, especially because we had December seasonality coming right around the corner. There's a lot of reason to believe that we just swing up and then just rock it. It went even farther than I thought we would. But the trade at the time that I remember seeing was I think it was the February. It was like the February 29th or 28th. I forget it was a leap year or not. This year was, but it was the end of February, 5,000 calls. We were trading 4,100 and change. It looked ridiculous. And I remember saying, like, this is a great trade. This is like you're paying 90 cents or like $1, whatever it is. This is the type of trade that once we shoot through the short gamma and then we start to trigger CTAs and we keep going, you don't need to time this. You have a lot of months for this to work out. And as it starts to pick up, as it starts to creep back onto the distribution of implied vol, suddenly it picks up value much faster. And then if vol starts to pick up again, and then also what happens when you have these sharp rallies is skew tends to go towards like tilt towards call, meaning like these percentiles, it'll be like flat. And sure enough, what do we see all the way until April? Skew is like on the floor. And so when Nomura writes about these percentiles, what he means is that calls are really, really expensive relative to puts historically on a one-year look back. And that happens when you have these sustained trend rallies, and all that stuff puts vol into those calls. And so I think by the end of the sequence, you know, like a $1 call that you really had no risk on and you had a lot of time to either abandon or let work for you. If you look at its price chart, it almost never really worked against you. It was always above what you paid for it. And then in the end, you could have sold it for like $30 or $40 easily. So it's positioning when you're running away from positioning. It's kind of upside gamma. Hopefully, I really hope that options depth builds out a Vanna portfolio or a Vanna indicator. Because right now, the only service that I know that does this, I think, is Voland, that wizard guy, which I think is hilarious, like the imaging. But I don't know that he does it in the way that I would want to do it. Meaning, I think he has defended his process, and I think he's reasonable. I don't really want to, I don't want to speak out of turn about anything, but the reason I like options depth is because they actually take the expensive data set from the CBOE that the banks use, and they then construct the dealer portfolio properly using what the CBOE has signed off on, and saying, yes, that's owned by a broker dealer, that's owned by a firm, that's owned by a customer, a pro customer, or a market maker. And so you choose the subset that's most likely to be hedged, which is the opposite of the pro customer and the customer. All of a sudden you have the part of the inventory that matters. And it's not some smooth curve that's kind of like a pretend crayon drawing of gamma. It's like a serious, like choppy, messy roadmap to what really is what we experience as a market maker, if that makes sense. And so as vols go higher, Vanna is going to come into the fray a little bit more too, and you'll see that it works just like gamma. Spot up, vol up will present itself in the most like simple way. You know, all the stuff I just explained, all that stuff is like, you can simplify it if you have that type of map, like options depth has for gamma. If you had that for volatility in Vanna, you'd have pretty good trades coming pretty routinely.
I just want to interrupt for a second. I had a question from YouTube asking I had to answer for. Someone says, Simon says, don't mean this in a bad way, but I am surprised you have so much unplanned time to talk here on a day when you have very significant selling. Simon, I don't know if you can rephrase that question or not. I'm not sure we understand or I don't know that I understand.
No, he means like why am I not trading? But that's perfect. So I am writing a ton. So I used to trade like hundreds of times a day. It was stupid. And I sit there and I document everything. And then I was like, this is killing me. I can't do this for one, because I can't turn this into anything that is low volatility and sustainable. I have 2 young kids and a wife. And so I started really thinking like, okay, well, how do I make this into something where I'm using the same signals, using the same ideas, but I'm actually doing this in a way that's going to give me life, not like strip me from it. And so I started trying to structure things that are less frequently tradable. So if you notice, even in my newsletter, I don't really give trades, but I will kind of, you could tell my tone when I'm like getting a little bearish or a little bullish, but I did say kind of specifically like, okay, well, I like end of October, 56 half and 5600 puts. You're paying less than 2% to hedge at the all-time high. but I can't avoid trading tactically. I do like to trade. And so last week I made a mistake and I started selling puts, maybe prematurely. Like I think it was the first sale was this Friday 55.05 put, 55.15 put, because I was being kind of cute. We kind of bounced off the 5,500 level. I thought this is fine. We'll bounce. We'll get a relief rally. We'll bounce. And I wanted to basically spread it off into a calendar trade to take off some of the delta in a way that it could also just melt for me, and I don't lose anything, but I cover some of my premium spend. Well, then we kind of crashed back down, and then Chris Sidial, who I like a lot actually, posted something about like margin requirements, and I was like, shoot, that wasn't even on my radar. How did I miss this? And I immediately went to buy today puts, which is hilarious because my thesis was that we would bounce. And I put this all on Twitter actually too. I usually don't put my trading on Twitter, but I said this at the time. I sold 7-day puts, and then to cover what I thought was weekend risk, I went like 15 and 25 points below the strikes I sold, and I bought puts 3 days out, just in case, because I was like, man, you know what? What I don't want to happen is I had this great hedge set up. We drop like 3%, and then I get hosed because I sold gamma, and now instead of like collecting $30 against the $140 put I bought, I'm going to lose, 70, way more than I'm going to gain on the delta of these OCT puts. And so I went back and I was like, I got to buy some like coverage here. And so it was weird. I kind of like sold puts to buy the dip, and then I bought puts to cover my sold puts because I was just panicked. But the end result was that we bounced, and I kind of wrote this off in my head. I was like, okay, well, I'm net up some premium, and it's not a big deal. Like whatever, misstep. If we bounce, I'm safe. And if we go lower, like materially lower, what I'm worried about, I'm safe. We bounced, and then I got to basically write off the long puts and buy back the Friday puts, the 55.05 and 15 strikes. And then I just kind of, in my head, I just kind of wrote it off. I'm like, we're not going to go back up. I'm going to hold on to the end of OCT. Sure enough, today is like a lotto ticket. We're already well through the 90 strike that I bought as a hedge. And then the path just really worked well for me. I would not say this was like well formed out. It's completely luck. I mean, the thought process of the hedge was completely like adequate in my opinion. I don't think my reasoning was bad for buying the puts I bought and selling the puts I sold, but the luck of like
I missed my hedge this time. But grabbed the last one, but this one I missed. I was looking for one more up.
Oh yeah,
I was looking for the close, kind of rip higher, and then hedge myself into yesterday's bell. That was my hope.
Yeah, and I definitely threw away some premium in June, and then reminded myself quickly. I was like, shoot, just be patient because I don't want to have what happened last year, which was like I got short and then we just blew off the top until like end of July. And I told myself this, just be patient, just wait it out, let it start to take shape first, like the seasonal kind of weakness, and then play longer term. And so today I'm doing a lot of other stuff besides trading because I'm going to put together like a little call on Friday to explain some of this stuff. I'm also building like a product because I want to make this part sustainable. Everyone's always like, oh, why don't you just trade? It's like, dude, you're trading as a business. It's not fun. It's like it's fun a lot of the time, but it's also not easy.
It's not easy. It's not fun. Sometimes it can be really frustrating. It'd be lonely. As a matter of fact, some of our guys here that are buyers are they buy and sell, but when we come into expected weakness, they won't even be in the market. They just go on vacation. We had guys this past 2 weeks. They're just like, fuck you, I'm out of here, going on vacation. Even with this volatility, where you'd think you'd want to capture, but they're just waiting for a fucking low. They make it that simple.
Yeah, so I committed last year to move away from intraday trading all day because like as a market maker, when you're on a desk actively, you have access to so much information. It's not that it's inside information. It's just that your systems are so incredibly robust that you're seeing everything in lightning speed all the time, and you see all the order book all the time, and you know all this stuff like the back of your hand. You can't replicate that ever, really. Like maybe you could try, but you fall short no matter what. And then when you step away, it's actually a really hard thing to try to trade. For example, if you're allowed to trade in your personal account and then you move off a market making desk and you try to still do it the same way, it's like you basically strapped on a blindfold. You're like, oh shoot, what am I missing? I don't even know anymore. And so I committed a lot to like winding down and letting trades work for me more gradually too, because I looked at some of the sequences I had, and it wasn't even a joke. I said before, like 80 trades or something that were losers and one home run. One of my best trades last year was I guess it was this year, technically feels like last year, but on the CPI reversion in February. Like, would I do it again? Probably, but I think I made 100 trades that day. I probably graved like 20% of the hair on my head. And at the end of it, like I got a home run on a 0-day reversal when the squeeze in the VIX contract expired. But like
Guilty on the stream doing that shit.
yeah. And I probably lost. I paid it. I don't want to look at how much brokerage and all this other stuff.
Yeah,
but
1,000 here,
end of the day-
5,000 there, 10,000 there, and then boom! I know one of these is gonna hit.
Yeah, and when it hits, you're like, oh, I'm so good. But it's like, maybe I could do this a little bit better.
Playing averages and probabilities.
Yeah, so that's what I try to walk through. That's why Options Depth, the platform and their stuff is amazing too, because that was like the first time I saw that there was a tool out there that revealed as much as I knew was true through my lens as a market maker. So when I saw that, I was like, oh yeah, it's game over. Like that's really, really good. All these things that I would tell people and I'd be like, just trust me. Like we're short this, we're long this, just trust me. Now it's like, yeah, here it is. Like you can just see it. And so, but that means too, like you don't need to be so chaotic. So I'm trying to be a little more patient, a little more measured, and set up trades with like a little bit of conditions. I think somebody at some point asked in the chat, like, are you only discretionary or are you systematic? I'm trying to blend kind of both, where like I'm not over trading, because over trading is my I'm a very fast thinker, and so over trading is my curse.
Yeah, that's you know what, for me, I just want, so before I was streaming, right, dude, I was like a swing trader. Pretty much. I would dabble in zero dates and stuff like that if I knew it was a trend day or anything like that. Of course, I'm trading zeros, but streaming,
It's addicting.
it's addicting. But the streaming is brutal because now I have to I'm like separating my investments that I'm doing big swing, oversold bounce swings to fund myself. My wins have gone down, or my win rate has gone down stupid. And the size that I can trade zero, because I'm doing zero dates every day in market. Because people come and stream, or people come to watch the show, and they're like, what are you doing today? We streaming? Are we trading today? And I'm like, no, I don't want to trade. And they're like, what are you here streaming for? And you know that people have jobs, or they have commitments, or kids, or they think this is their time, or trend down, trend up, when we're not gonna, or whatever. And even my percentage wins over the course of a year in zero dates, it's not negligible, but it's like 13. Last year, I think I was at 13% gains for the year. I was below the S&P 500, but my swing trading, of course, helped out. But trading day in, day, I think people have the wrong perception on the stream. Viewers think that this is what we as a group do all day in, day out. But the truth is that people come and go intraday trading. They might stop in for a day to do it, and then they're out of here. It's like the group of community changes day in, day out, day in, day out. Like your exposure to this part of the market should be limited. Or taking those.
Yeah,
you should see my fucking taxes, dude. They're fucked up. My CPA and all. They're like, it's a stack. Like,
No, I know. Yeah, those
that
trades
doesn't look
don't
good.
have to be accounted for.
Yeah,
and also there are days too when I would just get up and like my kids are at this age where it's like the perfect time, and I would come out of my office and I'm trying to build this brand idea, kind of just like fumbling in the dark but pushing it forward to see where it goes. A lot of writing, a lot of engagement, and then I'd be like just trading frantically, and then on a call, and then I'd come out and it's like, yeah, I'm supposed to be living the dream here, living in paradise, working at home, and I come out, I look like I've just like that hide the pain Harold meme. Like I'm not even unhappy. I'm just like, you just can't keep up that pace,
dude. That I've told story. Like one time I broke a desk down, an oak desk, beautiful oak desk that I owned. I asked my wife. My one daughter was in school. The other one, of course, was too young to go to school. I'm like, you got to leave the house right now. And I'm not aggressive or any of that. I don't like.
No.
I broke this desk down to small pieces over the course of many hours. It's the stress that you can be under, especially trading alone. Like when you said you lost the 7-figure number, that time is when I lost. I think I lost. That time it was 130,000 or something, 160,000, somewhere in there. It was like one of my first 6-figure losses, and it was devastating. Like I thought it was the worst. Like I was my worst critic, right? Like how did I just do that?
Yeah, no, it's hard. It's hard.
It's gone.
It's like exponential.
It's gone. It's gone. Salary for a low-level doctor gone.
Yeah.
At that time, this is pre-COVID.
Time. Yeah.
This is when $100,000 was a lot of fucking money.
Yeah, it's insane.
Anyways, I want to say thanks for spending the amount of time that you have here Oh, number one, if you're out there on YouTube or Twitch and have a quick question, I'll read the chats right now. If you have anything you want to ask, or if you want to first, and also if you please chime in on Twitch and YouTube, and first thank these guys for being on the show today. Spend the time with us, explaining complicated subject matter in a simple way.
Hopefully it was kind of simple. Thanks for having me.
I think you've done well. I think you've done quite well for nothing formal.
Yeah.
But next thing would be, please follow Vol Signals on FinTwit. He also has a website. If you're not on Twitter, you want to tell him your website.
It's just volsignals.com.
So volsignals.com out there for you. If you want to check him out. He's not paid in any way. I'm not paid by him. There's no like secret hidden stuff going on here. I want to make that known for the people that wonder if that's going on. There's no like secret partnership or anything like that.
I started doing like a mentorship group at one point because I realized people wanted to know how these things work, and then it became clear there. It was kind of fun actually because it kind of filled in gaps of like what people need to know. And I look back on my training and I'm like, well, it was so much of it was on the job, and almost everything I did. I had a finance degree, of course, but really
time in market.
Only a little bit of that. Yeah, it's just time in market. And so I just got really head in the game, into the weeds, and committed to like every day was focusing as much as possible for as much time as possible. And I just got better very quickly. But I look back, I'm like, there's no textbook that was like a magic key, but there's really good ones out there. And so as I've done this, and people are like, oh,
what books do you recommend?
Yeah, so this is what I would say. Like, so what I kind of gravitated towards, like I found, the three that I like. The one is very common. It's Natenberg. It's option volatility and pricing, and that's like the one you get at any market making shop. I think the guy even was led the training department at one of the market making firms, if I remember correctly. But that's a good one for like nuts and bolts, and it's written from a market maker perspective. And we're actually doing a program because I get asked by like college students all the time, and for me, it was like a real mind bending thing to like make something that was like useful for someone who's used to this like textbook learning. And I was like, yeah, let's just do this. The 3 months of like videos every day where I just explain what in the book is useful, in real life, because there's so much that's not. And it's also helpful to like have someone who's done it in the domain to make sense of it. Because if people like join my mentorships, even now I have to find like every day I'm like, oh shoot, I need to build a glossary. I need to go back and bring this down a little bit because they're tough concepts. It's more like it's more appropriate for like a hedge fund consultation. And then like I put together this thing for dealer hedging dynamics because I think it's very interesting, very appealing, and it's actionable right away. And I love when people are like, oh, well, if you're so good, why don't you just trade yourself? Like, well, I do trade myself. But if you're thinking about it, if you're ever like it's kind of two things. Like first of all, I love this stuff and I love having a community of people that like it too. When I was a partner at the firm I was with, like I built the training program and that was part of my job too. So I trade all day, then teach people. I teach all sorts of people. People who didn't know English, people who did know English, people who had no sense of humor, people who were very funny. And people get things in a whole lot of different ways, but that was an enjoyable process. And part of that too is like that keeps you sharp. Like you can't keep going through stuff and teaching it and refining it. If you're honest about it, you can't do that without being sharp. And so that's why, you never need to worry about like asking me a question, because if I don't know a question, I'll just say, well, yeah, I don't know. That's out of my lane, but I'll go try to figure it out too. And so, but back to the first point. So the first book, Option Volatility and Pricing, really good. The next thing I'd recommend, if you're like stepping up through this kind of domain and you want to see more of like how these things are used in practice, this guy was great. His name is Colin Bennett, and his book is free. It's on a website called trading-volatility.com. I think it's just trading volatility, skew, term structure, and correlation. But it's written from the guy's perspective as somebody who ran a bank vol desk. And he's been at a couple of banks. Seems like a good, personable guy. I don't know him personally, but I'd recommend his book 100 times over. And then if you keep going up this kind of chain or deeper down the rabbit hole of like volatility trading, you eventually find yourself face to face with Nassim Taleb. And his book, Dynamic Hedging, is actually pretty good. It's completely useless for a retail trader because it'll just confuse the hell out of you and you'll be so like demoralized if you start there.
Yeah.
But by the time you've thought
I got
through
it.
a lot
Read
of
it.
things, yeah. But by the time you get there, especially if as a market maker, I read, I'm like, oh, that's cool. Like we all have different jargon too. That's the funny thing. Like I can go to a conference and talk to a guy at a different market making firm, and like we could be completely like talking about the same exact thing and not know it because we use different terminology for it because it's all of these proprietary tweaks and stuff. So, but it's cool to read Nassim's book because his book is all about this like second, third, and so on order of thinking.
So yeah, third
really how this all works. Yeah,
third are Greeks.
Exactly. And so that one's like the one I recommend at the end when like you figured out all the basics and you've then seen how it works in practice, then like spend a lot of time thinking about how you get screwed. Like just think about how do you lose your shirt. And that'll make you really good. And so like for somebody applying at a market making firm, that's like those are the three, like the ladder of things I'd recommend. Like just spend a lot of time in that stuff and thinking through the problems and working through the actual like solutions of how do you hedge it, how do you hold and hedge a trade? Like, what does that mean in terms of all these Greeks as they change? It's really just time. It's really just like, you got to put the time in.
Maybe possibly making a turn in the market right now to the upside. There's still risk for downside quick move to tag that 2% target just for the algos.
This is where I come in and panic sell my deep in the money puts.
That's right.
I'm over trading.
And even if we don't have that downside move, we could easily squeeze higher. Try to trade the cross of the hourly and half an hour triggers down on that daily trigger. So there'll be a magnet up here to trade this. Even if we are to reject, even if we leave this behind, come back to it, tag it for later. Just be aware that there is some risk right now for an upside move. Some danger. We also have a bull plane forming on the 1 and 5 minute T, heading up to that half hour trigger. I'll just be aware if you are long puts here that there is some danger to you. If you're short the market here, there is some danger to you. It's not the place to be short. Even if we make the quick move down right at this moment, be a inflection point place. Just take a look at this upside and maybe reposition yourself more short if you're still bearish here. All right, Vol Signals, man, we got to get together and chat right now. I got to make some time to get with you, and I want to know where you live and stuff like that. And I've got kids.
Yeah, we could chat.
If you don't mind, I'm gonna try to make the time now. I apologize for not having, and I really haven't had the time, but I feel so fucking guilty. And you're awesome. So I have been missing out. I really apologize. Is that?
No. I know how it goes. Also, like I get the schedule. Like when you're trying to build something kind of from scratch or it's your own thing, it's like your schedule is chaotic and it's overwhelming and busy too.
Yeah.
Just a quick point on the market though before we wrap it up. I want to say, like, from my perspective, it looks like the kind of level to hold is obviously 54.5. It's like a nice round number, but it's also a short gamma node where if we stay above it as we get to like that, this is kind of called color, but also charm. As we get towards the end of the day, it's going to be more influential and it'll kind of be like a magnet pushing away from the strike. So if we come into the last hour, let's say, and we're still trading between 54.60 and 70, probably pretty safe to say like any influence that's going to come out of the 0-day option position should kind of nudge us up to pin somewhere around 65 or 70. That'd be my guess if I had to guess. It doesn't happen like that all the time. And I don't know what's traded since this morning or when I've said this. Opposite side of that, if we go through 54.5, like based on my read on today's positioning, we shouldn't go that far. We should probably stop within 20 points of it. So that's all.
Yeah, so you're saying let me just see if you get this right. We should either start to squeeze higher or begin to start pin and trade sideways into this bell, right?
Yeah, the most surprising thing to me would be to stick 54.5 for the close, because when you're hedging dynamically as a market maker, like that's the short strike that I see in the inventory, the short gamma node. So if you're hedging dynamically, like everything you do is like two magnets of the same pole pushing each other off if you're a short strike. Because if you go towards it and you're short that put, you have to start selling futures that forces the market lower through your strike, and then you sell more. And same thing with charm. With charm at that point too, if you're just in the money a little bit, what happens over time is like that delta that you have to hedge away decays closer to the absolute value of 100s or the put delta. So all of a sudden, even if it's like 54.47 or something, pretty soon I have to start hedging that put like it's 100 delta. So as time erodes the delta, it might start out as a 50, but my systems, if I was still a market maker, I'm selling additional delta, and that then kind of pushes the market away from your strike. Opposite happens if you are long the strikes. And so what I see, at least for today, is there's like a concentration of longs around 54.30. And so if we do get below 54.5 and if we do get below 54.5 and in between 54.30 and 54.5, there's a good chance that like the hedging influences will be like, there's maybe 8 to 10,000 futures additional to start selling that'll push us towards that long strike of 54.30. So yeah, if we come in above it, we'll probably stay above it. But if we come in below it, expect like kind of a grinding, sinking close towards 54.30.
So that 54.30 is coming into play here, not 5400.
Yeah, well, at least for the 0-day positioning, I see there's kind of
Okay.
a long gamma concentration around 54.30, and I'm sure 5400 is a stronger level. But if we get below 54.5, like the delta influence of market makers both gamma hedging and unwinding their hedge continuously as the delta approaches like a D1, it's going to be selling flows. So like if you're below 54.5, it's all selling. If you're above it, it's going to be a little bit not quite as strong of an influence, but it will be buying flows above 54.5 and probably
During RTH you're talking about?
During RTH, yep, everything during RTH for the CBOS products.
Okay. Any other questions out there? Degens assemble. Someone's posted memes about Degens assemble.
Nice.
Let me see if I can read. I think
if you have any more questions, feel free now. I got about 5 more minutes. Otherwise, I'll hop off and give you the feedback.
One of the things you mentioned earlier was we were talking about like how you want to like look for the transactions like high volume contract strikes out of the money.
Yep.
But what about if you're looking for like a third or fourth moment type of opportunity, isn't the advantage potentially where there's less competition, where there's going to be less if you're holding that strike the other side of someone else's short trade, right? Like a short call, whatever.
Yeah, for sure.
Then ultimately, like it's up to you when you want to let them out of the trade, to an extent, depending on who else is sitting there, right? So this will definitely come into play, and that's where like looking at it through like the lens of poker is kind of useful, and that will come into play. The smaller the pool of participants, the more granular and like strategic you can get with things like that, right? Because that's the point at which like you have someone who's overly concentrated, and that's going to make an impact. But in the S&P, it's harder to find those because there's so much distribution, so many participants. But I should make clear what I was saying before. The signals that I was looking at to like justify making a trade based on what I thought to be a tradable bottom, those big flows that I mentioned were all kind of around the money. So I was aware that there were some very big blocks of puts that were bought when futures were much higher than they were on Halloween. And I was aware there were some very big put spreads that were bought. And I think I still have the history because I used to post these daily, like really like as I hit time and sales in my Discord just to keep them like fresh. I'll have to find them. But I would keep those in the back of my mind, knowing full well that these big hedging programs, when they come back and unhedge, typically what they're going to do is, well, there's 2 things that are going to happen. They're going to, it's actually kind of beautiful. There's like 3 things that happen. So if you think about what a put spread is as a big block put spread, you sink through the strike. And this has just happened with this whale guy who's in August and end of August put spreads. We sunk through 5,600 a while ago. Now we're through 5,500. So all that stuff is short gamma, but it's short gamma to the upside. Okay. And so it happened in November. We did the same thing, but it was with bigger blocks. And it was also with spread of positioning that was like longer dated. It kind of filled in the gaps between, well, I guess it wasn't that long. It was 2 months out at the time. So it's still some gamma and some vega. When you sink through that put spread strike, I think it might have been like 300 points wide or something, or maybe 250 points wide. Effectively, as you move through the short strike, the top strike, and go lower and lower and lower, your position as a dealer actually, in a weird confounding way, gets longer and longer gamma. And so it gets a little bit stickier and safer, even though the market's kind of at this weird place where it looks like market's in turmoil, terrible times. The gamma profile at that point actually starts to get positive because you landed on your long strike of a short spread. It's not the best way to get there, obviously. You don't want to plow through your short strike and land on your long. That's a nightmare. But the facts are it's dynamically hedged, so you are long gamma there. What happens when these guys come back and unwind the trade kind of like really pushes things with a force, because
it robs you of all that gamma, right? So like if they come in and sell that put spread out, they're selling you the top strike back, but that's so far out of the money that you don't care. But they're lifting you out of all the put strike that you're short, and so that like just an explosive short gamma trade immediately. Now, yeah, you were long gamma, but that's all hedged away and neutralized. Now you're short a boatload of it because this big block trade happens all at once. So the dealer profile changes like a snap, and it's short local gamma, and the top strike is so far out, it's only going to slow you down once you've moved 5%. And so that happens, but then there's the hedging too. So like when they dump that put spread, it's probably 50 delta, right? Because the top strike is worthless at that point from an extrinsic point of view, but the strike that you're right above, that you're flirting with, is about 50 delta. So the net of the spread, when you have to buy that put spread back, you have to hedge a short 50 delta trade. And so when 20,000 of these hit, it's like 40,000, or sorry, it's like 20,000 futures to market right away. And so all of a sudden, you have a thrust hit at the same time that you're robbed of gamma. And so if you're in a low liquidity, low market depth environment, it's very quickly reflexive, and the rally gets moving pretty quick. And then to top it off, when these guys unload these trades, they made a bunch of money on their hedge. What do?
You know, long.
Kind of rhetorical. Yeah, exactly, right? They put that money into equities, just like, you know, any of these trades. When they dump their hedge, they're buying stocks. And so these three things kind of like fuel a really quick move upward. And so really, like in a moment like that, I mean, the S&P, there was that call traded. So like some guys in our room, and I followed a little bit myself, just followed onto that trade, right? It was a good trade. It made sense. The additional fact that like somebody bought 10 or 20,000 of those February calls helps to your point, right? Because like that was already a pocket of potential strain. And this is sometimes what I simplify things down to with this talk about dealer gamma positioning. If you're ever at a loss for what to do, just pile on to the dealer position, because the whole point is that like their flows are causing issues that benefit the customer to some degree, right? They're hedging along the way, so it's not like they're losing a fortune on these trades, but in the end, like there are dynamics that come into play that can help you. And so in a situation like that, when you see someone buy 10 or 20,000 of these tiny calls, they might be your best bet to just buy those too, because now you have more pressure. If you keep adding into this, you have more and more pressure. And so that's like a thing you can find as well. Does that kind of answer your question a little bit? So the things I saw to make the decision were not necessarily those like convex plays, but they were pretty clear markers that like, oh shoot, this is going to really pop off now, because all these things like start feeding on each other and they make the move happen fast. And then once that happens, like you look for things that are going to pick up. And so I always tell people, like, if you want a spot up vol up play over the course of 6 or 9 months, like look for an option that's 6 or 9 months out and it's a 2 delta call or a 3 delta, like pick the option that's going to be a 10 to 20 delta call once we start really rolling. And that's because that's when all those convexity things kick in. When, you know, 10 delta is like the Vega convexity node, 20 delta is the gamma and the Vanna convexity node. And so if your thesis is that like volatility will explode the fastest, pick the 10 vol or the 10 delta. And if your thesis is that volatility will go up as spot goes up, then pick the 20 vol or 20 delta. And if you want both of those to come into play as a rally kind of picks up steam, just, you know, somewhere in the range, I would guess. I would just never start out with an option that's has a greater absolute delta than 20.
Somebody say I would start out with an option greater than 20.
If you want like a spot up, vol up, or a Vega convexity play, you never want to start with an option that has delta. You never want to start with options in the center of the distribution. You always want to think. You always want to start out on the tails, and you want to maximize. If you want to maximize the moves, just remember 10 delta is the place where like you're best off when Vega moves. 20 delta, you're best off when spot moves.
I'm watching this these bars right now to see if we're gonna get a new low or not.
This cat might be dead.
Yeah, it's close. We're gonna find out real quick here. We didn't get the new low in the half hour on the hour bar. They started it back here at 1 o'clock, so they made an attempt to take it out here, but it's looking more dead cattish now.
Yeah, I'm looking for a move to like 53.5 to 75. I think before I make the same mistake I made last Friday, which is sell some near dated premium against it. But also I'll be watching too when this big this whale unloads his put spreads. That'll be another signal.
Just a matter of watching here. Next few minutes, we're gonna know real quick here. Shouldn't take too much longer to figure it out. Come on now. Note to you out there, if you are trying to catch a turn to the upside, we talk to people about this all the time in the show. Say you're taking a long position here, you're pushing it up, and you're not seeing the breakout that you're looking for, new highs. You push it back down here, you are looking for a new low. But if you are and you're like, oh, I have my stops down here, I started a position right here, cap, and they took my stops, and then they went higher. Just note that about 85% of the time, you're still given a chance to reposition yourself to the upside before you make the way down. So you can either exit and then reposition to the upside if the turn happens, or you can stay in the trade like I'm going to do, which I shouldn't be doing. I'm going against my own recommendation here. But just if you have your stops here, the point being is if you say, hey, these are my stops, there's still likely a better exit higher. Make sense? So don't panic. If they start bleeding you down, they give you an opportunity usually to get out before they make the roll down to the other side. So managing your risk and your trade, right? Where the pain hits you out there and you're like, oh, I bought this for 10 cents and now it's at 1 penny. I sold at 1 penny and they brought it right back up to 9 cents so that you could exit before it actually went to zero. That's not the best example way to describe it, but just a note out there to you. If your viewpoint is we're going down, we do have a series of lower lows on a half an hour and looks like a new hour, or no, we're at the 1:30, so beginning of a new hour if you trade from the halves. I'm still long here, by the way. Shouldn't be right now, but I am. Calm down, John L. John L's in there. He's watching this too right now. He's like, are they going to slam us down right now?
Yeah, I might hop off for this one. And
are you long here or no?
Me?
Yeah.
No, I'm still.
Yeah, it's dangerous to be long here right now. We have no confirmation of upside.
Yeah, exactly. This is what I've been waiting for. Like I've been trying to be more patient at waiting for these kinds of setups.
Yeah,
And
this is a low probability win scenario for me. I'm in like a 36% chance of winning here. Not like I should be at like 65 and 85, and it's pretty low. So.
One thing that's hard is also making your winners run. Like my biggest problem is
that's me.
Your evacuation. Yeah. You get out of it when it keeps going and then you just kick yourself and you chop yourself up, maybe getting back in. Not easy.
Yeah. I struggle with that too, but it's hard with the timing, like how much time you have left.
Of course, yeah.
So it's like.
Oh, for sure. Yeah.
I'm like down here trying to time trades. Of course, I'm like love buying dips, but then as soon as we start running, I'm like, oh, that's enough. I should get out now. I don't need any more risk in my life. And I'm like, what the fuck are you doing back there buying dips? That's super fucking risky. Like, look at the inverse brain risk to profit thinking of my head is kind of fucked up. I get out way too early, bros. I get out way too early.
Yeah.
And I really want to. Do you think? Let me ask you a quick question here, Vol Signals.
Go ahead, yeah, of course.
Do you think that we have major? Well, I shouldn't even ask you that. We're still in major risk here. We got CTAs are triggered to sell the fuck out of this market here. But do you think this is a local bottom for the week, or do you think there's more major risk to the downside tomorrow, Thursday, and possibly even Friday morning PCE?
I mean, there definitely is. If there's something to throw a wrench in the narrative about the sweet little rate path, my thing has been like, I don't think the Fed is as dovish as everybody else does. I could be proven wrong here.
Agreed. There's only two of us here that think that. Me and Jimmy.
Yeah, and I also feel like there's, they basically, in my mind, they goal seek. It seems like they basically tell you what they want. And they say they're data dependent, but in the end, it's like, okay, how well do they do on transitory? How well have they done this? It's like, whatever. Just trade what you have, not what they say. And if you actually listen to what they say, you can never make sense of it. You have one speaker say one thing the next day and one say it the next day. And if you actually look at what their transcripts are, they just basically cover all their bases. So in the end, it's like, if this happens, then maybe we'll start to thinking about this.
It can be quoted each way.
Congratulations. That's dovish. But yet, like they just haven't moved rates. And it's interesting too, because like we're coming up to a period of, if you think in terms of time horizon, like I think seasonally will still be weak through end of October. Yeah. Now, maybe there's some strange like anomaly with like an election type of bounce that happens because of the strangeness of our situation. I don't know. I'm not going to prognosticate on that, but just seasonally, we should be weakened through the end of October. And so I think we probably get some kind of tradable bounce here, but really I'm looking for something along the lines of 53.5 to 75 to kind of step in and buy that, which we'll say was one of the last gaps. And then probably test 5,000 to 4,800 if we continue the trend lower. But maybe we won't. I don't know. I do think that everybody kind of misinterprets the idea of lowering rates. I don't think this is a great signal or a great sign. And obviously, everyone's always like, "Oh, there's so much money on the sidelines." When they start lowering rates, where do you think the money goes? It goes into bonds. Like people rush.
Goes into bonds, dude.
And because they're getting in front of the Fed trade, so nobody's buying stocks when they start lowering rates. You have two choices. You know that the Fed's going to start buying bonds for God knows how long, and that's going to push the prices up. Or you know that they're cutting because stocks look kind of, or because the market looks scary. What do you want to do? Go bet on the volatility of earnings in this weird situation? Or do you want to just go front run the Fed? Money on the sidelines is not going to go rush in and buy all this, buy all the stocks.
Well, he's only needs to manipulate unemployment too. Like the unemployment inflation stuff is just the threat of cutting rates. It has a material impact to tweak the data that comes out each month, and he's done that now like two or three times, where he's able to just slow the rate of unemployment just enough before it becomes a problem. The question becomes also, does it go to 5? Like, when is it a problem? 5%, 5.9%? How long can he hold off? Just the threat of cutting rates is enough for him to get better numbers. Maybe not every company believing or drinking the Kool-Aid of rate cuts are coming, but enough companies to improve some of the numbers out there that come in.
For sure, yeah. And they said as much too. And it's funny too, because they never actually give us, this for an entity that should be as path dependent and transparent as they are, it's pretty striking that you can't even like put onto paper what their path is or their dependency on the path is, or what their levels are. It's like, it's just, we're just being kind of misled.
We are misled, 100%. If unemployment goes down, inflation starts going up. If unemployment starts going down, they got no reason to cut rates. They got no reason to cut rates.
Exactly.
And one quick question I just thought of. So, don't mind lost signals.
I got a minute.
But I've been noticing for a while now, like when I'm looking in the chains across different tickers, right? I'm looking for those like right tail opportunities, and some of them are less liquid, so it's understandable they have like wide spreads, but some of them aren't that illiquid. They're like normal names, and these market makers or dealers, whoever's setting the premiums, they're keeping them super wide, and sometimes resistant or hesitant to transact. I'm not sure if it would seem to me like that's a signal like they find that there's maybe inherent risk for them to be short that strike for some reason, or is there a reason why they wouldn't want? I would think they would want to take that easy money from someone on the other side if it's way out of the money or something like that, right?
Yeah, no, that's a good question. Send me some examples because I don't have a lot of time to go through it right now. But I think partially what happens is there's a lot of groups that really just are into inventory management, and if they don't have a concrete way to lay off the risk right now, you're not going to get a really tight market. And once you signal, and once you signal which way you're going to go, especially in like a smaller market like a stock and individual equity, you're probably going to wind up adversely you're punishing yourself because you've signaled your trade, you signaled your interest, and now they're going to calibrate and move their systems away from you because there's really no edge. Like we think there's a bunch of edge because there's a bid ask and it might be wide, but really what are you going to do with it if it's a call option that never trades, and a stock might move 5% before you actually see the next print in that particular strike. Right. There's a lot of risk there that's kind of discrete, not really continuous, and you can't really lay it off, especially because when you get down to individual equities, what are you going to do? You're going to find something, you either trade in the same product or you base what you're doing, you're hedging on correlations and spreading in different stock options, or it's not clean. There's a lot of slippage. That's why those are wider too. But yeah, send me, if you see an example, send them to me. I'm curious because I'll take a look at it and maybe do a little write-up in the newsletter.
Oh, yeah, think about it.
Because that's an interesting problem. And if you see it in the SPX, I definitely want to see it because that's what fascinates me. Because the SPX is so deep and so liquid. I think I make this point a lot that like people think they're getting screwed over on how wide the spreads are on SPX. Like, no, you're just used to SPY widths. Yeah. You have 10x them, 10x that, and then look at it.
You have stability too in SPX.
Yeah.
Way more stability.
It's incredibly stable. And I have guys that work at hedge funds managing billions of dollars on my chats, and they'll, you know, text me throughout the day like, dude, this is so stupid. How do you guys make money trading this? I'm like, yeah, we don't really. It's like you just put a whole bunch of crap into a black hole and hope we come out with some nickels. Yeah, obviously there's some firms that are really, really good at spreading things in different products now, and just swallowing a whole bunch of it. But in the end, like the actual price of the risk in the SPX in terms of like how much you pay in terms of bid ask, it is a travesty. Like it is, market makers are at a disadvantage because of the competition, and you have like basically a free roll at a casino all day.
We've never had that
Oh, yeah.
before. It's like they didn't have this 10 years ago. Like you couldn't do this. The
No.
access to like an option chain like you do right now, there's no access like that's been like right now.
No,
Right? And they're like, you're like an elephant as a dealer or market maker. You, as a retailer, you can move in and out freely whenever you want on your own brain. You don't need to talk to anybody. There's no time. There's no negotiating. You're just like in, out, in, out. There's an
Exactly.
advantage there to a retailer to some extent. Or do you
I'm
disagree
getting
with that? Or
attacked by
no?
my wife. I gotta hop because we have commitments. But thank you for having me.
Yeah, man, I appreciate
way
you being
too long
on
in the making.
without a doubt. And I understand
for
you have
sure.
to go for the wife. I appreciate your time and energy that you put into this today. And
For sure, yeah. Let's chat again.
and
Feel
let's
free to
get
DM me whenever
together.
we get back to it.
Let's do some
Cool.
kind of a collaboration, I guess is what they call it, or something like that.
Yeah, sounds good.
Have you back on in the future. I appreciate you
Thanks a
coming on
lot.
today in particular too, because you know, like
Interesting
days
day,
like
right?
today, people they get weird in the chat and they get all panicky. Even when you tell them prior to, you're like, we got this coming up here in the next couple of weeks. They don't listen, and they panic in
Yeah,
the
it's
chat.
hard.
So
That's why I put out those tweets all the time. Like it's a good time to hedge because you don't want to have to worry about it once they've already doubled in price.
no, they worry about it when it
Just
has
ride it.
doubled in price. They want them. They all want to buy them.
Exactly. Yeah. Yeah. All right. See you guys.
All
Thanks.
right, take
a lot.
it easy,
I
guy.
appreciate it. All right.
All right, that was Vol Signals on today. Follow him, please, on FinTwit. He's easily approachable, easy to talk to. Likes to explain complex subjects in very simple terms, especially things that you're like, hey, I've been reading about this or watching videos on this or that. And I also want to thank Career Low for coming here today. Follow him as well. It's just how it's spelled, at Career Low. He's in our Discord as well. If you ever have any questions about Gamma, I always go to him and I ask him questions all the time. I'm not here to say like I'm the smartest guy in the room, and I'm not. You know, but find people that are the smartest guy in the room and what they're doing. And when you have questions, you go and ask them. You should be doing that. That's one thing in your path of being a market participant is the more questions you ask, the more people that you approach and be like, hey, man, I don't understand this, or am I doing this wrong? And correct me. How do I fix this? Or is this something that's going to fuck me over in my trade? Because we are all retailers here to make money. Especially these professionals are here trying to help us out to make money, taking time out of their day and what they do in their normal professions. So thank you, Career Low. If you're listening, right? You still here, Career Low, or no?
Yeah, I'm clear.
Hey, man, I want to thank you for coming on today. You want to say hi to everybody?
Hi.
Want to say what's up?
No, I appreciate everything you do for us, Cap, and the community you built together. And
I love you, man. I appreciate you.
Yeah.
Dude, we've been friends for a long fucking time now, man. I love you.
love you too, Cap.
Yeah, dude, we could have a beer sometime. Look at them trying to roll us to the downside right now. See if they can. We're boxed in here, ping ponging wrong. All right, Career Low, I'm going to let you go. I got to go potty really quick. And I want to say thanks for coming on the show, man, asking some pointing questions and getting some answers out of Vol Signals. All right, I'm going to take a quick break here. I'm going to hang up with you real quick, Career Low, and get back to the show. Thanks, brother. I appreciate it.
Take care.
All right, so that was Vol Signals Career Low on the show. We're getting hemmed in here, right? They're pinning us in here. I've got some risk on to the upside here into the end of the day here. I'm gonna take a quick break. I gotta go potty. I've been on the show now, I think, for a little bit longer than I should be, 5 hours or something like that without a break. There is still some risk to the downside here into the bell. You know, it's that kind of the end of the day thing, right? They bleed us off into the end of the day. They make it really bloody. It looks like the whole world is ending. And meanwhile, there's a dip by at 359. I don't know if we get that today or not. If we do, and they bleed us down into 4 p.m., I know some of you out there are looking to put that trade on into end of August. Do I have that right? Yeah, August. Into the end of August. I don't know if this is it. I was looking at Dow Jones Industrial Average. I'm a little suspect of it. Let's take a quick look before I take a potty break. I got to go pee really bad. But just if you're considering that trade, that long trade here on DIA, the only hesitation that I have here on DIA for that trade into end of August is that the daily velocity. Hold on here. This is just me, not you. Just daily velocity here. Taking a peek here on daily velocity on Dow Jones Industrial Average. It's still, there's no series of new highs here. So, even if we just went to the zero line, pretend this was actually a June of 2024 trade right here. We could have some more downside coming our way here. Whoop, even if we went just zero line and back up a little bit. So I'd be a little suspect of it at the moment. I'm not quite ready here to put some size on this. So that's a nice look at that beautiful downturn right here. It looks like you're going to catch that trade, but there might be a little bit more down here to go. So for me, at least at this point, I'm not ready. If your time horizon is farther out in time, if you're putting time on it into December and we get murdered or something, into unexpectedly get murdered or something like that, it has to come back into the money for you. You might want to add another 3 months, 90 days on whatever your target date is. So your target date's, let's say, October 1st or something, or excuse me, August 28th. You might want to add 3 months onto that to 1 day. Market maker, I don't know if it's market makers, but that pain trade will hold itself below that print, sometimes 90 days out. All right. Just ping-ponging along in here. No decision as to which way we're going. If we break above or below this box right here, we are going to go and trade those lower numbers. If we break above, we should have some sort of relief up into this half an hour and hourly trigger. And I'll be right back with you guys in a little bit. Hey, Stacy, how are you? Market Rebels here. Good to see you, brother. I'm reading all of your comments right now. All right, give me a few minutes. I'll be right back with you guys in just a moment. I'm going to turn on the squawkers for you, too, so you can listen to that. Leave that right there for you. That's still viable. I'll be back with you guys in just a bit.
The 2 to 10-year Treasury yield curve inversion steepens to a negative 14.4 basis points. That's the least inverted level since October 30th.
New low at that point. Just a heads up out there. It's pretty bearish.
And see a headline just pointing out the 2s, 10s yield curve inversion steepens to a negative 14.4 basis points, the least inverted since October 30th.
The 10 to 30-year Treasury yields extend their climb and the curve steepens.
Some update from Microsoft MSFT. Company is introducing Bing Generative Search. Let's see where Chile's Codelco says it will await feasibility study on the expansion of the El Abra mine, current with Freeport, to evaluate its financing strategy.
All right, give me a second here. I'm going to come back to you guys. 2:14 in the afternoon. Let me see here. Give me just a minute. How do I go to where do I go here? Oh, give me a second here. All right. Trigger screen. What do we got here? Triggers. Triggers. This looks pretty good. I think we're good here. All right, let me bring this up here for you guys. All right. So this conversation here is mostly directed to Discord members, though I'm assuming a lot of you can follow along with this. So we're going to look out here on a 1 hour basis. And we have sort of a problem here. So we had a discussion in the overnight about losing the daily trigger and what would happen if we lost the daily trigger. So we have a structural defect in the market at this point. Now we're sitting on some support right here. You know that this is where we are. We have some more down to go. Regardless of staring at a 1 minute bar, you know, how much farther down we're going, that kind of stuff. But we are now in what I would call a structural defect here. So the thesis here is that we have broken support, right? We back-checked the daily trigger. We broke through the daily trigger. And as soon as we broke through it, we began to reject it. You can see it here. We had the break. Break of daily trigger, back up, and then boom, straight down to the depths of hell, right? To our first target. That first target likely will be broken regardless of any form of pullback up to 548 or anything like that. So we're either going to go straight up and then straight back down to blast through is my point. Or we're going to blast right down into the close here. We're going to get underneath that yellow bar. That yellow bar is 5. Make sure we get this right. That yellow bar is 542.44. So there's an expectation that we trade that like today for the close. Bam. And regardless if we do not trade that today, regardless, even if we were to have a relief rally here, let's say we did not trade it, the expectation would be we're going to trade it. Does that make sense? So I just want you to realize that we have structurally broken support in the stonk market, and we are likely going to trade a new low below this support. So let's say we trade this today. Let's pretend we trade this today, right? Bam and bam. Let's say we trade this today to the close. We get our relief rally on Thursday. I'm going to then expect a next leg down. to 540. Right below 540 to be exact. And not only that, but we are more than likely, like a pretty high probability here that we're going to trade all that.
Gasparino says,
and all of this right here.
Legislation.
I know you don't want to see this. It's going to pain you if you're a bull.
A pathway for the Fed to hold Bitcoin as a strategic reserve asset, and is hoping to get buy-in from Trump, who is also speaking.
And the weekly trigger right now is at 516.95. Let's take a look here and see. 1, 2, 3. This one, a bad boy up here for the end of the week. Price targets 525 on SPOOs at this point, regardless of how long it takes us to get there. Definitely a price target like this 520, 525. This is on the table at this point. Pretty quick. This shouldn't take too long to take place. I don't think that this is October or anything like that. We will trade that between now and let's call it August 1st, somewhere in here between now and August 1st. Right around there, August 1st, price target 520 on S&P 500. Regardless of what you think, that's where I think we're going. Without a doubt, you're going to get one move down right here. Bam. You're going to catch a second move down right here. Bam, right? This is going to be one move right here. That's your next move right there. And then you're going to get one more here, and this thing's going to roll down on you. Whoop. This is going to take us straight down into that 520. Now, if anything changes, we begin to hold our hourly trigger and we begin to trade up and above the daily trigger. I'll change my thesis, but at this point, we are in sell the news town, bear town, all that kind of stuff. So I'm going to expect that move there, and then this move right here, and then some kind of a greater trade, higher. We're going to go down there and trade that bad boy right in there. Somewhere in there, you're going to get the first leg, second leg, maybe I might have this wrong here. Might actually go there. And then straight down just like that. So there's one leg, two legs, and then I got this wrong. Hold on here. 1, 2, then maybe right there. Maybe I'll pull that back a little bit. Maybe you don't get the entire thing. Or maybe you do. It's just the last death knell.
Just regarding Trans-Mountain, it does note it.
Right in there, somewhere in this zone down here. So call this a zone down here. 520 to 530 would be the extension. This would be an extension to the downside. The implication is that we're going to trade at least 530, 535, to somewhere in here, 535, 530. There is no if, this, then, or someone was saying something inside of the Discord that people on Twitter are saying, if we do this, then that's going to happen. They're being vague. I'm not being vague here. We're in Sell the Fucking News, and we are likely going to go head downtown to some major lows. Currently, the low is at 520, but as this week and next week progresses, they move up a little. I guess it is today. It's like 515. Then it becomes like 520 over here next week. The 1st of August, 520 by the 1st of August. Downside move expectation on SPOOs. Now, that's not, I don't think that's the full 10%, but I think it is. Let's check it and see if it is. That's the full 10% move right here. Let's check it. See? That's 7.5. So you don't get your 10%. You get close to 7.5, maybe not the full 10%, something like that. But there's a definite expectation that we're going to trade all this. Whether this is the way or not the way or whatever, I really don't care. Now, so if I were to draw this out for you on a higher frame, some kind of a higher frame in there. There. we'll talk about the rest of that later. Something like that right there. 1, 2, and 3. So this would be my expectation from this point forward. We're going to continue to sell. Downside target from here into the end of the weekend, 535. 535.74. Then some kind of a pullback up here and a roll down. Maybe I'm being a little bit too aggressive here. Something like that. So I got that right there. Sorry, I'm doing this on the fly for some preliminary, but be a little bit more gentler here. I'm not trying to be aggressive. I trash that one? There we go. I guess this is in a smaller time frame. Expect that low before the end of today. A little bit of a relief rally in here, but that's only to sell you down here. A little bit of a pull up and then down into the 1st of August. We're not done going down. And DIA is not done going down as well. And I have something else that I want to talk to you about here. This will trigger volatility market wide. So where you have Qs already reacting, you're likely then going to get a reaction and a trap on small caps. And small caps will close the divergence that's taking place right now in the marketplace. And I'm going to read something to you from McGilligot to back that idea up. So we start to break down below here, and you're going to see some risk-off environment market-wide in here. So where IWM is not reacting, McGilligot is saying here, what does he say? I'm going to read this here. I'm still engaging with bunches of clients who are looking to short into this Russell IWM rally, viewing it as a positioning stop out and not based upon any sort of true fundamental economic regime shift that would benefit this part of the equities universe, at least not yet. Perversely, small caps historically tend to work best and outperform when we see the whites of the eyes of a harsher slowdown or outright recession, which then means a deeper Fed cutting cycle than the one currently priced anticipated, which allows for many of these early cycle type economically sensitive companies to really go high beta to the upside as the largest beneficiaries of lower rates, lower costs of capital, easier funding. So he's telling you that IWM small caps might continue to go higher. I'm telling you, you start breaking down below this here and we start getting more risk off. That short trade in IWM could possibly come true. McGilligot giving you the counter thesis or trade to that taking place. So if you are looking for a preliminary expectation into today, tomorrow, Friday, and into the next week on the 1st, unless something changes here, we have a breakout above the hourly trigger, we have a breakout above the daily trigger, something like that, we are heading down, and we will trade a correction, minor correction, but down to a target right. I've got a target right now of 520. So the next leg of this to the downside. Should be able to catch most of this to the downside. Should be some free money in here as well. Beautiful trade in here to take to the downside. That's all I've got for you guys on preliminary expectations. If anything changes at any point, we get a good report or something like that. I'm going to show you on the flip side of this preliminary expectation to the downside. I'm also going to show you what would it look like if you were, let me just get rid of all this. What would it look like if we were to reverse out of this? Hey, Cap, this is it's dead, or the trade is dead. The bears are dead. We're going to go back to a bull regime or something like that. You would be looking for price to not catch a new low. Let me draw that in first. Hold on. Right about there, 5. We'll call that 542.23 on SPY, 542.23. If you don't, let's say you did not catch that new low, you would want to see, you're going to be looking at this high right here, most particularly this high right here. Would be the important one. And you'd be looking for a reversal, straight reversal, like a failure. Right? You would look for a break above this prior high right here. So you can see it right there. Just a break. A back test of where the hourly trigger would be, a new high. And then whatever we come back to, that would be your signal that the bull market or the bear run is over. You'd be looking for, got that there? Do I have that right? Nope. You're looking for that hourly trigger to reverse back to the upside. Full reversal in price. Boom. Break out that high right there. Right? And you'd want the bulls to immediately step back in, push that price right back up. And this should be a monster rally. You see that monster rally? When we come back down to check that hourly trigger a second time, you should be off and running to the upside. Daily trigger would come underneath. Whoop, right here. And you're in relative safety. Relative safety, 3 trigger bull cluster, off and running back to the upside. So roughly 550. Bulls get back to 550. Get some work done in here, and I'd be like Johnny on the spot with that trade, all bulled up again. But otherwise, no bull for me. We are going to go trade this down. We're going to get underneath, ping this, come back up, and start heading down lower and lower. Price target downside 520 right now. That's the extreme down there, 520. That's not straight down, of course, but you get the gist. You get the gist. And I've got no faith in this. I've got no faith in this bull rally coming back. We also have, if you look, we've got a little bit of a bounce coming up here on an hourly basis, but on a 30-minute basis, you can already see it. We're starting to turn down into some negativity here. We've got the daily velocity heading to the 0 line right now. I fully expect that 0 line to go negative at some point, and for us to have some kind of a corrective correction ahead of us. We go negative on daily velocity. Now, if we switch around, start heading higher, we can change our thesis and start getting bulled up again. But until that happens, whatever this stretch is, until that happens, until there's some kind of reversal to the upside, no new low down here, start turning it up. The way is down at this point. Way is down.
Next, WTI crude September futures settling at $77.59 a barrel, 63 cents or 0.82%.
Also a note, we're at 1.86% on the day, down 1.86%. The 2% mark, I think I gave that to you earlier. I'm assuming that is at the 542.23 somewhere here is probably the 2% mark. Or just above. I think that's it. Raise it a little bit if you wanted to. 37 maybe. I'm assuming this is a full 2% right down below here. Somewhere in there. So that's the expectation from me. Put that back up for you. Put it back on a 1-minute trigger there.
Do you want to stay up to date with the latest and be on the bleeding edge of news for non-farm payrolls? Then sign up today and get our special offer of financial use.
You can also see while I was on break, we had the
1 month and save 92%.
Ping pong in here. Try to draw the stuff back in for you guys. This is the prior low right here. You can see right now we're staircasing it down. Do you see that? So they're staircasing this down. They sent this down underneath the consolidation. This is turning into distribution to the downside. Downside target 542.37 to the downside. This is also where the CaptainJimJames, CJJ, here's the CJJ used call lot right here. Make that yellow. Bam. Right down there. And there's another fair in here too if you wanted to see. Let's go down to the bottom right-hand side. We've got SPX. We've got this gamma node down below. I want you to know that there's not much gamma down below here. I think Vol Signals said there was something at 54.30. Let me go back to this. There was a node down below at 54.30. Let me take a peek on my end and see if I see that node or not. So we're currently at what, 54.50? Let me show you guys what I'm looking at here. So just so you can see it at home here, I'm going to draw on this chart for you and just show you where we are currently. We are right here. We begin to break down below, and we've got 53.95 as a major node. We also have the 2 bars in between. So here's your first bar and your second bar. There are 2 minor nodes at 54.40 and 54.25. 54, so 54.40, 54.25, and then the next major node is down at 5400. I'm expecting that we trade even lower, that we can get down here into these 5200s, closer to 5200, 5300 down here. We can easily begin to cascade. So the idea, so if you look at this chart, if you look at this chart here, pretend it's vertical. We start breaking down, slam, right? That's 53.95. Excuse me. If we break below that, bam, right down there. There's your next one, and there's your next one right down there. And you can also pay attention to the, sorry, I'm losing my voice here. If you notice down here on not Qs, but SPX, we're beginning to break below that gamma. That's where it is right here. We're beginning to break below this gamma, and there's a giant chasm. Whoop. Down to 5400 down here. Giant chasm down here. 5400 to the downside. So I'm like hacking and weaving here. I think we got like 70-point spread right now or something like that. 7-point spread or something like that between SPY and so this won't equal exactly to SPY, of course. I mean, I don't know why this stuff's not moving for me. So more downside expected, or at least right now. Even if we get a, oh sorry, let me get rid of my get rid of that and get rid of this. Sorry about that. I thought you guys could see my my. Whoop. No. Just that. Just move that. Why is my display not fucking locked? Lock that shit. So just so you know, even if we, and I want to be clear on something here, okay? I want to be super clear. If you're a bull,
3 cents. It's $77.
this is the same warning that I gave Tesla gang this morning. If you're a buyer or a bull, right? I don't care. I literally do not care. If we squeeze up here and you try telling me that it's over, it's not. I don't give a fuck. It's not over. And it's not even over if we break above the hourly trigger. So even if we squeeze up here, even if we squeeze up here, even if we squeeze to, if we were to squeeze right now to the end of the day, right here, it doesn't matter. It needs to be above that yellow box, and even then it needs to confirm a bounce off the hourly trigger. So you got a lot of work ahead of you, or you got a lot of work ahead of you if you're a bull to have any kind of a, hey, this is a high probability, the pullback, the now correction is over. You don't have that say until those things happen. There's no like probability where you win. You might win 10% of the time, 15% of the time, but you got no W here. The other 7 to 9 times to call this as bottom down here.
And Brent crude.
Just be aware of that, okay? That you need to see improvement in a big major way.
Cents or 0.86%.
To be calling this as bottom at this moment. So just be careful of that when you're listening to bulls out there. You're gonna find them on Discord, or not Discord. You're gonna find them on FinTwit and shit. They'll be like, "Oh, that's the bottom, dude. We're done." All-time highs once again. Even if they're right, they're only right like 1 out of 10 times. So you got nothing out there. So if you hear people saying that shit in public, they don't know what the fuck they're talking about. They're out of their fucking skulls. They don't know what they're talking about. they're fundamentally probably wrong more than they're right at a high rate of the time. So if you're a bull, you just sit on your hands here. You got nothing to do. You're looking for that. You're either looking for a reversal off or close or near to the weekly trigger, and for that hourly trigger to come back down so we can get it back above it, get back above the daily trigger, that kind of stuff. You have no real safety here, is my point. To be buying like I'm going all in, full account, and going in for $1 million or whatever, taking margin out for $500,000 for my $500,000. Not the place here. Sorry, we got to go lower here. Down here. Does that make any sense to you? Please say that makes sense to you. Please say something in the chat that you understand. I go over this every time we have a pullback or a correction, and I feel like it's like lost. Some people get it, some people don't. The people that get it, I'll tell you something else too. The people that understand this concept have been in this community for years. Years. They have not gotten blown out of the market. Take that to the bank. So you must understand those rules as a trader if you're going to be a part of this community. Because you're not taken seriously by the community that does take this take this aspect seriously. They're not going to take you seriously in the Discord. They're not going to take you seriously in chat anywhere because they know as well that the statistics are against you calling those things. So try, please. I beg every time we do this. I beg and plead for that confirmation for buyers to. You can wet your whistle and stuff. You can be like, yeah, I'm buying zero dates and stuff like that. But be wary of anybody out there saying this is the bottom here or even lower until you get that reversal, that confirmation of a reversal, and then we're heading higher. Okay? Fairly easy to do, fairly easy to see. No brainer. I think Joe puts it best. I think Joe simplifies it even more. He goes, are we above the hourly trigger? And if the answer is no, then he doesn't even want to talk to you about getting long again. Right? So make sure, and you can ask him, if you ever want to ask him or anyone that understands these concepts, why does he come out and whine and bitch about this stuff? Why does Cap come out here and like harp on it over and over and over and over again? It's because we have people in the chat often, not in the Discord, but mostly in like Twitch chat, YouTube chat. They're not community members, or they don't get any of the market briefs, or they're not in the Discord community. So I just want you to know out there that please, because I hate seeing you get fucked up. I really do. Like, can't stand it. It drives me bananas. Like, people getting blown out and going crazy, being like, oh, I was fucking bought the top of NVDA, never hedged or nothing. Just all the kind of insane shit. Just like, it'll be the death of me someday. It actually does keep me up at nighttime. I don't know if you know that, but it keeps me up and awake. It's like, I feel like I'm with my children or something. Not that you're children, but I feel like responsible for you out there. And I'm like, why the fuck don't they just wait when it does reverse to the downside? Or why didn't they hedge, or that kind of stuff? So anyways, that's where it is for bulls right now. Bears, you likely are going to get this low down here today. High probability that you get it, or close to this yellow line somewhere down in here. So if you want to take a nice short position or whatever, I think you can probably do that into the bell. High probability that you're going to go down there and take care of that this afternoon. What else I got for you guys out there? What else do we have out there? Oh, I got to go back to the Gen chat. Sorry, I was doing stuff for like technical stuff in the background. Not for the market, but stuff for us.
And Brent crude futures, they settled higher today by 70 cents, $81.71 per barrel.
What am I looking for here? Get me back up there. I like to call this for myself.
S&P 500 down 2% now.
He can't say that. They don't like that we don't share it. They don't like that. Yeah, we'll talk about CMG. We'll talk about CMG and I call them freeloaders optimizer. They're after callers. They never call it before. And they don't read the briefs. They don't get them, so they don't know that you already called it. So it's like they know half the information. So they're like running on half the information, dude. So don't ever pay attention to them. Don't ever, ever, ever pay attention. Oh, let me write that in there. Wait, hold on a second here. You just tag the 2%. %. We finally broke the fucking curse. Finally. Oh. 2.02%, I think, was the official on it. 2.02% on SPOOs just then. Come on down here and give you the little low tick. Give me that low tick down there. Give me one more tick, one more red bar to the downside. Just break it. I guess I'm sounding like a bear now. This is what bears want, by the way. Bears want the low tick. They want to grab this one tick right down here, tick, and then go straight up. They should be able to get it here. I don't think we're done going down, so the thesis is still more down. So you'd likely see that low tick, and then we'd make the move higher. We got time. We got plenty of time to go lower. Plenty of time. Plenty of time to go lower. $2:46 in the afternoon. 14 minutes left until. We were just looking. We got people that are cutting and pasting from the Twitch and YouTube chat right now instead of Discord, and they're making fun of some people. They shouldn't, but they are. Come on now, get underneath. Give me my 2%, baby. We're at right now, 2.02%. We're good. We're in. We're in the 2%. Disney bleeding right now, trading 89.69. Low tick just then. Let's see if we get a quick reversal here. I still have those downside targets on here. I didn't delete them, did I? Look at that beautiful fucking red bar right there. I didn't delete that shit, did I? Hold on a second. I got some work to do here. there. Get that over there. Another target down below at 537.12. If you have your hourly basis here, I gave you that chart earlier, the preliminaries. If you really want to go lower, 537.12. 537.12. Woo! Hell yeah, 2%. The curse is broken. Curse is broken. Consolidation into distribution. New low on the market. Going all the way back. Can I get over there? We get that low? Right there. That's where the low should be. All the way back to the race, everything from June 24th. Everything from June 24th, erased. Whole entire move erased from June 24th. Next move higher was 539.87. 539.87. Entire move from June 24th. Gone, baby. Gone. Bring that higher for you. Woo! Smoking to the downside. Let's go look at Bookmap really quick. Here.
Just another update on US equity, just continuing to slide in the afternoon here.
Oh, yeah.
S&P now down about 112 points.
There's your 2% announcement.
Down 3.3%. Meanwhile, the Russell also just catching up to some of the earlier selling pressures. Russell now down about 1.6%.
Woohoo! Look at that smoke down there. %2 move, baby. You got it. Finally. I don't know how many days it's been. 270 days? Somewhere around 270 days. Something crazy like that. NDX trying to make a move higher right now. Their gamma node is even lower. Down at 19,000, 19,050. SPX gamma just ripping face to the downside now. Next real true support down at 5,400. 5,400 on SPX gamma. Just losing it right now. IWM. So I just told you about IWM following the market, right? And right here they just blasted. Just like, what was this, like 15 minutes ago or something when I was giving you preliminaries for tomorrow? I was saying to you, bottom right-hand side, as we begin to break support, you will begin to see a breakdown in IWM. Just note this right here, this red candle, that if I'm not going to switch back to SPY, but if SPY begins to reject and we begin to head lower, you will also see a risk-off type environment in IWM to the downside. So you will see this begin to sell.
More commentary from Netanyahu, just noting that Israel will do what it must to return security to the northern border.
So we're going to go back to SPOOs, right? We begin rejecting this stuff and heading lower. It will begin to impact small caps. Even if we squeeze up here and come back down, you will begin to some point to see small caps look like it's consolidating. And then it'll move lower along with SPY and Qs. Main screen. DIA. I've got no buy for, I'm not willing to buy DIA for the end of August at this point. I think DIA is going to head lower as well. So we'll see if this bad boy goes down. Breaks below 397. DIA has more down to go today, believe it or not. VIX cranking right now, trading VIX 9. Hold on a second. God damn it. VIX 9-day looking for a target to the upside of $21, implying that you could see more downside from SPOOs, DIA, IWM, and Qs blooding it into the bell today. So be very careful into the close today. VIX 9-day now trading 1850 with an upside target of $20.79. Yeah, maybe a little bit lower. Hold on here. Let me just make sure I got this right. How about $20.31? $20 closer to 2036. 2036. Bring this down a little bit on VIX. Right there. VIX 9-day on the move. Woo! On the move on VIX 9-day. HYG getting blooded here. Tried to hold on to their hourly trigger. Getting shanked to the downside. The buy line on HYG is down here at 77.99. 77.99 down here. And it's getting shanked. We could see it pop back up, but HYG, you got the down move below support on the hourly trigger. You get the blood down below here to close the gap. And then one more downside move right there. HYG looking ugly as all hell. TNX ripping face now and holding above its hold on a second. I got to stop this shit. It's pissing me off now. It's revolving chart shit. TNX breaking above its daily trigger. We have a half an hour cross and an hourly cross to the upside. TNX trying to trade 4.313 to the upside. 3.313 to the upside right here. Bam. Consolidated move. And then right up there, TNX bullish. Tesla with a saving grace bounce on its monthly trigger down below on its monthly trigger. But what's going on here? The hourly trigger is racing down right now, and the hourly trigger is about to cross Tesla. I'm going to expect whatever comes up, like let's say we go up to 230, 232, then it's going to reverse right back down to the downside. There you go on Tesla. We'll leave that one up for you. Any kind of a move higher here, likely going to get sold right down here and get underneath this monthly trigger. Downside target, $200 on Tesla. What else I got here? NVDA getting shanked, trading 115 right now on NVDA. Tried to stay above and hold its head above, breaking below 115. Dude, NVDA is going to get taken to the cleaners. Netflix holding up quite well today. That's good to see. Amazon holding up pretty well right now. Amazon's doing pretty good. Still parked down below on its weekly trigger. KRE just bouncing around. Was not. They did get a new high, KRE, so still bullish on KRE to go up and try to complete at $60, $59.50 or whatever. KRE is actually faring quite well right now. Disney in full disarray, trading a low today of $89.61, breaching $90. Not a good look. Even if it closes the gap on high, you have a daily trigger crossing the 6-month trigger. It is in full liquidation mode at this point. TLT losing support. Rip in TNX, right? Sending it lower to 91.53, but has not lost $90 yet. Still in line for the consolidation. We'll give TNX a little bit of still kind of bullish here in TNX. They still haven't broken or anything like that, any kind of support, but they do have a level down below at $90 that it's looking at now. For TLT, sucks for TLT bulls. I was pretty bulled up here in TLT. They're getting shanked. Google putting around down here at the buy signal down below. We also have the 160 mark. I do think Google has a chance to trade 150 before it makes a full recovery, though it is faring much better than Tesla is. XLF still parked, not so bad in XLF. They look pretty good, believe it or not, today. I thought they would have lost a little bit more and gone down to like $40, but they're not there yet either. NDX still tracking this green gamma node down below of 19,000. NDX getting shanked right now. Straight shanked. Green box down below on NDX. CMG. We're going to talk about them into the close. It's now 3 p.m. Power hour. CMG. I haven't looked at it yet, but let me take a peek. Let me just go. I want to make sure I'm not talking out of my ass here. Don't want to be. What am I looking for here? Why doesn't this fucking thing automatically pop up? There it is. Oh, I need to make this a. Need to put this on my cap screen, I guess. We'll put it there. CMG, I wanted to cover this earlier this morning. Didn't have a chance. I did chart it out. This is what I'm going to tell you about with CMG, regardless of their earnings. We're going to take a quick peek here at CMG Chipotle, okay? So Chipotle, CMG. They tend to stay on trend.
He does just note America.
They're going up, they're going up. If they're going down, they're going up. Pretty steadily in trend.
Threat, and all countries who will make peace with Israel should be invited to join this alliance, and it would be a natural extension of.
I'm going to turn that off. CMG, if we're at a natural bottom or consolidation, they will break to the upside. If they're at distribution, making new lows, they'll make the dump. If we're staying on trend, they stay on trend. They're pretty consistent here. So now CMG, they've got an implied move. Got it. I got it. They got an implied move here of 9% expected move. So we're going to go to the bottom right-hand side of your screen. We're going to do CMG really quick. Take a peek at this. 9% anticipated move. We're going to talk about this later. I'll just get rid of this for now. Current price, $51.65. 9% move. Let's call it from right here. 9%. That's your implied move to the upside on CMG. That's your weekly trigger right there, right? You've also got a downside 9% move from here. Right there. We can show this to you. This is your implied move on CMG. 9% up is your weekly trigger. 9% down is your monthly trigger. My thesis here is that I don't give a fuck what the report is. I don't care what it is. I don't care if they send us up higher. You're gonna fail your 9%. You'll be lucky if you get. 6% would be. You should be grateful for 6% in my estimation. It would be a chance to just grab more shorts to send it lower. I do think that you might hit the top target and the bottom target. Before you wake up tomorrow, I'm expecting that downside move. And I'm going to tell you why right now. I'm going to explain it why to you right now. Dude, what is going on with this shit? What the fuck is seriously going on? It's pissing me off to know. Like, I'm having like, velocity is pissing me off. The rotating charts is making me angry. Even just tired. Okay, this is what I'm going to show you about CMG here. On a 30-minute basis, there is no new low on daily velocity, is there? There's no new low. So I'm not bullish here in CMG. Just that alone is enough for me. But we're also going to look at it at a higher time frame here, okay? We're going to look at it in a higher time frame. This is what's really concerning me. You've got weekly velocity heading. Well, first of all, you haven't hit a low yet on daily velocity, have you? We can go much lower. Next thing, you've got a huge fall off on weekly velocity. You have new lows being formed on monthlies, new lows being formed on quarterly. All this is super bearish. Okay, super bearish. It's a bear. He's smiling. He's like, hell yeah, we've been selling all of these like Lowe's and Home Depots and CMGs, McDonald's. Remember when I talked to you guys about McDonald's last earnings season? Before we came into these earnings, what did I say to you last season? What did I say to you? Who can remember? Talk to you about it, right? Before we even got into McDonald's and CMG, what did I say to you? I said they're going to de-risk this trade here, didn't I? I said you're going to look for the fucking food wars to start. Yeah, McDonald's is going to fail at this. They've already done the damage. There's other companies coming on board. One of these companies might actually be the catalysts. You'll see like Burger King. I know you don't believe it, but like they'll never go away, Cap, ever. I've already seen. I'm old enough to have seen this shit happen. Regardless, you're going to see a de-risking. You also have the daily trigger crossing the weekly. I do expect here that this bounce higher should coincide with the actual cross of the daily trigger, just to check it. Make sure we're going to make more downside lows. And we're going to enter a bear market, in my estimation. If not at this ER, we're going to enter one at some point this year. You're going to see us enter CMG bear market. It's going to get really fucking nasty. Maybe not today, but it will happen. And I do expect CMG to enter a bear market. If not today, at some point, they're on the shit list. They're on a shit list for like 6 months to a year, maybe 2 years. You can enter your recession. They'll be cutting rates and all that kind of stuff. Market will be shit, and you'll be buying CMG based upon garbage news out there saying that everybody's losing their jobs, they're getting divorces, they can't afford good restaurants, so they're all eating McDonald's and CMG. You'll hear that chatter come out once we go into the actual recession. And you should probably front run that by about 3 months. So maybe 6 months to a year from now, a year and a half, you'll be buying CMG once again. It'll be about 3 months to 6 months before you're watching, I don't know, CNN or Fox News, and I don't know, they're talking about the Great Recession that we're in and all that other bullshit they're going to talk about. The natural cycle of our markets and our economy. So just make sure that you're timing that cyclically for CMG to re-enter it down the road. Otherwise, CMG is still a short for me. Any trade higher is worth the short on CMG. I'm pretty bared up on this ticker. I don't like them. I don't like CMG, McDonald's, Lowe's, Home Depot, and that whole trade was never corrected. In my view, was never corrected. There's a whole bunch of tickers out there that enjoyed the COVID trade. They participated to an extent in the bear market of 2022, but they never fucking corrected pre-COVID. So that whole trade for a lot of these companies is still on in some way. And so they need to get shanked. They need to go back to where the market makers bottom and retrade it again. Accumulation, distribution. Definitely not a fan of CMG. You might get your 9% move or 6 or 7% move up here, but it's only for liquidity to go down. Hey, buddy. How you doing? Pretty bared up here on CMG. Yeah, I don't know if you guys know, like the whole I went to a whole diatribe about McDonald's, and, like fast food and new burger joints and competition. There's real danger to like losing market share to young generations. I've seen this happen so many times, like Howard Johnson's. Remember the Howard Johnson's Motor Lodge, Dairy Queen. You could just list them off. You can like count them over the generations, and we're watching it in real time with some of these companies right now. They start, for whatever reason, they're like, we're gonna charge $30 for a McDonald's meal, and then you've got like what's that other burger company out there that's doing pretty well right now? You get a better meal from them. I forget the fuck what their names are right now, but you guys know the burger company I'm talking about. So like what happens is you start giving up market share for profit. They're like profit driven, maximize profit. Meanwhile, Joe Blow, the custodian, is like, I can't afford this. I'm going to go over to this other shitty restaurant that's doing a better job, cheaper prices or the same quality food. Before you know it, you've got kids that are no longer buying Happy Meals, and they're buying Culver's. And they do Culver's and Culver's and Culver's and Culver's. 10 years, they're sending their kids to Culver's. They're not going to McDonald's anymore. All these companies, all these like restaurants that are sitting on their laurels, they're in very high danger. Very, very, very high danger of losing market share over time. I don't care that there's McDonald's in every town. Could care less. Could give two shits. You're giving up market share. It's very dangerous. You need a fucking Coca-Cola in your hand every fucking day. And they've given that up too, right? When I was a kid, right, everybody drank soda, right? So you've got companies like Coca-Cola that have to switch. They're like, oh shit, we got to make juices. And they're like, oh shit, we got to start bottling water. Oh shit, we got to start bottling energy drinks. We have to stay relevant to these consumers, right? We got to stay on their radar. We got to keep Coca-Cola in the hands of a 9-year-old child under any label. I don't care if they call it Dick Tracy's energy drink. If Coke owns that Dick Tracy's energy drink and that kid grows up with it, it sends these children into a whole other generation of consuming Dick Tracy's energy drink. And if McDonald's can't do that, CMG can't do that, any of these companies can't do it, they're giving away market share. So I don't think Lowe's and Home Depot so much are in that much trouble, but like some of these restaurants they're kind of suspect. They got a long road ahead of themselves. You don't see like 10 or 12 Home Depots out there under different names, but you do see burger joints, sub joints, pizza places, chicken joints, all that shit. Easier to break into that market for young or poor entrepreneurs. Easier-ish than a Home Depot, right? You're not coming in with $50,000. Like, I don't know. I think Subway was like $50,000 at one point. I think they're one of the cheapest franchises you could buy at one point. I think you needed like a net worth of like $100,000 or something like that. You could open a small Subway or something like that. I don't know if that's the case anymore, but there was a time when you could. But it ain't a fucking Home Depot. You don't need, $20 million, $50 million investor group, any of that kind of shit to open a Home Depot. So there's some risks there. There's some like just the microscope, right? Bring the microscope out and you start saying, I don't know. Get me in on Culver's, please. I'd rather be an early insider in Culver's than McDonald's right now. Jolt Cola, baby. I remember Jolt. I remember Jolt Cola. I remember that shit. I drank one of those. My dad got a 6-pack for us once. That shit was nasty. That was worse than what was the one that I bought when I was a kid? My dad used to drink it and then I got hooked on it. Moxie. Anybody here ever drank Moxie? I think it's Birchwood beer. Don't quote me on that. I think it might be Birch beer, Birch beer. I could be wrong, but anybody out there ever drink Moxie? That shit's like gasoline. That's what kids in the 50s and 60s thought was soda. You try feeding that to an American today, they would have nothing to do with it. So hopped up on sugar and shit. Anybody here ever drink Moxie or no? Nobody? I guess I am the oldest motherfucker here. Oh yeah, baby. Evan Harrington's an old guy. He's drank Birch Beer. I don't think anybody drinks Birch Beer anymore, do they? Tab, baby. Tab. That was the shit that I saw women drink when I was a kid. All the women drank Tab when I was young. Yeah, right there. Are you bullish on CMG? Let me ask you that question. If you're bullish, give me your case. Why are you bullish? Are you bullish more than 9%? I can see you being bullish on CMG intraday. Do you think if CMG gets the win, do they outperform? They go higher than 9%? Do they go 9% and the money is taken just to exit? Give me your thesis here, your full thesis. This is the bottom for CMG. Buy CMG here. Tab was nasty, wasn't it? I don't recall it being good. Boland's. I've never had Boland's. Where I was from, I grew up in Boston. I grew up in a place called JP. And that's what they had where I grew up, was Moxie. It was gnarly. I would like how I came to drink it was my dad wouldn't let us have soda, and he would keep a case of Moxie hidden, and so I would steal one and try to drink it. And first time I ever had it, I was like, I want to throw up everywhere. I can't recall if it tasted like licorice, but it had like an off flavor afterwards. The aftertaste was gnarly, like almost like a saccharin aftertaste. Do I got to add more calls here? Is that what you're asking me? Getting torched right now in calls. 5:45. 100. CMG squeezing right now. Those are cheap. I'm going to add some more calls. 545s I just added. So I got bags right now. 543s, 545s. Probably going to blood me to the bell on this one too. Trade that 540 down below right here. Also note, we have more news tomorrow. We got a mixed bag on PMI today. We also have tomorrow more volatility. This week's not over. Today's only Wednesday. Just be aware that today is only Wednesday. We got Thursday. We got Friday. Remember, we've got, what does Jedi Marcus call it? Throw up Thursdays. And then we've got on Friday, we've got PCE. So let me take a peek here and see what on the calendar what that stuff's saying. Thursday morning, 8:30 a.m., we got GDP, initial claims at 8:30 as well, durable goods at 8:30, and then on Friday we get PCE and all the different PCEs. I'm not going to list them all off to you. And then we've got a consumer sentiment final at 10 a.m. on Friday. So more volatility ahead. We're not even on Thursday, guys. So it's not Thursday. It's not we're not going into Friday. The whole week's not over yet. Yeah, it's not root beer. It's not root beer. Moxie's not near root beer. They're lying to you. That's some shit your dad would tell you when you were a kid. It's ground beef. It's ground beef wrapped in bacon, son. And you're like, oh, great, Dad, I'll eat it. Then you're like, oh, gross. He just put liver wrapped in bacon and lied to me. Yeah, I got another card on. Cheapies though. I got another card on right now. Another card of 0 dates. I think even though I think we're gonna blood this bell, I got another card on right now. We'll throw some. I made some money yesterday, so I closed out Tesla. So we'll see. I realized gains on Tesla finally. Realizing some Tesla gains. Not the gains I wanted, but I'll take them anyways. Not where I wanted my Tesla gains. I gave back a shit ton. Not a shit ton, but I could have closed at 70 and I didn't. So, and then yesterday I was expecting the 278 yesterday, I didn't get it. The first move down though I didn't sell. When we came back up and we had that bounce before guidance, as soon as we went up and stopped going up, I put a fucking stop right on that consolidation. And I got stopped out like 15 minutes later. Didn't even take long. I was like, we'll probably get through guidance. I'll get a little bit more up. Didn't even fucking happen. They rolled that fucker right back down on me. Pork chops are pig nuts. That's what my dad did to me. My dad would be like, well, how does he not like this stuff? And I was really young. My dad was a really good cook, and he would try to graduate me to new foods. And some of it was a little bit too, for me at least, a little bit too. I had problems. Well, not problems, but when I was a kid, I had a major shellfish allergy. And so I was born with a shellfish allergy, and so I didn't like shellfish. I break out in major hives and stuff. So my dad like force fed me that shit when I was a kid, like force fed me shellfish slowly, but over time, so that my allergy would go away. I don't know if you know that, but your allergies go away when you're introduced to them. The more like slowly, if you're introduced to stuff. So I didn't like that he did that to me when I was young, and so I wasn't as adventurous until I was about pre-teenager, like 12, 13 years old. I became more adventurous in the food that I ate. Now I eat everything. There's only a few foods that I won't eat. I eat everything. There's a few things, like I don't like sea urchin. And that's just like, I just don't like this stuff. I'm contextual with some stuff too today. Like pickles to me are situational. Like I love pickles, but only with certain foods. I wouldn't normally just seek out a pickle and be like, yeah, I'm eating pickles today, like a lot of people do. I don't like sea urchin. I fucking hate cottage cheese. I love ricotta. Love it. I don't like tapioca either. Can't stand it. My dad used to try to feed me tapioca when I was a kid. It's like something from my dad in my childhood. I think tapioca is garbage. I don't like eggplant either. Can't stand. I say I don't like. I'm like I don't hate a lot of food, but I eat a lot of food. I eat a lot of like crazy food. So my palate is wide. I eat everywhere. I'll eat Guatemalan food, Colombian food. I'll eat Cuban food. I'll eat Korean, real Korean, not American Korean. Real Japanese food. I'll eat anything, but there's some shit that I'm just like, no. You ever had sea urchin? It's gross. It's nasty. If you've ever tried it, don't bother. My wife and kids love cottage cheese. Every time I see it, I'm like, oh, why are you eating that crap? It's like low rent ricotta. Like I hate quick oats, but I love steel cut oats. What else? I'm like a snob. Yeah, like liverwurst. Talking Monkey's like, I used to bring liverwurst sandwiches to school. What's wrong with you? You fucking savage. Mr. Talking Monkey was one of those guys. Did Did you bring the liverwurst to school as like a 1/4-inch thick piece? I do love bologna sandwiches. I love fried bologna sandwiches. I grew up with those. I think that's one of those famous guys likes them. I think Bourdain, that's one of his sandwiches. I grew up with bologna and on Wonder Bread and fried bologna sandwiches with a little melted cheese on top. And you'd fry up like a shit ton of them. You just like fry up a bunch of bologna and you'd stack it in a sandwich and eat it hot. I ate that. I never liked liverwurst either. And I don't like liver today. I like sweetbreads, and it's contextually. I like sweetbreads under certain circumstances. Some duck sweetbreads, like a confit or something like that. I'll eat that shit. I like giblets, like in a gravy, but I don't like giblets on their own. I wouldn't seek them out, or I wouldn't seek liver out either. It's another one that my dad got me on. Gave me a lifelong hate for liver. Oh, dude, luncheon loaf. I never ate that stuff. I never ate Spam either. So my dad wouldn't let us eat Spam. So I don't eat that. I've never introduced it into my diet, so I never ate it. My dad also, so my dad was poor when he was growing up. My dad's fucking crazy. We were poor, or I wasn't poor growing up. My dad was poor growing up. So he wouldn't allow us to like either look poor or to eat certain foods. So he wouldn't let us eat Velveeta. And he would never let us eat Velveeta. And so as I got older, I met my wife, and she grew up eating Velveeta, grilled Velveeta sandwiches. And her dad never had, he was poor too, but he had never had a hang up about it. My dad was like, that's government cheese. We don't eat this in this family. And so we never had grilled cheese sandwiches with Velveeta. We never had Velveeta mac and cheese, none of that stuff. So I met my wife, and she was like all about it, and I loved it. So I will eat a grilled Velveeta sandwich. I don't like Velveeta on like a mac and cheese or anything, but every once in a while, my wife will go to the store and she'll get a block of Velveeta, and we will cut it up and we'll make grilled cheese sandwiches with Campbell's soup in a can. We don't do it often, but that's I don't know, like when you want to feel like you're back at home as a child, that comfort food on a rainy day, cold rainy day in the fall. We will make those sandwiches. Yeah, Spam's a big Hawaii thing. I have had Spam. I have Hawaiian friends that have made me like Spam sushi and shit like that. I've had. There's a couple other things I've had. I don't know what they're called. I don't want to misname the stuff, but there's some like famous Hawaiian dishes that I've eaten in the past as well. Oh, I have eaten deviled ham. I did eat that. Oh, yeah, David's got it. Pate, baby. I love duck liver pate. Oh, my God, liver cheese. Never eaten that before. That's nasty. That's disgusting. Liver cheese, like cheese, head cheese. I've never eaten that. I don't eat menudo either. I don't eat tripe. I don't like tripe. Sorry. Not down. Now, goose liver, duck liver pate. Sign me up. Sign me up for some of that. Any kind of potted liver, I'm down with that shit. Never ate Vienna sausage. Braunschweiger. Never had that. Braunschweiger. I've never had Braunschweiger. What else? Devil's ham. I've eaten that. We had when I was very young, we lived in a rental house, and the old couple, it was an old mansion we lived in, giant mansion, and an old couple lived there, and they would make me deviled ham sandwiches. I do remember that from my very young childhood. And they thought they were being all highfalutin. I don't think I liked it, but I did, and eventually I did like it. Bull's balls. I actually have experience. Many years of experience of making Rocky Mountain oysters from the calf. I've actually cut bull's balls a few times in my life. I get asked to go back to cut balls every once in a while if they have sick bulls that get too big. They get you can't cut their balls until a little bit older. They end up weighing like 230 somewhere in there maybe, and you got to get big men to wrestle them down. One guy pulls the leg back, the other guy tackles him with the arm, takes him down, and then someone comes in and snips out the balls. Another person comes and brands them. So I have done that, and I've eaten them. There's nothing special about them. They taste like a little bit like beef, earthy. They're kind of gnarly. Tastes like brains. If you ever had brains before, it tastes a little bit like brains. They taste like sweetbreads, or the texture at least of sweetbreads. Chicken hearts. I've never eaten those, but I know people that like them. Bleeding down to the clothes right now. I got a basket of shitty fucking 0-8 calls for like 9 cents and shit. I got some 3-cent calls in there too that I was buying in the 20s and stuff. Getting torched right now. Selling us off into the bell. Let me know if you're buying this bell. If you think we're gonna squeeze into Thursday close. Correction over. All the doom and gloom is done. We're gonna go higher now. Bulls are in charge. This is it. I'm not buying the close, even if we squeeze up. I want nothing to do with it. I'll buy 0-8s and shit for like 9 cents, 20 cents, something like that, but no size trade on here for me. We can moon tomorrow. Yeah, I think we can too. I think we can. If we get a good report, we can moon. I'm not anti we can moon. I just don't think we're at the bottom stage. There's no confirmed bottom for me. I'm not anti that we can moon tomorrow. But I'm not buying like I'm not spending like $20,000, $30,000, $50,000, $100,000 on a trade here. Brains are gnarly. I've eaten brains before. I've tried it. It's gross. I can't do it. I've eaten dog too. I ate dog in Korea once. I didn't eat anything crazy though. There was crazier food in Korea. I didn't eat anything really crazy shit. I just ate all the satays. They have these like carts. Like if you go in these like towns in Korea, they have carts with different fishes and meats and stuff that are on satays, and they have like a grill, and you can try different foods. Yeah, I don't eat brains. I can't do it. What's the other one that I won't do? What's the Schwargesmorgage, like the rotting fish from Norway, Amsterdam? David, you must know about this stuff. What's that fucking gnarly ass fish that you guys got up there? Yeah, surströmming. Yes, surströmming, whatever that shit's called. I've never even opened a can of that. I won't do it. I'd fucking puke everywhere. I couldn't do it. No possible way. No, herring's okay. I can do herring. I can eat herring. I've eaten herring before. No, the surströmming. That's a different kind of herring. It's like fermented herring. You know what else? You know how I know I wouldn't eat that shit? Is have you guys ever? If you guys have Vietnamese fish sauce at home, like I keep a bottle of Vietnamese fish sauce, that shit will clear out a building. You like break a bottle of Vietnamese fish sauce, woof, that shit would clear out. You pour that in a carpet somewhere, and that ain't ever coming out. It was never, ever, ever coming out. Now you're tempting me to buy more 0-8s for tomorrow, like for size. I don't want to get taken to the cleaners, though, man, tomorrow. Yeah, is that fresh herring, though? Like, fresh herring I could eat. When I was growing up in Boston, they would catch them. They would net catch them in South Boston. All the old guys would go out there, and they would catch them by nets and eat them. All the old Italians and Irish guys would do it. And guys from the old world that were still there, old men. Oh, she's hot, man. You know that's my type right there, right? That's what my wife is. My wife is Scandinavian. Yeah, no, she's of Dutch descent. I should have her on the show someday. Or I should show you a pic. You guys want to see a picture of her? Oh, she said, "Don't show a picture." She just yelled. She could hear me across the offices. She just yelled at me, "Don't you dare send a picture of me." She's hot, blonde, blue-eyed. She's got a nice ass. Really smart. They want $1.40 fucking for these calls for tomorrow? The fuck? 70 cents for 547? You gotta be shitting me. All right, I'm looking at 547 for 100 pack, but that's fucking $5,000, duder. I'm thinking I'm gonna wait here to the close. I'm getting torched. I've been losing thousands. Yesterday I pissed away thousands. Today I'm pissing away a couple thousand. Throw maybe $3,000 right now. I'm down, so I'm not taking to the cleaners yet, but I'm definitely spending money for exposure here. I'll put pictures up. I'll try to find a picture of her. I'll show you guys. I'm not gonna tell her, but I'll post a picture or something so you can see her. She's hot. She's super hot. Or to me, she's hot. And she's smart. And she's remained hot. Like she looks good in her older age. She ages well. She ages like fine wine. So grateful for that. I'd still love her. If she was ugly, if she didn't age like fine wine, I'd still stay with my wife. Just an added benefit. Or maybe she is ugly and maybe I just think she's hot. It could be me too. Like you get older and you're like, and she looks the same age as I met her in my eyes. That's true. She looks the same as she did to me when I first met her. Maybe it's some batshit old crazy old man or something. But I never traded her in, so I'm kind of a good guy. I don't think she can hear me right now. I think she was walking by. There's 70 cents now. $0.71. They're teasing me. Don't leave me behind, Cap. What time is it right now? 3:37. No exposure here. I have exposure on 0 dates. That's it. Now they're 70, 69. Just gonna sit on my hands. It's a little bit too much for me. I can wait. I gotta exude some patience here. Put spreads on Tesla. I don't know what your entry or date is, that kind of stuff. Whenever I hit 50% on a call spread or put spread, I like to take the money. That helps. because normally the back end is time based. You can always re-enter a second time. So I have a rule of thumb on debit spreads, debit call and put spreads. That if I get 100% in the trade right away, I'm good to go. I get out, of course. You can get assigned if you don't on a leg. So if I'm going to put or call spread, typically, if we're at an inflection point and we're at about 30 to 50, I should have said 50, but 30 to 50% of the trade, I'll monetize it. And because normally time would be associated, for the rest of the print if we're at a pivot. I don't know if that makes sense, but I would and re-enter again. Tesla. So Tesla here has some kind of a possible bounce. Tesla bottom right-hand side screen. Tesla has the ability to bounce here, but so you could have like futures get bought on it, right? Like futures should get bought. We know that, right? So maybe you come here and you can come back in to get underneath right here. But if we get bad data tomorrow, that's where Tesla's going. If we get bad data tomorrow, Tesla's going right straight down. So I guess it's more a matter of pick your poison here. This is Thursday the 25th, Friday maybe, Friday low over here. This looks green, dude. Look at it. Well, it wants to break above. There's nobody above us. They're now 73, 75 cents. I'm not in them. I'm in zeros, but that's it. Spoo's trying to squeeze right now to the upside. Look at how price is just on that yellow line, duders. Boy, somebody's just short the fuck out of CMG, huh? Nobody fucking cares. People are short the fuck on CMG. All strength being sold. Or it's panic sellers. Oh, somebody's got sell orders in. Somebody is de-risking CMG. I'm not doing it yet. I'm not buying them yet. Patience. They're pretty expensive, 70 cents. They're 67, 68 right now. A little pricey. I'm being cheap right now. What I'm looking for is like bam, bam, like that. If you want to know. I could get left behind here. And I more than likely need to make this trade big, so make up for the L's today. So just patience here. I'm either going to get some kind of a print on 0 dates here, or I enter down here. $343. We need to have vol signals on again. I need to get out there and start talking. I haven't been talking to anybody. Like, I'm not talking to Jedi right now. I'm not talking to Scott. I'm not talking to anybody. I don't have the fucking time. Like, between the family and the summertime and this shit, it's like nonstop. I literally, like, last night I was angry. And I was angry at, like, not getting, I was angry at losing on SPY. I was angry that I didn't take the 270 because I was greedy. I was angry at Elon Musk and the fucking guidance yesterday. And so I went outside to work. I was like, I'm going to go outside and do some work in my yard. I'm going to work off this anger, right? Get rid of some of that frustration, right? Get some physical labor in. So I go outside last night. I worked into the dark. Dark until like when it got, and we don't get dark early here. So I worked outside till it got dark, and then I got rained on with a thunderstorm, and then I kept working in the thunderstorm because I was still angry, and then I went and sat in my garage, with the garage door open, with the rain coming down, and I finally cooled off. So you just don't have any time. You get no time for anything. Then as soon as I was done with that, I came inside and started working on the reports, the briefs for today. And that, of course, takes two fucking hours to do that. I want you to know that we are in risk off here, too. So just be aware of that. I'm going to leave you with that. We are in risk off. So just be careful here. Please, please, please be careful. If we do squeeze up tomorrow, it's only a squeeze. We are in risk off. CTAs, no bueno. They're in sell mode. Sell, sell, sell. So just be careful. Yeah, those 547s are looking nice now. They're looking cheap. Dirt cheap. Dirt cheap. Going on fire sale. We got hot calls coming in. Cheap hot calls. Look, you want them at 70 cents? Nah. How about 50 cents? How about 47 cents? You want them there? Nah, I'm good. I'm good. I'm good. Watch out for a gap down tomorrow. Please, please, please watch out for a gap down tomorrow. You know, I gotta say, I'm gonna say it one last time, okay? I want to impress something upon you. It is okay to not put risk out there for a squeeze up tomorrow in case we gap down. You don't need to win every single trade. You just need to win most of them. Please. If they gap us the fuck down tomorrow, don't be like, I blew up my accounts. I don't want to hear that from anybody tomorrow, okay? I'd rather you say, fuck you, Cap. I missed the gap up. I could have made all this money. But you saved your account. Please. I'm begging you. Careful of a gap down, please. Like we start squeezing up in the overnight, wake up at 4 a.m., they start selling it down. You can play futures, I guess, but be really careful of fucking options.
So we're 1 minute away now from the market on close imbalance.
I got a bunch of stuff for you to read tonight, too. So I got a bunch of stuff for you guys to go through tonight, some stuff for you to shuffle through and sift through. I got some cool stuff for your market brief tonight. Are we down 2% still or not? Yeah. 2.15%. Almost there. Get that official close. Now down
To the market on close
0.09.
imbalance, the S&P 500, 560 million to the buy side, and Nasdaq 100, 200 million to buy, Dow 30 to 75 million to the buy side, Mag 7 stocks 50 million to the buy side.
Matter of fact, where is that hourly trigger? 549. That's the right strike. 47. I think that's the right strike. $5.46 are at 60 cents, but if they come to 50 cents, I'll jump up a strike. Sure, I'm on the right fucking date here. I'm going to clear the trade before taking it. Well, 546s are trading 61, but I want them to be 10 or 10 lower, so 50 cents or near 50. I don't know if we get it here in the close. See if we can get one more move lower. They're at 58 right now. I probably need 200 of these to clear out the last 2 days, aren't I? To be green this week, I would need 200 of these fucking things. They're at 57 right now. Looking for like 50, 51, somewhere in there if possible. VIX almost at target, not quite, but almost. VIX 9-day approaching 2030. Almost there. They're at 50, 52 right now. Oh, you fucking. I'm trying to get in right now. I might miss this. This might be it right here. They're not letting me in. Hold on. I'm getting left behind here. Four minutes left. They're not letting me in. I put an order in late at 50. I did 50 cents, then 47 cents, and then switched back to 50 cents. And it just jumped 52, 54. Cock-sucking motherfuckers, dude. I just raised to 54, no fill. I'm not chasing this shit, dude. I ain't chasing it. Fuck you. I'm not chasing it. Nope. 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 I'm not even buying. No buy for me. That's the fourth time I've changed my price. I fucking refuse. Get fucked. I don't care. Leave me behind. I ain't chasing it. Make all the money you want. I ain't playing the fucking chase price game with fucking bullshit fucking order fills on motherfucking Tasty. Fuck you, Tasty. No, I'm not doing order chasing. I refuse to do it with Tasty. Every time they fucking do this to me, I'll just there's so many more trades out there I can take. I'm not gonna do it. You can eat a bag of dicks. 3:59. We're going to go to CMG really quick. I don't know if they report right after the bell. We'll watch it for the first few minutes. I'm going to see if I can catch a buy in here after the bell, if maybe some of the demand goes away. I don't think that it does, but nope. They're at 65, 67 right now. They had a low of 47 cents in those calls in here.
Continues at 4:10 p.m. Eastern Time, with IBM reporting Q2 2024 earnings. Estimated EPS is 57 cents, with the revenue estimate of $29.97 billion.
And we'll look at IBM too. I'll do a split screen for you. CMG looks good, at least on a 1 minute basis. Looks like it wants to rip. I think I've got them going 54, just below $55, 6.5% up and then down. IBM with a squeeze higher, trading 185. IBM getting blooded right now, trading 181.95. Initial reaction negative on IBM. CMG trading higher right now. IBM trading 182. 52.16 right now in CMG. We'll switch down the for both of those screeners. Here's CMG. IBM daily trigger at 178, 173. CMG trading now 52.16 coming into their half-hour trigger. What did I say it was? What did I say? What is the expectation up there? 55. The expectation's higher than 55, but I've got it selling on 55, or just below 55. 54 and change, I've got it selling. I've got nothing on for tomorrow. My calls burned. My zero day, all my zero dates about today burned, and I didn't get the price that I wanted on calls. I would have taken the 47 or 50 cent calls. I didn't put the order in at the right price. Well, I was going to put 50 cents in, and then I didn't. Because I watched it come down to like 50. I was going 59, 56, 57, and I go, no, maybe I'll go below 50. So I was like, I'm not going to put the price in. So then it blasted down to like 47, 48. And then by the time I put in 47, it jumped to 50. So then I switched to 50, and it went 52, 56. And I said, you know what I'm not doing? I'm not going to do this shit with you all day long with my greed. CMG 52.27 right now. Still a little bit of a rejection here on the hourly trigger. Looks like 5:10 p.m. We're going to get the reports on some of these tickers here. Spoos looks good in the close, at least. There's a pretty big buy button there. 4 million buy button on a 1 minute basis. Let's check the 15 minute. On a 15-minute basis, not many. Oof. That was a really poor buying operation in the close. Not many buyers down there in the bell on SPOOs. QQQ. Oh, what am I doing here? QQQ. Let's check Q's close here. See if they were buying tech. 2.6 million on a 15-minute bar. There's not a lot of exposure, a lot of fear out there in the market. Yeah, I'm done. I'm not doing this. I'm not chasing 70 either. Not fucking doing it. Not something that was just 47 cents a few minutes ago. Fuck you, no. All right. I'll see you guys tomorrow at 9:30 in the morning. I'm a little pissy right now because I just missed out on 47 to 68. I don't want to deal with it. I'll see you guys tomorrow in the morning. You'll have a market brief from me this evening. If you are looking for a squeeze tomorrow, the target on SPY should be about 545. 545 expectation for a squeeze. If we can catch the squeeze before any kind of rampant selling, right up here, 545. So if you're looking for a move to the upside, right about there. 545C is a good trade. Those are 92 cents right now. I was looking for 546, but we got the next leg down here. So that one seems like it's out of reach. So 545 for a squeeze into tomorrow, unless we get a bad report or selling at 4 a.m. for a leg down. I want to express to you that there is real danger in the market right now of trend selling and overnight gap downs right now. Just a word of warning to you. Not that it's going to happen, but I just want you to know that it's possible. Between now and tomorrow with the regime that we're in. Just be conscious of it, please. I'll see you all tomorrow, 9:30.